Right. Good day to everyone. Good morning, good afternoon, good evening, whatever time you're watching. So, CMA Inter Auditing, directly coming to the point, we'll be talking about CMA Inter Auditing Review. This is your 50 marks paper. All right. Very simple paper. Yes, it's a simple paper, but you need to understand where to draw a line and don't get too confused or too, don't panic basically. So basically in this particular subject, we will be having three basic chapters. That's chapter number 6 in the paper. That's basic concepts of auditing. Then we have Companies Act provisions, and then we have different types of undertakings. Okay, now under different types of undertakings and all, we'll be talking about hospitals and schools and other things, right? So let's talk about the basic concepts of auditing first, right? Quickly, we'll be brushing up through your concepts here, right? So it's not sitting and giving you a training of how to remember everything and all. We'll be doing conceptually, and we'll be highlighting some keywords for you. Those things, if it's there, build your answer based on that. Okay, so in basic concepts of auditing, what are the things that we are going to cover? First unit talks about nature, scope, objective and significance of auditing. Second unit talks about brief introduction to auditing. Third unit talks about engagement, program, documentation, evidence and notebook. Fourth, risk, assessment of risk, internal check, internal control and risk based internal control. Fifth one, sampling techniques and analytical procedures. Sixth one, application of technology. So 6 units are there in chapter number 1. And in case of your next chapter, that is chapter number 7, in that we have unit 1 is about eligibility, qualification, disqualification, etc. Then we have cost audit, secretarial audit, audit of various items of financial statements, that is balance sheet items and P&L items. Then you have audit report, report versus certificate, CARO, etc. Report on internal financial control and ICOFR. Seventh one is NFRA. Then we have education institution, healthcare, organizations, bank, cooperative society, self-government, clear, or local self-government. Then apart from that, we have additional things also, like how to audit dividend, how to audit a certain financial statement item of companies. Okay, so these are the things which we have right now in your syllabus called CMA Inter Auditing. Okay, right, sir. Let's start with what we'll be doing is we'll be talking about basics first. Okay, once we talk about the basics, then we'll talk about the standards. All right, and then we'll slowly build up the concepts. We can keep shifting between that chapter and different entities chapter and all. So just be with me. Okay, just be with me till the end of the video, right? So first and foremost, nature, scope, objective and significance of auditing. So for MCQ purpose, because you have around 10 questions MCQ, which is 2 marks each, which can give you around 20 marks, clear, and 30 marks you can expect in the descriptive part of it, right? So MCQ, please be really careful there. Conceptually, if you are good, MCQs can be solved like this. Okay, the term audit has been derived from the Latin word called audire. First MCQ you can expect. Okay, the term audit has been derived from audire. Audire means what? To hear, not to listen, to hear, right? The one who does that, the one who hears, is what we call as auditor. Therefore, in narrow sense, the scope of audit is limited. Scope is limited to only authenticating the accounting records and thereby to assure the accuracy and reliability of reports. So, what is audit? From the Latin term audire, means to hear. The one who does this called auditor. The scope is limited only to authenticating, important, again here MCQ, authenticating the accounting records and thereby to assure accuracy, reliability and reports. Okay. According to SA 200, we have standards in audit. Clear, standards is nothing but if nothing is there, obviously we'll be thinking how we are supposed to work. We'll be working on our own methodology. So standards board has told, no boss, you can't work in your own methodology. We will give you standards. Based on that standards, you build your particular work, because quality should be maintained. So standards will promote uniform quality. Everyone has to follow that standard. So according to SA 200, basic principles governing an audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such examination is conducted with the view of expressing an opinion. Now in this, we need to understand one more thing here. It's an independent examination, meaning what? We are not asking someone, we are not doing our work thinking that, okay, only we will listen to management, whatever management says, we will be doing it. If management asks us not to examine certain things, we will not examine. That is called dependent audit. Independent audit means what? We will do what we feel like in the circumstances. So we will not be getting influenced by people. We will not be talking to management, saying we will definitely talk to management with respect to information and other things, but we will not be totally dependent on management for everything. Okay, wherever we require, we'll have to take a call and we need to perform our task properly. Okay, so it's an independent examination of financial information. Generally they say financial information, but audit can be for even non-financial as well. But financial statement audit, when we talk about, it's only for financial information of any entity. It could be company, partnership, proprietor, trust, society, section 8 company, OPC, small company, anyone. Audit can be for anyone, whether profit oriented or not, whether profit is there, whether profit is not there, we don't really care. Okay, we will still do the audit irrespective of its size or legal form, when such examination is conducted with the view of expressing an opinion thereon. Understood? So what do you mean by audit, sir? Independent examination, financial information, any entity, irrespective of profit or profit or not, irrespective of size or legal form, with the view to express an opinion. Our ultimate goal is to express an opinion. Therefore, in the broader perspective, it's a holistic appraisal of all the relevant aspects. It could be, see here they have told financial information, and here they're telling financial or otherwise. Why? Broader perspective. So this particular definition is from financial statement audit perspective. Clear? Whereas this is broader perspective. Clear? Now so in this broader perspective, it's a holistic appraisal of all the relevant aspects, whether it is financial or not, of an inquiry sought after a stated purpose. Meaning there's a purpose for audit. Randomly no one will do the audit. There is 100% there's a purpose for audit. So we are supposed to understand that we are doing audit for a stated purpose. It could be expressing an opinion, checking the efficiency, getting to know the weaknesses. Clear? Essential features. What are the features, sir? Evaluation, verification of what? Relevance, reliability and adequacy of evidence. So basically we are evaluating the evidence, but not directly. We are evaluating the relevance, evaluating the reliability, evaluating the adequacy. Then verifying the relevance, verifying the reliability, verifying the adequacy of audit evidence in support of verifiable information such as vouchers, documents, explanations, etc. So basically audit is evaluating, meaning checking, understanding and verifying whether is it relevant, the information is reliable and the information is adequate. Clear? Okay. Audit is analytical, critical and investigative review of systems of accounting and internal controls. Clear? It's analytical, it's critical, it's and investigative review of systems of accounting and internal control. Analytical means what? We evaluate a lot, we think a lot, we calculate a lot. That's called analytical. Critical means what? Every small details will not leave, we'll check that. Clear? Investigative. Investigative means what? Investigator getting into the details of it. The information may be financial or non-financial, absolutely no problem for us. Even financial also we check, non-financial also we will check. There should be standards or criteria for evaluation of the information in a systematic and scientific manner. Meaning what? There should be some standards. To evaluate something, there should be standards. The auditor should be competent and independent, qualified and having certificate of practice. So whoever does the audit, he should be competent enough, he should be independent enough and he should be qualified, and also he should have proper certificate of valid certificate of practice is what we say. It ensures reliability of information and authenticity. It ensures, meaning it makes sure that information and authenticity, information ka reliability and information ka authenticity, assertions ka authenticity. Now, what do you mean by assertions? Assertions means what? Assertions means, now imagine a company says that they have a building of 10 crore. Now, we need to see whether this 10 crore is actually there, whether this building is actually there. Right? So whatever they say is what we call as assertion. Whatever we say or whatever they say, we call it assertions. So assertions made in the financial statement relating to enterprises. whether profit oriented or not, and whether it is required by law or not, to enable to form an opinion. So basically what audit features is, it ensures reliability of information and authenticity of assertions. Let me put it this way: reliability of information, authenticity of assertions. Yeah, okay. Nature defined auditing, ICA defined as what? Independent examination of data for a stated purpose. According to Arens, Elder and Beasley, it is accumulation, that is collection, and evaluation, that is checking, of evidence about information to determine and report on the degree of correspondence between information and established criteria. Now, meaning what? Basically, they are telling it's accumulation, that is collection, evaluating the evidence. So, critical evaluation of evidence. But evidence about what? About information. Why? To determine and report on what? Degree of connection between information and criteria. How closely the criteria and the information is matching. Clear? So according to AEB, who is that? Arens, Elder and Beasley, it's accumulation and evaluation of what? Evidence. Evidence about what? Information. Why? To determine and report on what? Degree of correspondence. Correspondence is nothing but connection. Connection between what? Information and criteria. Now, if information criteria says this amount should be 1 lakh, if information is recorded as 10,000, then the degree is very less. It's not matching, right? So basically, to check matching is what we need to understand. Okay, auditing should be done by a competent independent person. Random person should not be doing it. Auditing should be done by a competent independent person. Therefore, this definition emphasizes the following: the information under audit need not necessarily be accounting information, but it must be in a verifiable form. So it can be financial, non-financial, no problem, but it must be in a verifiable form. There should be standards or criteria for evaluation of the information. Otherwise, if there is no standards or criteria, how do we evaluate the information? What is the basis? Where do we compare? Comparison won't be happening. You should have independent mental attitude, meaning what? You should not be mental. Independent mental attitude means you should have a behavior where you're not depending upon someone. You will do what you're supposed to do. You will give your opinion irrespective of who is there in front of you, who is there against you. You will still give the opinion what you want. Your decision will not be based on someone. Your decision will be based on your thinking and the information. Basically, a judge in the court. A judge should not be biased. Similarly, here you should not be biased. There's difference between accounting and auditing. What is accounting? Collection, classification, summarization of data. It is analytical and critical examination of data. So this is examination. This is recording. It is post-mortem examination. It measures business events in monetary terms. This reviews financial records, and the measurement is through opinion. Primary responsibilities of management. Here auditor is responsible for audit. Accountant is not expected to review or report on the financial statement, but here required to submit a report with his opinion. He works for the management. You work as an independent person. No liability is there. Here you are supposed to pay, or you will be facing some consequences if you don't do it properly. Maintenance may not be mandatory for small individuals, or it could be exempt for various individuals. Like for example, smaller 44AB tax audit here may not be applicable. Right. Then auditing is done as per the Prince Ind AS. Accounting is done as per SA. Auditing is done as per SA. Now, this could be an important question for you. Difference between audit and investigation. Audit is an independent systematic examination of evidence, right? Here, examination of accounts and records with a view to ascertain any fact for some special purpose. So here, we check whether auditing is done as per generally accepted auditing practices, so to ascertain the true and fair view, whereas investigation is to establish a fact. Here 100% surety must be there. 100% surety must be there. Now, scope. Audit has a wide scope here, but Audit has a wide scope. Scope of investigation on the other hand is limited as regards to period or areas to be covered. Investigation is not everywhere, that particular specific area, whereas audit we can cover more areas. The scope is determined by the relevant law in case of private audit by a client. Okay, generally law, otherwise client will tell you where all you should work. In audit, accounts and records are verified as to their truth and fairness. Investigation is for special purpose. Procedure as per generally accepted audit principles. Here, extended auditing procedure. Evidence. An auditor will evaluate the accounting records predominantly based on persuasive evidence, whereas here investigator can draw his conclusion only on the basis of substantial or conclusive. Here I don't have to have conclusive, here convincing. Here convincing, whereas here conclusive. Approach. He is skeptical and not suspicious, whereas investigator starts with suspicious and collects evidence to confirm or dispel that suspicion. So in audit we never start with doubt, whereas in case of investigation we start with that. Clear? Understood. Next, periodicity. Auditing is a routine exercise conducted, whereas investigation may spread over a period of longer, more than 1 year, because auditing is a periodic. It could be quarterly, it could be half yearly, it could be yearly. Clear? Now, what are my objectives? As per SA 200, what are my objectives? Evaluate reliability and sufficiency of information. Clear? Undertake appropriate procedures for this purpose. So, first check what is the information given to you. So, always remember this. In case of audit, no. In case of audit, client will give you the data. From this, you pick up the information. Okay. From this, you perform procedures, you get evidence, you evaluate this evidence, you reach conclusion, you evaluate this conclusion, you get opinion. This opinion we give in the form of report. Clear? This you have to understand. This you have to understand. Data, information, procedure, evidence, conclusion, opinion, report. Okay, any topic you take, any topic, any concept, it will be there under this cycle. Okay, so what we should do? Evaluate the reliability and sufficiency first of what information contained where accounting records. Then put up the right procedure for this purpose to verify. So first, whatever information you get, you check it out and then put up the procedures. Appropriate procedure may include either compliance procedures or substantive procedures. Compliance means what? Studying the systems. Substantive, testing the systems, testing properly, getting into the details. Here, getting into the details. Then, determine whether relevant information is properly disclosed in the FS as per applicable accounting principle and statutory requirements. So, basically what? Basically, check disclosure of info as per accounting principles. Next, your work shall involve exercise of judgment principally concerned with the items that individually or as a group are material. Material means important. Material means important or significant, which can affect. Significant, which can affect. Here, so what are the objectivity? Number one, assess reliability and sufficiency of what? Information. Okay. And then put up the procedures. Then, whether check disclosure of the information as per accounting principle. You should use judgment because there is something called as importance level. What is important for you may not be important for me. What is important for me may not be important for you. Okay. Next, basic principles governing the audit. Whenever you are having ICA, obviously says you should have a basic principle that govern the responsibilities. What is that? Integrity, objectivity, and independence. Confidentiality, competence, work performed by others, and documentation, planning, evidence, and accounting system, and ICS, and conclusion and reporting. This is important question for you. Important question for you. Okay. Basic principles governing an audit, right? Okay, so what is this integrity, objectivity, and independence means? Integrity means straightforwardness, honest, sincere, and free from any influence. Free from any influence is what we call as objectivity, where you should not have bias. Integrity is nothing but straightforwardness and honesty. Okay. He should maintain impartially and be free of any interest, and this is your independence. Okay, you should have integrity, objectivity, as well as independence. Then you should have confidentiality, what we don't have these days, secrets. You should keep it with yourself. Clear? You should not disclose the client's information to anybody without client's permission or under any regulatory environment. So unless and until there is requirement by law, or unless and until the client allows you, you should not share with anyone else. Skills and competence. Audit should be performed and report should be prepared. Whoever it is, you should have adequate training, you should have enough experience, and you should have enough competency. Competency means knowledge and skill. So the audit should be performed and report should be prepared by someone who is adequately trained, experienced, and competent person. Work performed by others. Whenever somebody's work you're using, blindly you should not use. Carefully supervise the work. Okay, review their work. Clear? Why? Because at the end of the day, you are responsible for it. You are responsible for your work. Although I understand you are giving it to your assistants and other people, but again, you need to check whether your assistants have performed properly or not. Then, documentation. Proper working papers should be maintained by the auditor. Working paper which is maintained is to demonstrate that audit is in adherence to the basic principle. Adherence means what? Compliance. Compliance. Yep. Then you should have planning. These are all what? Basic principles. Okay. Remember, basic things to do an audit. What are the basic things that is required? Essentials of audit. Right. So, planning should be that you should obtain knowledge about client's business to determine nature, timing, and extent of the procedures. Meaning what? Before deciding how am I supposed to work, what procedures I should put. See, for example, before knowing how to study, first understand the syllabus, right? Same thing here, first understand the client's business before you put up any procedure. Yeah. Then you should have something called as audit evidence. You should obtain sufficient appropriate audit evidence through performing the procedure. So basically, you should obtain evidence through performing procedures. Of course, remember the cycle. Yes, before getting evidence, you have to perform the procedures. Then, before planning, you should have an understanding of the systems, accounting systems, and related internal controls. This will help in determining the nature, timing, and extent of other audit procedures. Yeah, so in case, if they ask you a question as to what are the basic elements of auditing, you have to write. Finally, we have to conclude our audit with reporting. On the basis of conclusions drawn from the audit evidence obtained, the auditor should give unqualified report or qualified report or adverse report or disclaimer report. So basically what you should give, see, there are two categories of opinion. One is called modified opinion, one is called unmodified opinion. One is called what? Modified opinion, one is called unmodified opinion. Now, when we say unmodified opinion, we are telling them that the financial statements, whatever is prepared, is very good, super, top notch. Clear? Right? Now, if we say modified opinion, that means we are telling that, see sir, financial statements has an issue. Now, whether that issue is small or big, if the issue is small, we say it is good but not best. If the issue is bad, we say it is bad only. But if we are not getting any evidence to tell whether it is good or not, we have nothing to tell, no basis at all, then we give something called as disclaimer of opinion. Okay. These are 9 points that you have to remember when it comes to conclusions and reporting. Now, as per SA 200, what is my objective of auditing? One is to obtain reasonable assurance whether financial statements are free from material misstatement, whether due to fraud or error, thereby expressing an opinion. Okay. Not only that, we should also say whether financial statements are prepared as per applicable financial reporting framework. Yeah. Yes, these things I need to mention. Just a minute. Okay. So to obtain reasonable assurance with respect to financial statements, whether they are free from material misstatements, whether they are prepared as per the law or not, whether meaning what, are you following the law or are you doing on your own? Then report on the financial statements. So basically these are the two main objectives. Number one, obtain raw. Number two, give report. Basically remember, objectives of audit is rare. Clear? Objectives of audit is rare. Understood? Clear? Okay, sir. Two things. In the process of adhering to above objectives, an audit also attains certain social objectives apart from this. So this is actually, what? Advantages. This is actually what? Advantages. So what advantages if we get? We will have advantages. Number one, to protect the shareholders' interest. Clear? To protect what? Shareholders' interest. You remove this. Then, to stop evasion of taxes. Here, evasion means what? See, tax planning is different, tax evasion is different. Tax evasion is nothing but you escaping the tax illegally. To safeguard against capital erosion, that's your capital. Business ka capital, fundamental requirement to run a business is money, right? Your capital eroded. Eroded means what? Lost, diminution, gradual diminution. Clear? Ensure fair return on investors. So when if investors want to understand what is happening, obviously, because of audit, they'll be able to judge the company or the investment better. To ensure reasonable price to customers. When we do audit of certain things, we will see whether the price charge is reasonable or not, so that customer is also not misled. Fair compensation to workers. Obviously, any labor union problems are there, worker problems are there, salary is not paid properly. When we do audit, obviously we'll get to know the real picture of the organization so that they can understand that. Complying with the policies regarding corporate social responsibilities. Obviously, when we do CSR audit, we'll understand what is the profit made. Have you complied with 2% CSR requirement or not? If yes, there all you have spent, is it spent as per eligible criteria only or not? Okay. These are the social objectives that they have to attain. Okay. So protection, evasion, safeguard, fair return, reasonable price, fair compensation and compliance. PESFRFC. Remember, let's try and make a mnemonic out of it. Okay. Let's say simple CS perf. CSS perf. PERFF. Yes, that's it. CSS perf. Clear? C for what? Compliance. S for what? Safeguard. P, protection. E, evasion. R, reasonable. Fair returns and fair compensation. CSS perf. Okay. That's the social objectives. All right. From legal point of view, obviously advertisements, filing income tax returns, borrowing money from external sources, settlement of insurance claims, sales tax payments against bankruptcy. Everywhere audited accounts only is a very big advantage. From internal control point of view, we can discover the errors and frauds, moral check on employees and giving advice to the management. Uniformity in accounts, meaning what? It's not that every year we'll be having different way of accounting. Every year we'll be having the same accounting. In the year where accounting policy changes, we can change the accounting policy. But more often than not, every year we'll have the same accounting way. Then, from external affairs point of view, settlement of accounts in case of partnership, valuation of assets and goodwill, future trend of the business also we can check it out. Clear? Yes. Okay, sir. In partnership, you would have seen realization account, and then in goodwill, we value the goodwill, right? So for all those things, profits, what you're taking, it has to be audited records. Clear? Now, advantages. Now, what do you mean by advantages of audit, sir? Audit is a tool which different stakeholders can use to protect their interest. Stakeholders can protect their interest. Clear? It is not only corrective measure but a deterrent effect. It serves as a moral check. Basically, it acts like a CC camera. Whatever you're doing, it can be checked. Okay. So they will not commit defalcation and embezzlement. Defalcation means mistakes. Embezzlement means stealing, using for your own purpose, all those things. Employees remain alert and vigilant as regards updating of books and records. Audited accounts are more reliable by different people. See, government believes audited FS is more reliable than unaudited FS, right? For example, tax audit report is much better for income tax people. Okay, it facilitates detection of wastages and losses and helps in instituting corrective actions. So, therefore, detection of wastages and losses and instituting corrective actions. Audited accounts are taken care to be more reliable and useful during corporate restructuring. In corporate accounting, you would be seeing internal reconstruction, amalgamation, and all those things. Our audited FS only will be much better. Banks, FI, and government require audited accounts before granting any financial assistance. So, bank, government, everyone wants audited financial statements. It's more helpful in settlement of accounts between partners. Any dispute is there. This also can be asked as a question. Okay. See, for you descriptive, there is no 2 marks, 3 marks and all. Directly 7 marks. 7 marks, straight questions. No case based also. All direct questions. So wherever I'm giving hidden question, it's like a direct question for you. Okay. Inherent limitations of audit. Inherent limitation means what? See, it's like your birth personality. You can't do anything about it. For example, there are people who say, always they'll say a lie. Now you can't do anything about it. No matter how much you advise them, you can't do anything about it. No matter how much you take care, they'll always tell you the lies. Similarly here, audit, no matter how much you plan, how much you perform, whatever you do, you cannot say that, this is a perfect audit, 100% assurance I can give you. Absolutely not. There will be uncertainty. Clear? Yes. An audit does not guarantee that all material misstatements that will be detected because of the following inherent limitations. So we can't detect, we cannot detect all the mistakes. Small mistakes will be big mistakes we cannot detect, sir, because of certain limitation. For example, if a company which was incorporated in the year 1990, the sales of that company in 1990 will be different than the sale of that company in 2025. Yes, now the sale would have been increased, whereas in 1990 the sale would have not been increased. Now the sale increased. Did the time increase? 1990 also 24 hours only. Now also 24 hours only. So in 24 hours, that time we could do 100% audit. Now we can't do 100% audit. It's like your syllabus. In 10th, 11th, 12th and all, this 24 hours were good enough for you to cover 100% portion. Now in CMA Inter, can you cover in 24 hours 100% portions? No. That's why you're watching marathons, right? Okay, sir. Nature of audit, sir. Test nature of audit, meaning what? We do sampling. 100% checking not possible. Therefore, like how you do selective studies, we do sampling. The evidence available to the auditor is persuasive rather than conclusive. Persuasive means what? Convincing rather than conclusive. Conclusive. Convincing rather than conclusive. Conclusive, 100% sure. Convincing is, okay, fine, I got convinced. Reasonable. Okay. Inherent limitations of internal control. Meaning what? See, who puts control? Management only. Who can override that control? Who can breach that control? The one who put only. Your phone lock, you only can unlock, right? So it's not that no one can do it. You can do it. So the one who put is the one who can unlock it. Then we need to have professional skepticism. Now, what do I mean by professional skepticism? Professional skepticism means it's an approach that would ensure if something is wrong, it is detected. It's a behavior. It's a behavior helping in identifying and evaluating matters that increase ROMM, circumstances that make you suspect misstatement, questioning the reliability of responses or representation. So basically, it's nothing but I'll tell you ABC. Professional skepticism is ABC, a questioning mind, being alert to the conditions, and critical assessment of audit evidence. So there are 3 things: ABC, questioning mind, being alert, critical assessment. Now in this case, same thing they have told, matters that increase the ROMM. Therefore, now you'll start questioning more. Any circumstances that make you suspect material misstatement, therefore again you'll start questioning more. Question of reliability of management's representation, whether whatever management writes and give, whatever information they are giving, is that information for me? We need to check whether that information is true or not, whether I can trust that or not. Clear? Now, you are entitled to accept the records and documents as genuine unless there is some evidence in the context. So basically, we are not we are not expert in checking documents. Documents authenticity. Documents authenticity. So we are not there to check documents authenticity, but we still check. Yeah. Now, materiality is one basic fundamental concepts in process of auditing as well as accounting. You have to constantly and continuously judge whether transaction is material or not. It is used by him in his planning. It means important cost-wise, profit-wise, everything which influences economic decisions of the user. So basically, it means anything that influences economic decisions of the user. What is material in one circumstance may not be material in another circumstance. Therefore, changes need to be done accordingly. So basically, what are we trying to say? Three things. We have limitations. Number one, it does not guarantee because of certain things, right? That is sampling, evidence is not conclusive, reasonable assurance we get, and internal control. Professional skepticism, where we are not expert in understanding the genuineness of the documents. Clear? So when we cannot understand the genuineness of the document, therefore we are not an expert in that. Correct? So whatever is given to us will be taking care of that. Then we have materiality. Materiality means what is that which is important. Now for different users, different things are important. Clear? So what we have to constantly and continuously judge whether one transaction is important or not, depending upon the circumstance, audit, etc. Organizational structure wise classification, if you see, we have stat audit. Clear? Stat audit comes under Companies Act. Okay, these are mandatory. MCQ. Okay. In case of government audit, we have CAG audit. Okay. In case of government body, CAG will take care. In case of insurance company or nationalized bank, IRDA or RBI will take care. Advantages. What advantages we have, sir? Shareholders for their economic decisions for exercising voting rights, timely tax assessments, determining purchase or sale consideration in case of ongoing concern when you are buying or selling the company. Partners' accounts can be settled, right? Before the, when you give capital or goodwill, accounts can be settled. Before the court in case of settlement of disputes with employees, creditors or debtors. So in the court, it will be much useful. Now forensic account or forensic auditing is what we use. Actual value of business or shares, valuation of business or valuation of shares. Financial assistance from banks. In case of NPO, getting grants and availing tax exemptions. In case of ICS, internal control system evaluation, it will help in strengthening it by removing the weakness and checking the efficacy. Efficacy is nothing but efficiency. This can be asked as a question, hidden question. This can be asked as a question. Clear? Now, next, continuation. Integrity of the management we can check. For other users like creditors, investors and government, it ensures that whatever financial statement they have given, it is not overstated nor understated nor misrepresented. Proper distribution of profits as dividend, then wages, all legal requirements are fulfilled. In case of insurance claims or other recoveries from government bodies, it will be much helpful. Clear? Right? So 15 points are there. Easy question you can ask. They can ask you for 7 marks. Be a little careful here. Clear? Okay, sir. Next. Non-statutory audit is voluntary. If you want, you can do it. It is not mandatory. Okay. Advantages for sole proprietor. What is it? Again, ICS can be strengthened by removing weakness. Reliability, authenticity of financial. General points is you write. Clear? In case of, it helps in timely finalization because due dates and all will be there. So audit will help you in identifying the weakness and finishing the job quickly. Moral check on employees. Obtaining funds easily. Settling trade dispute, labor dispute, etc. Right? This is important. Difference between stat and non-stat. Stat, compulsory, voluntary. Scope, relevant statute here, employer or partners. Qualification, academic or professional qualification. Here, for voluntary, need not. Basically, for internal audit and all, need not. Powers and rights. Law will tell me here, it's an agreement. So basically, this is between proprietor, okay? For proprietor and company. Independence. Auditor has independence in status, here does not enjoy such independence. Liability. He is liable for negligence. He is liable for negligence only under common law. Here, common law as well as the relevant State Companies Act, income tax, etc. Publication of report, it is for the public. It is for only for employers or partners. So basically, you can consider this as internal audit. Not technically, but yes, there are internal audit flavor in this particular concept. Clear? Yes. Okay. Next. Objective-wise classification of audit. In this, how much we have? First one, let's talk about internal audit. Internal audit, first one. First one is what? Internal audit. Now, what does they say? It is nothing but independent management function. It is not independent appraisal function. Okay, independent management function. Okay, which involves continuous and critical appraisal of the functioning of the entity with the view to suggest improvements. So basically, it is continuous and critical. All the time, 365 days, it is audit. Critical. Every small thing will be checked. Why? To suggest improvements and to add value and strengthen the governance mechanism. To increase and improve the company's way of performance, how department should function, every small thing. For example, how much risk you take, internal control system, whether it is there or not, right? Employees, how do we monitor, right? Let's say, for example, our raw material, product manufacturing, every small thing, what type of products we get, what type of RM we get, what grade, what is the pricing, everything internal audit can solve. Okay, including their risk management and ICS, therefore provides assurance that there is transparency in reporting as a part of good governance. Clear? This is called internal audit, where we talk only about two things. Remember, continuous and critical appraisal of functioning of the entity to operate. Clear? Independent financial audit is nothing but what we just saw, conducted by a qualified auditor at the request of the client, right? Ultimately, what? To comment on truthfulness and fairness of financial statements. So these are the things you have to see in MCQ. Clear? These are the things you have to see in MCQ. Here also, this one. Okay, MCQ. Periodical or final audit. Basically, periodic means what? Conducted at the end of the accounting year after the books have been closed. Does not interrupt the regular functioning, good for us, or operations, etc. It is done in one session due to continuity. Ensures completion of work in one session. So it's not that break we'll be doing. Once only we'll finish it off. Okay. Then the possibility of tampering with the books is considerably reduced as work starts only after the books are closed. So they do not know what we are going to check. Advantages: cost-effective, continued focus, planned approach to work, non-interference of clients' accounting work. So every now and then they need not come and irritate us. Major disadvantages: all the errors and fraud are found at the end, which makes it difficult to fix responsibility for defalcations. Okay. Delays presentation of AFS, and to prevent the delay, using sampling is what we have to do. Interim audit conducted between two annual audits, meaning what? Quarterly audit. Example, quarterly audit. Quarterly audit. It is carried out by professionals but has no legal status. The figures may be altered subsequently. It is useful for ascertainment of interim profits and loss, declaration of interim dividend, change in the structure of partnership firm, goodwill net worth, suspected fraud, obtaining loan. So any interim quarterly loan you want, clear? Loan you will never take after at the end of the year. No, in between the year also we might require. So till then, whatever has been done has to be audited. Okay. Next, continuous audit, meaning what? Method used to perform what? Control and risk evaluation, automatic, on a more frequent basis. It changes the model from periodic review to ongoing audit of 100% transaction, meaning what? Every now and then we do audit. Not, it's not this one. It is not interim. Interim means specifically we have something. Here it is not interim. Okay. Next. It becomes an integral part of modern at many levels. Technology is a key to enable such an approach. Continuous may be defined. Now, here is where you have to observe. Examination and verification of firms' financial transaction and supporting documents continuously throughout the year at regular or irregular intervals. There is no fixed interval. Interim audit, we know quarterly we do. Here it is not that. Here haphazard. We can do 15 days audit also. We can do 45 days audit also. No problem here. Clear? Basic features of continuous audit throughout the year. Regular or irregular, Focus is on 100% of the transactions. Technology is important. Provides advance notice about errors. Surprise visits. Hidden question. Okay. Next. Necessary of continuous audit. It is necessary where? When ICS is not good, when internal control systems are inadequate, transactions run in a large number of nature. See, for example, if your systems are not working fine, what is the point of you working without doing the audit? So do the audit and get to know whether the system is fine or not. Number two, transactions run in large number. Supermarket, banks, financial institutions, large number of transactions will be there. So obviously continuous audit will help them. That's why we have something called as concurrent audit. Okay. Every month it happens. Management is interested in getting statements of account audited for better management of resources. Voluntary. This is voluntary. So they want to improve. Okay. For that purpose. The advantages of continuous audit is what's up? Early location of errors, quick rectification, guidance, finalization, moral check, and improves stat auditor's focus. See, there are two audits, concurrent in bank, concurrent and stat audit. If this fellow does everyday audit, automatically stat auditor's focus, stat auditor's work becomes much more easier. Clear? So errors and frauds, quick rectification at the source only we can rectify, guidance, finalization, moral check, and stat audit will be much better. Demerits. Records and amount which have already been checked may be altered after audit is over. Possibly April month audit we do it in May, June they can change. Clear? Frequent visits may cause inconvenience at times, inconvenient at work. Client may suffer due to clash of duties between staff and auditors. So clash of work can be there. More expensive because obviously you have to devote more time, therefore more fees. Work becomes too mechanical and repetitive. You're not thinking. Critical thinking is not there. Clear? So this is the difference directly. Now, as per clause 33 of SEBI, important here. Okay. Company shall submit its quarterly, year-to-date and annual financial result to stock exchange. They have an option to submit audited or unaudited quarterly, year-to-date financial result within 45 days from the end of each quarter. Okay, so within 45 days of end of each quarter, you have to submit your quarterly financial statements. Just for other than the last quarter. So Q1, Q2, Q3, after the end of respective quarter, within 45 minutes, you're supposed to submit the report, okay, to SEBI. Under most of the circumstances, they find it little time to conduct the audit. Through the documentation, so much of transaction will be there. Therefore, what they do is they have something called as limited review, because not every time we'll have the time. Therefore, we'll do, rather than full audit, we'll do limited review. In case of limited review, scope is very limited and substantially narrow compared to the audit. So audit has a bigger scope than review. Now, scope is complete audit means what? Scope of audit is not confined to specific limits which management may set, required to check all possible aspects of the business. Everything, completes are A to Z. This is like deep cleaning, everything. Operations, marketing, sales, everything we check. It is not feasible to get a complete audit practically, okay, because that much time is required. Partial audit, non-statutory audit, which restrict the scope only for specific asset, liability, profit, sales, purchase, only specific department, okay. Powers to inquiry are restricted, may not be allowed to obtain information which falls outside the purview of the scope. It is unlike to complete audit. Detailed audit is audit in depth, involves checking of transaction from time of their recording till their final effect on the financial statement. So at every stage, transaction goes through accounting process is closely examined by auditors. So right from the journal entry till financial statement, everything will be verified. Clear? Next. Right. Subject matter wise classification of audit. Cost audit. Basically, our main CMA. Cost books, cost accounts and cost statements, subsidiary and prime documents. Why? To see whether cost production represent whatever accounts you have maintained represent true and fair way of cost production. Includes examination of appropriateness of cost accounting system, whether the system is maintained properly or not, entries are maintained properly or not, books are maintained properly or not. It acts as a tool of control in the hands of management, enabling it to identify the areas of inefficiency and wastage. So basically, it will help in identifying the areas where it is inefficient and waste. Next, we have management audit, which is comprehensive and critical review of each and every aspect of the management process. Covers all areas of management like planning, organizing, coordination, and control. This you will see in the CMA final management audit. Okay, so everything, how do they plan, how do they organize, how do they supervise, how do they execute, everything. It helps managers in effective discharge of managerial functions. It is a forward looking. Now this is important in MCQ. It's a forward looking, independent, systematic evaluation for improvement of the organizational profitability. How do we improve the organization's profit, and how do we ensure that our employees are happy around our organization, and how as a management I need to improve, right? Operational audit involves operations and activities of the business entity. Clear? So whatever business you are doing, whether that business process is happening properly or not. It includes examination of the control structure of the entity. Control structure meaning what? Who is controlling, who is segregation of duty, who is responsible for what department, in CL department, who is a head, who is a manager, checking their activities, right? It checks whether standards or efficiency and economy are maintained, whether efficiency and economy, meaning you are not supposed to spend more time or cost, both money. Whether capacity is being utilized properly or not. Clear? Because imagine you have purchased a machinery which can produce 1 lakh units per month, but it's producing only 70,000 units per month. That means the cost is not being used properly. The cost which we invested in that particular machinery, it's not being used properly. So we'll go and check whether why it is 70,000, why not 1 lakh? What is the constraints? Okay. More useful where management is at a distance from actual operations. See, management and operations will have a limit, will have a distance. That distance we should reduce. Now, we should do audit and give them that particular bridge. So, audit is a bridge between management and operations. Where management cannot control the actual operations due to layers and delegation of responsibility. So, we have directors and we have management. Under that, they'll have people. Under that, they'll have employees. Under that, they'll have different committees, departments and all. So, how will the root level, whatever is happening, how will the top level know? Okay. Then comes tax audit. Very easy. Under Income Tax Act, we have to prepare a report. Clear? Sorry. Under Income Tax Act, to claim exemptions, to claim deductions and all, we need to get it audited. Then tax audit is required in addition to financial audit, since taxable income largely differs from accounting profit. Clear? So PGBP, if you have heard in taxation, taxable income is different, accounting income is different. In accounts, you can follow whatever depreciation you want. In tax audit, you cannot. Prime objective is to stop tax evasion. Then we have social audit. This is nothing but social responsibility accounting and critical appraisal of impact on the society. Clear? Whether are you giving proper returns to the society, because you are using society's resources. It is not mandatory in most of the countries, including India. Okay. Propriety, it is nothing but it is in public interest. Generally for government organizations, your propriety audit is more applicable. It is an evaluation whether decisions have been undertaken in tune with the rules, standard policies and delegated power, ensure safeguard of assets, misappropriation of funds, misutilization. So in government, you know what will happen when people give money, whether that money is actually used in the respective department properly or not, or whether they are only eating, they are only purchasing the assets in their own name. All these things will be checked under propriety audit. Okay. And also we will check wasteful expenditure. Is it necessary? Whatever expenses we are doing, is it necessary? Then we have, like I said that time, forensic audit. In forensic audit, what do we check? Examination of legalities by blending the techniques of propriety audit, regularity, investigative and financial audit. Its objective is to find out whether true business value has been reflected in the financial statement and in course of examination. So basically, when somebody wants to purchase another person's business, they do forensic audit. Now you may tell me only, we don't have loss sir, we are very good and all. How do I believe you? So rather than doing the normal financial audit, I will do forensic audit where everything is involved. Clear? Investigative, financial, regularity, propriety, everything will be there. Okay. Then comes performance audit. In performance audit, what happens? It's an independent assessment of an entity's operations to determine if specific programs are working as intended to achieve your stated goals. They serve a fundamental purpose of government accountability. Generally, this also comes under government audit only. Performance audit means if whatever plans, program, 5-year program, 10-year program, whatever you have got, is it been performing as per the goals? Now, if you see Prime Minister as, in central government, they have Surya Ghar project or something like that, where you put solar panels and they give you subsidy of X amount. Clear? Now the question is, we are trying to identify whether whatever schemes you have brought, is it been fruitful in the country or not? Or because in the government you allocate budget for that program, but if it is not fruitful, what is the point of allocating the budget? Clear? That is what we'll be seeing here. Though performance are held to objective standards of executing responsibilities that they are legally authorized and charged to carry out. Clear? So it is held to objective standards. From department to department it will change. But at the end we should see whatever you're spending, they should be legally authorized to do it. Then comes secretarial audit. Basically company secretary to check whether compliances have been done properly or not. If non-compliance are noticed, we'll have to rectify the situation with much lesser problems and cost. HR audit, basically again maintaining compliance with ever changing rules. Labor laws will be there. Correct? So many labor laws are changing now. Improvement and enhancement of HR function. HR, we can give advice, we can give suggestions, we can give improvements where to work on it. Helps in analyzing the gap between what is current HR function and what should be or could be the best possible HR function. So what you are and what is the best. To bridge that gap, this is much better. Next, IS audit, information systems audit. Establish whether information systems are safeguarding corporate assets, integrity of stored and communicated data. Basically information systems, now what's a computer system and all what you maintain, hardware, software, people, information and data, data and network, all those things we do audit and check whether systems are fine or not, whatever assets are there, is it there or not according to the list. Now this can be a question for you. Clear? What are the factors that lead to development of information system audit? The consequence of losing the data. That's the reason why we want to do the audit. Misallocating resources because of decision based or incorrect data. Computer abuse, meaning what? People stealing the data, leaking the data, etc. High cost of computer error. Of course, if something goes wrong, everything goes wrong. Especially in a bigger company, like imagine Reliance, Facebook, Meta. Facebook and Meta is same, right? Banks, very, very difficult. So they keep on doing IS audit. Privacy should be maintained of individual persons. Need to control the evolutionary use of computers. See, from normal computers we came to supercomputers. Then now we are in AI generation. We keep on evolving. So when we keep on evolving, even risks and fraud will keep on evolving, and that we need to take care of it. Clear? Environmental audit, sir. Correctness of environmental accounts, meaning what? Revenue and cost of environmental and natural resources, estimate depreciation values record in the books of accounts. So environmental resources, it could be asset, and how much you are harming the environment and how much you are, if you see companies, they'll tell in IPL, they say we are going to plant these many trees, right? So we should understand what are they trying to do, because everyone has something called as sustainable goals, right? So for that purpose, environmental audit will become useful. Its procedure was first notified under Environmental Protection Act by Ministry of Environment for Forest. Now, it is importance of audit, environmental audit is given in this particular act. Under this act, every person carrying operations of an industry, operation or process requiring consent under Section 25 of Water Prevention and Control of Pollution Act or Section 21 of Air Prevention and Control of Pollution Act, or both, or authorization under Hazardous Waste Management and Handling Rule under the Hazardous Protection Act is required to submit an environmental audit report. Very important. MCQ. Yeah, very, very, very important. They can ask an easy MCQ on this. Clear? So what all we had seen in this number one. Right, we had seen nature scope. That's first unit, nature scope, objective and significance of the auditing. We got to know the meaning. We saw the narrow scope. We saw the broader scope. We saw financial statement audit definition, essential features. Yes, essential features we saw. Nature of auditing we saw. Then difference between accounting and auditing we saw. Post that, audit and investigation we saw. Correct. And then we saw overall objectives as per SA 200, that is overall objectives, but not just objective. Objective we saw later. Here all the scope also we saw. Basic principles, Integrity, objectivity, very, very important question this is. Okay. Then we saw objectives of auditing as per SA, 200 financial statement audit, rare, reasonable assurance and reports. So then what is that objective? That is general objectives. Okay. Then from legal point of view, how is it going to help? From internal control point of view, how is it going to help? External affairs point of view, how is it going to help? Advantage of audit we checked. It will help the stakeholders, moral check, government and all those things. Inherent limitations also we checked. Sampling is there, professional skepticism is there, materiality is there. Then classification, which stat audit, advantages of it. Non-stat audit also we saw. And then we saw advantages for sole proprietors and other people. Then objective wise, internal audit we saw. Independent, periodical or final, interim, continuous. Correct? These all things we saw. Yes. Correct. Okay, sir. Now, this is our unit number 1. In this, I told you specific areas where there can be a long answer for you, right? I give you hidden questions, so focus more on those questions, and with that, unit 1 is complete, right? So let's move on to the next unit, that is introduction to the standards. Okay, introduction to the what? Standards. As to for auditing standards, what certain things are, basic things are there. Quickly, very easy thing. Let's just quickly go through it. What are standards? See, why do we require standards? We require standards to so that where let's say for example there are 100 people, right? If 100 people are there in the market, now 100 chartered accountants are there, 100 CAs are there, 100 CMAs are there, 100 CAs are there. Now, if we don't tell them how do we go about the audit or what are the procedures that are supposed to put in the audit, they will put whatever they want. They will report in the manner that they want. They will do the work in the way that they want. If we allow them to do whatever they want, then don't you think the quality is being compromised somewhere? Yes, because everyone will have their own methodologies. So if we ask them to do it in their own way, some can meet the quality, some may not meet the quality. So for such shortcomings, what should we do? We should put a standard. Yeah, like in corporate, we call it standard operating procedures, SOP. There is step 1, step 2, step 3, step 4, like that. Clear? Similarly, in auditing also, we need to provide them the standards so that we can guide them for a better quality service. So standards, what are standards? They are well-defined guidelines which are followed by auditors, so CAs or CMAs or whoever is doing the audit, they are supposed to follow this in conducting our audit of clients' accounts. These are formulated by who makes the standard? Professional bodies of accountants. The ICSA also makes standards. ICMA also makes standards. ICA also makes standards. Okay, so these are professional bodies. Of course, after considering the deliberations and suggestions received from various interested groups, we call it as stakeholders. Then, standards provide principles and techniques expected to be followed. Basically, like I said, what to follow, standards will tell you. What is the purpose? Acts as a ready reference. Clear, reduces audit risk considerably. Ready reference means you don't have to think. We have only thought and quoted. Just go refer the standards and perform your procedures. Reduces audit risk considerably. Now, what I mean by audit risk? Audit risk is basically giving wrong opinion. Clear? Inappropriate opinion according to the situation. Imagine the financial statements are very good. You should go and tell financial statements are good. No, you go and tell financial statements are bad. Or with financial statements are bad, you go and tell financial statements are good. Such things is what we do not want to have. So we will reduce that type of risk, audit risk. An auditor conducting the audit work based on the relevant standards can always defend against possible allegations of negligence. So tomorrow, if anyone says you did not do the work properly, standards, I have followed the standards. So you see, standards only ask me to do these things. I have followed that only. So you can always defend because of the standard. It will improve the quality of the audit work and thereby restore the public trust. Okay. Now there is something called as board, like I said, IAASB, International Auditing and Assurance Standards Board. Right. Now, how did this come into the picture? In 1977, IFAC, that is International Federation of Accountants, was established. Why? To bring harmony in the profession of the accountancy on an international scale. So globally, we should, harmony means what? Everyone should be in the same page. Here, there should be a peaceful profession, right? It should not be so much of debate, arguments, etc. So we'll bring a standard which is at a global level, right? In pursuing the objective, they established something called as IAASB, International Auditing and Assurance Standards Board. Now, this is an independent standard setting body. MCQ they can ask. Clear? This they can ask in MCQ. Okay. So, independent standard setting body under the auspices of IFAC, not auspicious, sorry, auspices of IFAC, meaning under IFAC only IAASB was drafted. Okay, what is the objective of this board, sir? To serve public interest by developing and issuing high quality standards and by facilitating convergence of international and national standards. So in Indian standards and foreign standards, there will be a gap. So IASB says, no, we should not create a gap. We should keep our standards also at a international level. So the gap can be reduced by this standard or by this board, thereby enhancing, improving uniformity and quality of audit. Then we have AASB, Auditing and Assurance Standards Board. See, IAASB is international, AASB is obviously our Indian. ICAI is one of the founder members of IFAC. One of the membership obligation was to actively propagate the pronouncements of IAASB to contribute towards global harmonization and acceptance of standards issued by IASB. So what did we do? ICAI constituted Auditing Practices Committee, APC, in 1982 to develop statements on standards practices. In 2002, the APC was converted into AASB. So like how IASB is for international, AASB is for us. The composition is fairly broad-based and attempts to ensure participation of all interest groups in standard setting process. Apart from the elected members, board includes members from profession of SEBI, RBI, IRD, IAMS, etc. What is the objective? To review the existing and emerging practices worldwide and identify areas in which SQC, standards on quality control, engagement standards and statements on auditing needs to be developed. So review the existing and emerging practices which is throughout the world, identify areas where development can be done, to formulate standards so that these may be issued under the authority of the council of the institute, to review existing standard statement, assess their relevance in the changed condition and to undertake their revision. Basically, review and change. To develop guidance note. See, guidance note is nothing but giving you that guidance as to, sir, if you do not know what to do in that particular situation, standards also have not told you. Standards just have told you that you have to report. Now, what procedures you have to put in that, guidance note will tell you. Following guidance note is not mandatory. Following guidance note is not mandatory. But if you do not know how to go about it, guidance note can help you out. Okay. Then, to review existing guidance note and to assess their relevance and obviously revise. Therefore, check and change guidance note. Here, check and change standards. Formulate clarifications. Now, clarifications is a part of standards. In standards, if you have not understood anything, they will give a clarification. Therefore, standards and clarifications are mandatory. Clear? This is mandatory. Standards and clarification is mandatory, MCQ. Then, next, to formulate and issue technical guides, practice manuals, studies and other papers. Now, this is again optional. Optional for guidance. More expert knowledge will be given. Clear? So, this is what AASB gives. Okay, so standards mandatory, clarifications mandatory, guidance note, technical guides, papers, all these are optional for you. Structure of pronouncements issued by ASB. Now what will they do? Revised preface titled Preface to Standards on Quality Control, etc. will be issued, has been issued. Accordingly, pronouncements are covered by the following two broad categories. One is called engagement standards, clear, and then we have something called as quality control standards. Right, so two broad category, engagement standards and quality control standards. In engagement standards, what do we have, sir? We have essay which talks about standards on auditing, which is applicable for audit of historical financial information. This can come in MCQ. This can come in MCQ. Number two, SRE, standards on review engagement. This is not audit. This is like, audit is like watching the cricket match full. Review is like watching the highlights. Clear? But both you will watch. right? So review, generally when we do not have time in listed companies and all, there is a concept called as limited review. If you are not able to do quarterly audit, at least review their financial statements and give. Is to be applied in the review of historical financial information. Then we have SCAE, standards on assurance engagement, to be applied in assurance engagement other than audits and review. So apart from audit and apart from review, SCAE is very, very important to follow in assurance engagement other than audit and other than review. Prospective, futuristic, prospective financial statements, prospective financial information, project reports. For that we give assurance. Now on that we use SCAE. Then we have SRS, agreed upon procedures, compilation, etc. Like for example, let us say there is a company which is in India, and this company also has a subsidiary outside India. Now holding company should prepare CFS. Now subsidiary company follows Jan to December, Indian company follows April to March. The question here is, we follow April to March, they follow Jan to December, but while consolidating, we need to convert that. Now the management does not know how to convert. Clear how to convert that particular financial, that their year into our year, and what are the adjustments and all to be made. So they ask us, sir, can you please help me in compiling? So I can help in compiling. When I'm helping in compiling, what I should do, what I should not do, all those will be told in this particular standards, SRS, standards on related services. Then we have SQC. This is specifically for quality control. To maintain the quality of the audit, this particular standards are given. Okay. Under this, again, in addition to the above, they issue essay, general clarification, guidance note. And this is what I told you. Guidance note, if you see here, this is to assist. So it is not mandatory. They are also issued to provide guidance on other generic or industry specific issues, not necessarily arising out of a standard. Therefore, not mandatory. Okay. General clarification, they are mandatory. Statements are therefore mandatory. Statements on audit, standards on audit, general clarifications, 100% mandatory. MCQ. MCQ, MCQ. Yeah. Yes. This is your unit number 2. Unit number 2, but not the entire unit. It is just with respect to the board. Now, in the same unit, we'll be seeing what is the procedure. The structure of standards issued by AASB under the authority of ICA Council. So what happens? SQC is there. Services converted by the pronouncement of auditing and assurance board under the authority of council. What will they do? Assurance services and related services. So in this case, what are the standards that they have given, sir? For audit and review of historical information, they have given SA, SRE. For assurance engagement, they have given SAE. For related services, they have given SRS. For quality, SQC. So how many standards are there? How many categories of standards are there? 5. SA, SRE, SAE, SRS, SQC. Now there is new standards called as SQM, standards on quality management. Clear? So these are also there. What are the procedures, sir? Now AASB identifies the areas where standards need to be formulated. So first of all, finding where the problem is and the priority, which problem is riskier. Second, in preparing, AASB is assisted by the study groups or task force. Clear? So obviously AASB will identify, then we'll have a study group who will help us in identifying what, where, how. Okay. So this comprises of a cross section of members of the institute, ICA, ICS, etc. The study group will consider specific subject and prepare the draft. Primary draft they will prepare. Based on the work, exposure draft is prepared by the committee and issued for comments by the members. So first, problem identification will do. Problem identification will do. Then study groups assistance. Then draft circulation for comments. Clear? Or draft circulation plus comments. Okay, plus comments. After taking comments into consideration, finalize the draft and submit to the council. So finalize the draft and submit to the council. what will the council do? Council on its review of the draft makes suitable modification. Clear? Once you give, comments will be there, suggestions will be there, make suitable modifications, and then standards or statements is issued. So while formulating, board take into consideration ISA also, International Standards on Audit, issued by IAPC, that is International Auditing Practice Committee, applicable laws, customs, usage, business environment in India, everything they will take into picture. So 5 steps are there. First, problem identification, then assistance, preparation of draft by the study groups, then it will be submitted to the board. Board will final exposure draft, they will prepare, give it to comments will be received, modifications will be done. While preparing the final standards, final copy of the standards, you need to consider ISA, applicable laws, regulations, etc. Clear? And then we have list of different standards. SQC, we have only SQC1. Now we have SQM also. Okay. Then audits and review, 100 to 199, 200 to 299, 300 to 499. Like this, you have given. Just go through it once, because this can be asked in the multiple choice question. Clear? Apart from that, we have SCAE also. Now here 4 digits it will come. Okay, from here it will be 4 digits. Until then it is 3 digit only. Okay, clear? Yes, this is your entire unit number 2. Okay, next topic is our next unit is the third unit, which is engagement, program, documentation, evidence, and notebook. Engagement is one standard SA 210. Program is again SA 300, documentation is SA 230, evidence is SA 500. Notebook does not have an essay, but it's just a small concept. Now let's talk about SA 210, which talks about audit engagement, which says, now see, whenever we start a work, there should be an agreement between 2 people. See, although Indian Contract Act says we can have oral agreement is still valid, but how do you prove it in the court of law? How do you prove it tomorrow if there is a case? Therefore, between the company and the auditor, there should be an agreement. That agreement is what we are going to discuss in SA 210. Nothing big. Okay, very small concept. In case of stat audit, appointment and its duty are governed by the respective statutes, which you already seen in section number 139 and all. In companies, your paper number 2 only, you would have spoken about it a little bit, at least not the entire thing, in section 96 AGM and all, appointment of auditors. Clear? And in this particular subject only, you will be seeing in the next unit. Okay. In all other organizations, however, these are decided by the agreement between the auditor and the client. Such an agreement plays a significant role. If it's a company, then no problem. If law only tells you what to do, what not to do, then it is a good thing. But if law doesn't tell you, in other cases, there should be an agreement between 2 people in the conduct of audit, because if the auditor is held responsible for anything beyond the nature and scope, he can be relieved without any doubt. Because of this agreement only, everyone will get to know what we are supposed to perform there. Clear? In addition, existence of an agreement can easily avoid any misunderstanding or ambiguity. They can avoid any misunderstanding or ambiguity. Ambiguity means nothing but confusion. Okay. Therefore, it is desirable that before commencement of audit, the auditor and the client must agree on the terms. So, before commencement only, there should be agreement in the terms, and the auditor should send an engagement letter in the interest of the both of them. So, who will send it to whom? The CA will send it to the management. As per SA 210, an auditor and the client should agree to the terms of engagement before commencement of the audit. It should be recorded in an audit engagement letter, MCQ, where it should be recorded, audit engagement letter, or any other suitable form of agreement. But if law or regulation only tells you what should be the terms, then you need not record, because law, once it is in the law, even if there is no agreement, it is still valid, because law only has told. But if law is not there, then agreement will be very, very useful and important. What are the contents? First, objective and scope of the engagement. Why are you doing this work? Clear objective and scope. Second, management's responsibility. What are their responsibility? Clear. Third, existence of inherent limitations of audit. Future events are there. Fraud can happen. We have certain limitations there. Time is not enough. So limitations will be mentioned. Need for use of internal auditor will be there. In case if there is internal auditor, we might have to use him. We have a standard called SA 610, but not in your syllabus. Management confirmation letters will be there, in that whatever confirmation management has given through a letter, that particular copy can be kept in the engagement letter as well. Restrictions and limitations of liabilities. Basis for computation of audit fees. On what basis we are computing the fees? Billing arrangement. How are we going to bill? form of report and other communication, what type of report will be having and what type of communication will be giving, validity of the report, meaning till when it is valid, not permanently it will be valid, it's not Akshay Patra, no. So till when it will be valid, that has to be mentioned. Limits on submission of the reports to other authorities, meaning sometimes when I give you a report, there is a topic called as a concept called as special purpose framework. In that framework, no, you and I will have an agreement where I will give you a report. That report should not be used by other authorities. It is only and exclusively for you. So limits on submission of report to other authorities is what we are supposed to put. Now this can be asked as a question for 7 marks. Be careful here. Objective and scope, management's responsibilities, existence of inherent limitations, clear. Then I'll just write here objective and scope, management's responsibility, R for responsibility, then inherent limitation, need for internal auditors, then management confirmation letter, liabilities, basis for fees, billing arrangement, form of report, validity, and then limits. Remember this, okay? So these many points are there, right? 11 points are there which can be asked in the examination. Number 1, N, need for use of IA, O for objective and scope, I for inherent limitation, R for management responsibility. 4 point and Noir, clear? Not Nair. Then ML, M for management confirmation letter, and L for liabilities, alters restrictions and limitations on liabilities. Then B square, basis and billing, right? Then BF, boyfriend, form of report. Then VL, validity and limits on submission. These are the 11 points which can be asked for 7 marks in the exam. Be careful here. That is your essay 210. Next standard is essay 300, talks about planning and audit of financial statements, which is nothing specifically they're talking about audit program. See, there are 3 things. There is strategy, there is plan, there is program. Strategy is the shorter one, plan is a little lengthier one, program is the detailed one. So here they're only talking about audit program. So program is a detailed plan of the auditing work to be performed, specifying the procedures, everything. In program, everything will be there, every instruction, every question, every step, everything, literally everything will be there in the program. It's the most comprehensive and detailed among all these things. To be more comprehensive, program is written plan containing exact details with respect to the conduct of a particular audit, meaning how to conduct the audit. How to conduct the audit will be mentioned here. It's a description or memorandum of the work to be done during an audit. So how exactly the work to be done, the explanation, the description, the details will be given. It serves as a guide in arranging and distributing the work as well as checking against the possibility of omission. So basically it will help you in guiding the work. You should prepare a written program setting forth the procedures that are needed to be implemented while carrying out the plan. It should be a written program, okay? Not an oral program, because tomorrow evidence is very important. You may take into account the reliance to be placed on internal controls. That means after understanding of internal controls only. After understanding of ICS only, you are supposed to put up the program. Okay. Then you have some flexibility in deciding when to perform the procedures. So you have all the procedures, you can take time as to this procedure I'll perform now, the next procedure I'll perform later. So you get the timing, you get the flexibility to decide when what to perform. But sometimes you may have no discretion as to timing. Okay, sometimes, for example, now stock checking is happening. Stock checking will not happen every day. Stock checking will happen once in a year. So that particular date you have to be there. You don't have flexibility there. Tomorrow I will do stock checking. No, because stock checking is not a small thing. It's a big thing. The operations has to be stopped at times. So very, very important to understand the timing there. Clear? Next. The program should consider previous year's program, and these may be modified if necessary, meaning program should not be rigid, program should be little flexible. It may be classified into two categories, common for all types and special program. Common for generally all audits, we can consider that. Special program, for example, for partnership specifically, for company specifically, proprietorship specifically, you have to put. Advantages, it's a ready checklist, so everything will be there handy. Allocation of the work can be done properly. You may know the extent of the work at any point of time, so a review is done easily. So progress can be tracked. And program would not only be useful for the assistants in carrying the audit, but for the principal too, as he would be in position to account. So basically accountability can be implemented. Clear? A uniformity of the work can be attained, as the same program would be followed from time to time. Advantages, same program every year you can follow. It's a useful basis for planning the program for the following year. Basically, it serves as a guide for the next years. And selection of team members also becomes more easier for you depending upon the capability and competence. It may be used as evidence by the auditor in the event when any charge is brought against him. Charge in the sense any, let's say, some legal case, if it is brought against him, he can fight that. It is useful in selection of team members and delegation of responsibilities. He can prove that there is no negligence on his part and he exercises reasonable care and skill while performing the task. Because everything is in written form, it is much useful and much better for him to prove his point. Disadvantages, it becomes mechanical and you may lose interest and initiative. Sometimes unnecessary for small concerns. Though program helps in fixing, but inefficient staff may defend themselves by saying that matter was not contained in the program. See, some of the staff, what they do is they don't think. They just follow what has been told. Now, in those cases, it is a disadvantage. You might miss out on some important areas. Rigid programs cannot be laid down for each type of business, so flexibility should be there. Different businesses requires different types of programs. In this, now I want you to focus on advantages of audit program. Okay, be careful in that particular area. All right. Yes, that's your essay 300. Next is essay 230, talks about audit documentation, which we also call it as audit working papers. Now, whatever we do in our audit, we have to maintain a copy of that, okay? Because tomorrow, if anything happens, we'll be able to prove it. See, we have done our work. That paper and those papers, those books, whatever evidences you are collecting and keeping is what we call as audit documentation. So, it's nothing but it's a record of three things basically. Procedures performed, whatever procedures you have performed, you have to keep a record of it. Whatever conclusions you have reached, you have to keep a record of it, right? And whatever evidence you have collected. So basically, you adopt various methods and procedures to accumulate and get your evidences. So whatever evidences you have got, keep a copy of it, and that is what we call as audit documentation. Clear? So basically, as per essay 230, what it say, it's a record of three things: procedures performed, evidences obtained, and conclusions reached. So basically, it's a record of three things. Tell me again, a record of three things. What is that? Procedures performed, evidence obtained, conclusions reached. Procedures performed, evidence obtained, conclusions reached. Procedures performed, evidence obtained, conclusions reached. Such records can be in physical form or electronic form, absolutely no problems at all. Purpose. What is the purpose of maintaining such documentation? Number one, it tells you the basis for a conclusion. On what basis you have given any conclusion or any decision, working papers will give that. Providing evidence that audit was planned and performed as per the standards only, meaning I have not done anything beyond the standards or law. I have done everything as per the standards and law. Assisting the team to plan and perform the audit. So it will help the team in planning and performing the audit. This can be asked as a question. Okay. Fourth one, assisting members of the team responsible for supervision to direct and supervise the work and to discharge their review responsibilities. So basically, they have to do a review whether the junior has done the work properly or not. So to review that, this particular paper, this particular document, this particular documentation will help them. Enabling the team to be accountable for work. So accountability can be enhanced. Retaining a record of matters of continuing significance to future audits. In future audits also it will be helpful for you. Last year what has happened, when you read the file you will get to know what has to be done. Enabling the quality control review and inspection as per SQC1. Basically, internal inspection, it will help. Internal inspection, it will help. Meaning, now if the senior CA in the firm wants to know whether you worked properly or not, he can check your file and get to know. Enabling the conduct of external inspection in accordance with applicable legal, regulatory or other requirements. So it is internal inspection here, and here it is external inspection. Okay. Next, content of working papers. What should be the content? Number one, first of all, it should be prepared on timely basis. You have to prepare it while performing the task rather than after the work is done. See, when you are studying only, you writing notes is much better than after you study and write notes. Similarly here, when you are working only, it is better if you maintain the working papers rather than after finishing the work, because audit is a huge ocean. What will you remember later? You may not remember, you may miss out on certain things. So it's better while you are doing the audit only you make the record. Auditor shall prepare working papers that is sufficient to enable an experienced auditor having no previous connection to understand. So basically, when you do this, the next CA, whoever is doing, he has no idea. In fact, it should help the new CA also to understand what you have done. Right? Now imagine I take your notes. I and you have no connection. Okay? So even if I take your notes, I should be able to understand how you have studied. Right? That's what here. The preparation of working paper should be in such that an experienced auditor who has no previous connection with the audit. So for him, the client is new, but he has experience. But when he reads about this client, that particular file should give him all the details. What details? What are the procedures you have performed? Clear? What are the results of that procedure, outcome, and what are the significant matters you have considered in the audit? So that this will form a basis for his procedure, basis for him to decide new procedures. In documenting NT, you shall record what are the characteristics of the specific items or matters tested. For example, if it is inventory, what type of inventory you have tested. If it is asset, what type of asset you have tested. Clear characteristics of the matters you have tested. Number one. Number two, who reviewed the work, date and extent. Who reviewed the work, when was it reviewed, and how much was it reviewed. Then document discussions of significant matters with management and TCWG. So whatever discussions you have taken or you had with management and TCWG, that documentation also you maintain here. If the auditor identified information that is inconsistent with the final conclusion, you have to also document how you address the inconsistency. Imagine now, for example, there is a credit sales debtor. Okay. Now in the book, the debtor is showing 1 lakh rupees. Now you ask the debtor directly, external confirmation you took, you ask the debtor directly, how much do you owe the company? Now the debtor told, I owe only 80,000 rupees. Now, debtor is saying 80, books is showing 1 lakh, right? Now you have a 20,000 difference. You have to document that, how did you solve this particular issue? Now there is an inconsistency. Inconsistency means not matching. The books, whatever amount is there in the book versus whatever amount the debtor has given as a confirmation, it is not matching. How did you resolve that particular inconsistency? If in exceptional circumstances, if you judge that it is necessary to depart from a relevant requirement in the essay, document how alternative procedures achieved the aim of that requirement and the reasons for the departure. Generally, you should follow the essay. But in case if you have not followed the essay, you have gone beyond the essay. You are not supposed to go, but you have gone beyond the essay. It's nothing wrong in that, because your intention was to achieve a good purpose. But you have to document the alternative procedure. You departed and did something else. No, did that something else achieve the purpose? Did the something else achieve the purpose? If yes, document that, and also document why did you depart. Okay, reasons for the departure and ultimate effect, did you achieve it or not? Clear? Next is ownership and custody. Generally, it is the CA's property, and custody also will be with CA only. It's a property of the auditor. The portions or extracts, if he wants, he can give at his discretion. Discretion means at his decision, his will. Okay. These working papers should be kept in safe custody and in confidential manner for such time as is sufficient to meet the requirement. So until there is a retention period, you have to keep it very safely. Right. Now, it's a property of the auditor and he is entitled to retain them, is what it was decided in Shanteri, Martin and Co. Clear? It's just a case law, you can remember it. Retention period is 7 years from the date of the audit report. From there, 7 years you have to maintain. Otherwise, he'll be guilty of professional misconduct. So whatever working papers you have to maintain for 7 years from the date of audit report. Next is types of working paper. This is important. From your exam perspective, this is important. Clear? Now, permanent audit file and current audit file. What do you mean by permanent audit file? What are the examples? MOA, AOA copy, extracts of copies of legal document, agreements and minutes relevant to the audit. Then a record of study and evaluation of internal control systems, ratios and trends, copies of previous year financial statements, significant accounting policy, significant observations of earlier years. These all are examples of permanent file. Current file, acceptance of annual reappointment, because every year it will change. Extracts of important matters in the minutes of board meeting and general meeting relevant to the audit. Management letters given for this year. Analysis of transaction and balances of this year. Copies of communication with other auditors experts this year. Program of this year. Conclusions reached on the significant aspects. All these are current audit file, which means only for current year. This is permanent, which means it is not only for current year, it is for the next year also. So this year, next year, upcoming years, every year. Now MOA and AOA doesn't keep on changing on a daily basis or a monthly basis or a yearly basis. It depends on some significant event. Clear? That's point number 8. Right? Now that is your essay 230, which talks about audit documentation. We have 2 more concepts to go in this particular chapter unit, that is essay 500 audit evidence, and we have audit notebook to be taken care. Next is essay 500, talks about audit evidence. Very important concept in the context of auditing. So obviously without evidence we won't be able to talk anything, and it will be a baseless thing if you talk, right? So you will come across various assertions of the management. Assertions in the sense whatever management says, whatever management claims. Now that asset is mine, that's an assertion. Now we have repaid the liability, that's also an assertion. So whatever assertions the management is claiming, we will be coming across many assertions. We need evidence for that. So we have to evaluate so that I will be able to express any opinion. This evaluation can be made only with some facts and reasons, and these facts and reasons are what we call as audit evidence. So according to essay 500 audit evidence, it includes information used by the auditor in arriving at the conclusion on which your opinion is based. So basically this is the basis for your opinion. Okay. In short, substantive evidence collected from various sources is what we call as evidence. You remember this. Okay. This is important. Now, is there a need, sir? Is there a need for audit evidence? Definitely there will be a need for evidence, because if you have to give unbiased opinion, you need objective opinion to be given. You need to examine objectively. Objective means without any bias, unbiased examination you are supposed to do. So you need to objectively examine the financial statement based on sufficient and appropriate evidence. Opinion based on casual and subjective evaluation may leave material misstatement or fraud undetected. As a result, you may be held guilty. So if you are supposed to do your work independently and objectively, you need to get proper evidence. Without evidence, then it will be a biased opinion. Okay, right? Okay. So whenever we have to give an opinion, we need to obtain evidence. But now what type of evidence we need to obtain? Sufficient, appropriate audit evidence. Now here, sufficiency refers to the quantity, how many evidences you have. And appropriateness refers to quality, who gave you this evidence. See, 100 lies is still not enough. 100 fake documents if you give, quantity is there, 100 documents are there, but quality is not there. One good document you give me, quantity also is there, quality also is there. So we need to obtain both, quantity also, quality also. So therefore here, it is under SA 200, that is mother standard, it is recognized that reasonable assurance is obtained when the auditor has obtained sufficient appropriate evidence to reduce the risk to an acceptably low level. Now you can't eliminate the risk, you can only reduce the risk to what level? To acceptable level. Now everyone's risk appetite will be different and everyone's risk level will be different. Some like to take a bigger risk, some like to take a lower risk. So depending upon your acceptable level, to that level you have to bring it down. Sufficiency refers to quantity, appropriateness refers to what? Quality. Next, hidden question. Following factors influence your judgment while obtaining evidence. What are the factors? Nature of the item. What type of financial statement item? Income, expense, asset, liability, capital. Based on that, your evidence will change. Adequacy of internal controls. If ICS is good, then you might be able to get better evidence. If ICS is bad, you might require more evidence. Nature and size of business, type of business carried on. Okay, situation which may exert an unusual influence on the management, meaning unusual situation, more evidence I require. Usual situation, less evidence I require. Financial position of the entity, materiality of the item, how important a particular financial statement item is. If it's very important, then I require more evidence. Experience gained during the previous audits. Obviously, if you already have the experience as to which area, where, how much evidence to take, according to that only you will function. Results of the procedures including fraud or error. If it is fraud, more evidence I require. If it is error, I may not require as much as for fraud, but evidence is definitely required. The type of information available, oral, visual, documentary, what type of information is available. The trend indicated by the accounting ratios and analysis. These are the factors that can influence you. Types of evidence, internal and external. Internal within the organization, external outside the organization. Relevance and reliability of evidence. Now, for relevance and reliability, which one do I more rely on? External evidence is generally more reliable on rather than internal evidence. Internal evidence is more reliable when ICS is very good. Then document is better than oral representation, and direct is better than indirect. Always. Clear? Right. Okay, so this is with respect to reliability and relevance. What are the methods to obtain evidence? Number one, inspection. Important. What do you mean by inspection? It consists of examining the records, documents, checking the documents, or even it is going and checking tangible asset. Physical verification also is included in inspection. Be careful, can be asked in MCQ as well. Okay. Inspection of records and documents provides evidence of varying degrees of reliability depending upon their nature, source and effectiveness. So depending upon these factors, inspection will change. Observation. What does observation means? Looking at a process and learning. Consist of what? Witnessing a process or procedure being performed by others. That is what we call as observation. Then we have something called as inquiry and confirmation. What is inquiry? Inquiry means seeking information from knowledgeable person, and confirmation means what? Consists of response to an inquiry to corroborate information. Corroborate means match the information. Then we have computation, arithmetical accuracy, checking interest calculation, depreciation calculation comes under computation. Analytical review consists of studying significant ratios and trends for unusual fluctuations. Ratio analysis, trend analysis, checking the graph from last year to current year, all these are called as analytical review. Then there are two types of general procedures, is what we call as, one is called risk assessment procedure, one is called further audit procedures. What is risk assessment procedures? These are procedures performed to obtain understanding of three things: entity, environment and internal control. Why? To identify and evaluate what? Risk of material misstatement. It can be due to fraud or error. So basically RAP is nothing but it's a procedure where we understand the entity, what type of entity, what type of business, what type of financial structure, who is the owner. Then the environment, how is the environment, political environment, social environment, cultural environment, business environment, and the internal control, what is the status of ICS. Why? This will tell us whether the entity, environment and ICS can actually prevent the fraud or not. So the procedure for that generally is inquiry we put, generally, okay, inquiry we put, analytical procedure is there, inspection also is there, observation also is there. These are the four general procedures under RAP we put. Further procedures is nothing but getting into the details. Once we get to know the risk, under risk assessment procedure, we go for further audit procedure. If the risk is high, further procedures will also increase. If the risk is low, further procedures also will be lesser. So under further procedures, we have test of control, or one more name is called as compliance procedure. Now, what is compliance procedure? These are activities performed during the control testing stage to gather evidence with respect to operational effectiveness of internal control upon which the auditor has planned reliance. Meaning what? Checking whether ICS is performing properly or not. That is what we call as compliance procedure or test of control. Whether the control has some objective, is it achieving the objective or not? When you put a system, that system has some objective to achieve. Whether that system has achieved that particular objective or not. For example, a calculator. What is the objective of the calculator? Giving you right calculations. So checking and seeing whether it gives me right calculations or not. Test of details and analytical procedure also will be there. So under further procedures, we'll be dividing it into two. One is called test of controls, one is called substantive testing. Under substantive procedures, we have test of details and analytical procedure. Right. So test of details means checking everything: invoice, date, amount, party, rupees in words, everything will be checking. Analytical procedure is, like I said, trend analysis, ratio analysis, etc. Okay. Now, next concept is audit notebook. In audit notebook, what happens? See, audit notebook is like what you have classwork, right? Whatever happens in the class, you note it down, no? So that so many things are there. How do we remember? Same concept in case of audit notebook. So here, the staff may come across various misstatements now, which will require further clarification from the management. So I can't ask each and everything, no? So I'll maintain a notebook. Everything I will note it down. Later on, once for all only, I will clear. To avoid any chance of such issues being unanswered, the staff generally records the same in a separate notebook and raises the issue in future. Such a record is known as audit notebook. Contents. What contents will be there? Name, organization structure, MOA provisions, communication with previous CA, management representations and instructions, list of books maintained, accounting methods, ICS ka status, KMP details, errors and fraud discovered, matters requiring explanation, special point that requires attention. So here in these points, there is nothing much of a concept to explain. These are just examples as to what will be there in the notebook. Name of the organization. Organization structure, a private company, public company, what type of company it is. Clear? MOA and AOA ka details, important details, not everything. Then communication with the previous auditor. Why do we communicate with him? So that if there is any important issues to be solved, it will be there in this. Management representation and instruction. So if any management MRL they have given, they have written and given, we can put in the notebook. Later on we can ask the questions on it. List of books maintained. What are the books all maintained? Accounting methods, what type of method? Depreciation, what method you are following? Revenue recognition, what method you are following? Then in case of provisions, how are you creating provisions? Then KMP details, name of the KMP, designation, etc. Errors and fraud, whatever errors, whatever fraud you have understood, you have discovered in the audit, you can put it in this notebook. Matters requiring explanations or clarification, doubt solving basically. Any area where you have any doubts, you can note it down here. Special point that need attention is in the report. Clear? So this can be maintained in the notebook. This can be asked in the exam for 7 marks. Be careful. Clear? Right? This is your unit number. This is your unit number 3. Clear? Audit engagement program, documentation, evidence and notebook. Right? Okay, sir. Now we'll move on to the next unit. Next unit, let's talk about unit number 6. That is application of technology in audit and audit trail. Right, sir. Okay. Now, what does this application of technology in auditing means? See, previously we used to work manually, like with the manual books of accounts, manual papers, everything was manual. So time taken will be more. Now with the help of technology, we can create an environment where everything is done through systems. Now here, when we talk about specifically technology, using technology, there are two concepts which you have to be very careful about. One is called digital auditing and one is called auditing digitally. Digital auditing is nothing but we are auditing an environment which is using systems. Auditing digitally is we are using technology in our audit. While we do our audit, we use technology to make our work easier. digital auditing is nothing but we are auditing an environment, a client where he is using extensive technology. We are going and auditing that particular environment where he is using the systems. Clear? So here when we talk about application of technology in auditing, the processes, operations, accounting and even decisions are carried out by using computer systems. So auditing processes, operations, everything. So basically this is called as automated environment where the clients are using the systems for what? Processes, for operations, for accounting and even for decision. And this is what we call as digital auditing. Okay, so what will happen, sir, when a client is using automation for all the processes, when the client is using automation for all his businesses, when the client is using automation for all the operations and even decision making, even for accounting, for everything is using automation, that type of environment is what we call as automated environment. And when we go and do the audit of that particular environment, we call it digital auditing. Okay, now what is the advantage of such an environment? Number one, processing the data very accurately, because system follows the formula. It doesn't know the emotion, right? It follows a formula. So whatever data you're giving, nothing but accurate processing it will be doing. As a result, computation becomes more reliable. So see, manual, there could be a lot of disadvantage, bias could be there. Let's say for example, you are having a transactions with your own related parties, so probably you may not calculate in an unbiased manner. You may calculate in a biased manner. You may give a heavy discounts. Now the systems will not allow that unless and until you put up a policy for that system. You give a formula for that particular system. It can process high volume of transactions easily. Banks, supermarkets, right? Amazon, Flipkart, all these, you see so many transactions happen in a day. How is it those environment or that particular organization is able to process data accurately as well as such a large volume, right? Reliance, ATC, all these companies, they definitely use automation in their organization. Then it makes business processes faster. Your business cycle can be done faster. See, for example, 100 entries of invoices you have to manually put, versus in the Excel 100 entries are there. Import it in a jiffy, all the data can be imported. So basically your business can be done faster. You can focus on doing business, and rather than following these accounting process, admin process and all those things, you put automation there, you focus on the business. Improves efficiency and security. So even if you only put the password, imagine you set up the password and you're only putting the wrong password, it will still not allow you. That means the system doesn't even allow you to breach. So better security. Efficiency. Basically efficiency is nothing but saving time. Yes or no? Saving time. It minimizes the human errors. Minimizes what? Human errors. Offers better integration among business processes. Integration means what? Interconnection. Interconnection. Okay. Then, what are the components of automated environment? This they can ask as a question. Okay. This also they can ask as a question as to what are the parts of automated environment. Number one, databases. Number two, operating systems. Number three, hardware and storage devices. Database means what? Collection of data. Operating system, Windows, Android, iOS, all these are nothing but operating systems. What type of systems you are using? Hardware and storage devices. What type of hardware? Which type of PC? Which type of CPU? What type of hard drive? Right? Those. Then network devices. Sorry. Network devices. What type of switches, routers, modems you are using? Networks, local area, LAN, local area networks, wide area networks, WAN, virtual private networks, VPN. What type of hardwares and networks you are using here? Physical and environmental landscape, like data center infrastructure we are talking about. Physical access control mechanism to enter that particular room. Do you have biometric access, or do you have facial recognition, CC cameras, fire suppression systems, adequate HVAC? HVAC is what? What is HVAC? Any idea? Tell me. HVAC means what? No idea? HVAC is nothing but heating, ventilation and air conditioning. Clear? Because server room will generate a lot of heat. So there should be proper ventilation for the heat to go out, right? Proper air conditioning to cool the systems must be there. Okay? Next important question. Areas of use of computers in auditing. So where you are using your computers. Number one, in preparation of detailed programming we can use. Number one. Number two, in planning, scheduling, assignment of manpower to different assignments. Now this technically is called auditing digitally. So there is a mixture of concepts, okay? Here we are talking from CA's perspective. Here we are talking from organization's perspective, what things they are using. Here we are talking about from our perspective, where are we using computers in our audit. For programming we can use, planning we can use, scheduling and allocating work to our team members we can use, checking of validity, consistency and reasonableness of entries, calculations are done properly or not. Clear? Reviewing internal control of the system. Internal control of the system meaning what? Of the computer system's integrity we can check. Retrieving requires key information from the files for making comparison with a set of standard information. Basically nothing but for comparison of two set of data we can use systems. Doing arithmetical computation, Excel sheets, formulas we can use. Analytical review of the data by way of comparison, ratio analysis, trend analysis, etc. Pie chart, bar diagram, so many things, pivot table, so many things we can create. Selecting representatives for vouching, verification, debtors, accounts may be planned. Okay? Meaning what, sir? Selecting representative for vouching, verification, debtors, account. Meaning now you may have 1000 debtors, 1000 transactions. Not all 1000 will be able to check. So we can, in the Excel, you can put up all the data, sort ascending to descending or descending to ascending or largest outstanding, etc. And then you can choose the representatives. Okay. Then preparation of flowchart using softwares. Preparation of reports, documenting working papers and writing other communication, etc. we can use. This is very important question. Okay. Next. Controls. What type of controls will be there in automated environment, sir? Controls in automated environment and auditor's role. Now, when we say controls in the environment, there are generally these type of controls. See, one is called general controls, one is called application controls. Okay. Now, authenticity and reliability of information in the environment depends on the controls. If the controls are very good, you can rely on the data. The data can be more authentic, the data can be more reliable if the controls are very good. Therefore, we need to check if the controls are good, automatically the output of that system also will be very authentic and reliable. So what type of controls we need to check? Number one, we need to check application controls. Now, what I mean by application controls? These are those controls that leads to the transaction and standing data pertaining to a computer-based application system. Right? So application controls means what? These are those controls that relate to transaction and standing data pertaining to a computer-based accounting system. Basically, in every software, apps, software, whatever controls are there, that we are supposed to check. Why? Because if the controls are not good, like we said, the data coming out of that system will not be authentic and it will not be reliable. Therefore, application controls needs to be ascertained first. Get to know what it is, recorded and evaluated as a part of the process of determining the risk of material misstatement in the client's financial statements. Meaning what? Very simple. If the controls in the softwares are not good, then the data processing will not happen in an accurate manner and unreliable manner it will happen. Therefore, we won't be able to rely on such data. Next is input control. See, whenever there is an output, it has two things. It has input, then it has process or processing, right? So input plus process is equal to output. So if output has to be right, input also has to be right, processing also has to be right. So in input controls, what do we check? Control activities designed to ensure input is authorized, complete, accurate and timely are referred to as input control. So whenever we give data to the system, certain control should be placed. What is the control? First one is range checks. This ensures that the information input is reasonable in line with expectation. For example, if you are telling a phone number, then obviously it should be a 10 digit. If you're giving 11 digit, 12 digit, 9 digit number, then obviously the data will accept, the system will accept if you don't put controls. So put up a control saying it should be 10 digit, meaning it will not allow 11, it will not allow 9 also. Okay. Then compatibility checks. This ensures that the data input from two or more fields is compatible. Example, sales invoice value should be compatible with the amount of sales tax charged on the invoice. So compatibility means nothing but match. It should match with the criteria that you give. Validity checks. Now what is validity checks means? The data or the input that you're giving to the system should be valid. For example, for financial year 25-26, you can't put an invoice date of 24-25. It should not allow. Okay, exception checks. Exception report will be produced. Imagine something goes wrong password you put. In those cases, the system should generate an exception report, and that exception report is what we are supposed to go and check, highlighting unusual situations that have arisen following the input of a specific item. Clear? Next is sequence check. Now, what do you mean by sequence check? These facilitate completeness of processing by ensuring that documents processed out of sequence are rejected. Meaning, invoice should be entered as 1, 2, 3, 4, 5 only. You can't say 1, 2, 3 and then jump to 7. Clear? So the data should be in a sequential manner. If it is anything out of sequence, it should be automatically rejected. Then we have control totals, basically checking the totaling of it. Clear? So to facilitate completeness of processing by ensuring that pre-input manually prepared control totals are compared to the input total. So whenever you are putting the totals manually, it should ensure that it is compatible or it is matching with the computer total, right? Facilitate what? Completeness. You should not leave out any data by ensuring pre-input manually prepared control totals are compared to totals input. So whatever system has and whatever data you are giving, it should match. Otherwise, it should not. It should give you an idea that it is not matching. Please check. Now in Excel and all, no, if you change the formula or if you give wrong formulas, it will not accept at all. It will give you a highlight, a pop-up. So we can go and check it out. Check digit verification. This process use algorithm to ensure that the data input is accurate. So checking the authenticity of the data. Okay. Next is processing controls. See, like I said, input, process and output will be there. Processing controls, it is to ensure that all data input is processed correctly and files are appropriately updated accurately in a timely manner. So whenever processing happens, process should follow the formula or the program that it is supposed to follow. Now if I say 1 plus 1, 2, I am telling you have to add. So the process should be adding. Whatever data I give, it will add and tell. So process controls is nothing but you have to see all the data input is processed correctly. Whatever process we want, it should be processed in that particular manner. Next is output controls. Output controls exist to ensure that all data is processed and that output is distributed only to prescribed authorized users, meaning randomly output should not be given to people. Right? Now, if I can come and take output from your computer, that means your system is weak. The output should be sent only or to be access to be given only to authorized users. So if I have to open the PDF, there should be some password. If I have to try and get a printout from your computer, there should be some authentication. Okay. Then, so output is kept confidential and available to authorized users only. Remember this. This is what we are supposed to check. Next is master file control. Now what do you mean by master file? Master file is nothing but the data which never changes or which changes once in many years or once in a long time. That type of data is what we call as master data. The purpose of master file controls is to ensure the ongoing integrity of standing data contained in the master files. It is very important that stringent security control should be exercised over all these master files. So master data, your name, your address, blood group, all these are master data. So controls over that master data should be checked properly, because if master data changes, database will change. And if database changes, everything will change. So I should see whether the controls are effective and adequate. Testing methods. Number one. There are four types of methods. One is called inquiry, observation, inspection, and reperformance. Now, which one to apply? It depends on the CA. He should decide. Okay. But some of the common methods is what? Obtain understanding of the process, do a walkthrough. Walkthrough is nothing but from beginning till the end. You do a walkthrough test. And how a transaction is recorded, and inspect the configuration. Configuration is nothing but the description of the control. The description of the control. Okay. Now, audit trail. Now, what do you mean by audit trail? Audit trail is nothing but it gives us a path, a track to trace the transaction from the source document to the summarized total in the accounting report. So basically it gives you a path. Trail is nothing but evidence, a path. Okay. It is step-by-step record of transaction that serves as a proof. Okay. Therefore, it is possible to trace a particular invoice from the daybook till the file. So we have to see whether the system has a trail. It's like a checkpost in highways. Checkpost will give you an evidence that this car has passed through this particular checkpost. So it gives you a trail. In an automated environment, accounting software provides the ideal example of the trails. Okay. When a transaction is entered, look at this example. When a transaction is entered in the software will maintain a record of it. That maintenance of record only is what we call as trail. For example, net banking or any such facilities where you enter the password wrongly thrice, it will block. Now, how does it know it is 3 times? It will keep a record of it. Okay. Any further edits made to the details, such as change in the name, amount, etc., will be tracked by the software along with the user who made the changes and the time of change. So what was the change? Who made the change? When was it made? This gives us clear-cut evidence as to what is trail in the software. Who made it? So that we can hold him responsible. Even if some transactions were to be deleted, the software will track that as well and keep the record of everything since the original entry was made. Even if you delete, they'll tell that this was deleted by this person on this date at this particular time. Is there a requirement by the Act to maintain this, sir? Yes. Section number 128, section number 143 is for us, 128 is for the client. Okay. So as per Rule 3.1 of Companies Accounts Rules as amended for the financial year from 22-23 onwards, every company have to use accounting software which has the trail feature. Okay. Now what is my duty under section 143? I need to report whether the company is using such software or not. And also section 128 says the software should be in such a manner that this trail feature is there and you should not be able to tamper that or delete that or edit that. That also we are supposed to report whether they have tampered it or not. Throughout the year, is it authorized, is it operating or not? How does this operate, sir? Number 1. An automatic record has logs, unlike a manual record that needs one to input the logs. The operations depend upon the nature of IT infrastructure. It varies as per the system's application and device. So basically, a record will be created in the software automatically. That depends from software to software what type of record. Clear? In manual logs, you only have to give the input. In automated logs, automatically whatever input you're giving will be recorded. Then, audit trails record every activity that occurs within your system. It takes details of when, how and by whom the activity was done. It also shows the response of your system to the activities that took place. So basically what it helps, every activity it records when, how, by whom it was done. Also shows the response of your system to the activities, how the system responded to it. This can be asked. Mark it as important. Edit log feature allows tracking the edits, what the data you have edited, deleted, everything, whatever edits is nothing but changes. Changes also will be tracked. Therefore, through audit trail, it is possible to identify unauthorized changes causing material misstatements very easily. What are the benefits of it, sir? Very simple. Accountability. I can hold people responsible. Promotes organization's data security. We'll get to know who did and what was done. So security will be easily manageable for us. We can put softwares with stronger passwords, etc. So we can only give the access to the authorized users. Okay. Next, reconstruction of events, because it gives us the path right from the beginning till the end. We'll get to know the entire transaction right from the beginning till the end, what happened. Detection of system interference and errors. Interference is interruptions. Detection of systems interruptions and error. It indicates upcoming system interferences, failures and errors. Such detections allows an organization to respond accordingly to allow a smooth continuation of its operations. Okay. Important. This is your basic knowledge about automated environment. Therefore, this unit also is done. Right. Now let's move on to the fifth unit, that is sampling techniques, analytical procedure, etc. And then we'll move on to the last unit, that is unit number 4. Right. Now, so in this particular unit, what are we going to learn? We are going to learn about audit sampling, certain audit techniques and analytical procedure, and a small topic called scrutiny of trial balance and grouping schedule. So in case of audit sampling techniques and procedures, what is the first thing we are going to learn is SA 530, which talks about audit sampling. Now what do you mean by audit sampling? Imagine there are 1 lakh invoices, sales invoices in the organization. Will you be able to check all 1 lakh invoices? No. So out of that 1 lakh, you will pick some sample and check that, verify everything, and then only you will go and tell whether the sales are good or not. The amount recorded in the books of accounts is fine or not. That is what is called as sampling. Basically, out of a population, we pick up something and then we go and tell whether it is good or not. General example is when you prepare a dish or a curry. Now you prepare in a big vessel, but you are not going to eat the entire curry from that vessel. You will pick up probably a few drops or 1 spoon of that, and then you taste it, and then you form a conclusion on that entire vessel, the sample, the population there, the entire curry in the vessel. You will tell whether salt is good, salt is fine, or salt is less, salt is more, etc. Spice, everything, whether it is good or not. Basically, you will give an opinion on the entire vessel there where the curry is prepared, but based on few drops or 1 spoon. That is called audit sampling. So what is the concept of audit sampling? In case of a large organization with umpteen means infinite, okay, too many transactions are there, it is not feasible for us to verify each and every transaction. Therefore, what we need to do, we need to just take a sample of it. So what is audit sampling, sir? Basically, it says application of procedures to less than 100% of the items within a population of audit relevance, such that all sampling units have a chance of selection to provide the basis to draw conclusion. So basically, out of 1 lakh, you should not pick whatever sampling, let's say 100 invoices you want to pick. That 100 invoices should not be biased. All 1 lakh units in the population should have equal chance of getting selected. Understood? Clear? Okay. Therefore, what is sampling? Nothing but application of audit procedures to less than 100% of the items. Even 90% is a sample, 95% is a sample, 99% also is a sample only. Okay, within a population of audit relevance, such that all sampling units have a chance of selection. Every unit in that particular population should have equal chance of selection. What is the benefit? Obviously, reduces the workload, saves time and cost, substantially reduces the time for the work, because I need not spend time on that entire 1 lakh invoices. Only on 100 invoices I should spend time, so I can devote more time for critical issues, important matters where I need to check 100%. There I can go and spend the time, rather than spending the time on those areas where I should not spend more time. Okay, in order to decide on the extent of the sampling, you have to evaluate the effectiveness of ICS. That means if ICS is weaker, I need to take a bigger sample, because I can't trust, no. If ICS is stronger, I need to take I can take smaller sample. In this process, any weakness of ICS, if identified, can immediately be brought to the notice of the management for corrective actions. Therefore, it gives dependable result as it is based on statistical sampling methods. Go for statistical rather than non-statistical. Factors to be considered for audit sampling important. First factor, objective of audit. Why are you doing sampling? Based on your objective, you have to select the sampling. It has to be done keeping in mind the objective of the procedure. For example, now if you are selecting, let's say whenever you are selecting the sample, imagine your objective is to take external confirmation. That means you have to select those debtors who are non-related parties, so that third parties, we can take confirmation from third parties. So that's your objective. Your objective is to get evidence specifically from external confirmation. So you have to pick up those areas where you can get external confirmation. Nature of population, if it is a homogeneous or heterogeneous population. If it is a homogeneous population, then I need not take more samples because everything is very similar. If it is a heterogeneous population, then I will take more sample. Okay, next. Internal control system. If ICS is, like I said, if ICS is less efficient, then more sample. If ICS is more efficient, less sample. Materiality. If any item is very important, more sample. If any item is less important, less sample. Sampling risk. Higher the sampling risk, bigger the sample size. Lesser the sampling risk, less is the sample size. Non-sampling risk. This is a risk from human error. You must take due care to avoid non-sampling risk. See, non-sampling risk is avoidable because it is human error. You reading information wrongly, you calculating it wrongly, you interpreting it wrongly, you understanding it wrongly. Those are all your problem. Clear? So you have to try to avoid non-sampling risk. Tolerable error. If you want to tolerate more error, then you will select less sample. If you don't want to tolerate more error, you will select more sample. Okay. Approaches to sampling, we have non-statistical sampling approach, we have statistical sampling approach. Non-statistical is totally based on your experience and knowledge. There is no formula, there is no methodologies as such. It is based on your experience and knowledge. For example, your mom cooking is non-statistical sampling. Why? She never has any measurement to put the salt, spices and all. She'll just use her hand as a measuring tool to put all the spices and ingredients. That is called non-statistical sampling based on personal knowledge and experience. Statistical is more scientific and does not depend on personal judgment. Now here is where you are, some of the in 5-star hotels and all, they follow statistical method of cooking. This many grams of salmon, this many grams of ingredient, this much grams of this particular leaf, this much gram of this particular powder. So all the 1 teaspoon, 1 tablespoon. In house, where is the difference between teaspoon and tablespoon? Not there, right? Similarly here in statistical, we use the formulas and strategies which is proven theories. Okay. There are 2 types in statistical. One is called, not 2 types, more than that, but one by one we will see. Random sampling. Random sampling means where we don't have any methodology. Randomly we pick. Okay. In this method of sampling, every item in the population or within a given group has a known chance of selection. So every item in the plate. Now imagine there are X number of laddus in the plate. Now you pick random laddus. Now when you are picking random laddus, every laddu in the plate has a equal chance of getting selected. Okay. There are 2 types. One is called as simple random sampling. One is called as stratified sampling. In simple random sampling, what happens? Each unit has equal chance of selection. Here it is done either by choosing a random number manually or from a random number table, or allowing the computer to computer program to select a random number. For example, if you go here, now if you go to random number generator, now I want to, let's say for example 1000 units are there in the population. I want 5. So I'll click on generate. First item I'll take as 955. Then I'll go for 146. Then I'll go for 112. Then I'll go for 579. See, this is what we call as simple random. We don't see any characteristics there. Population is homogeneous. We'll pick 5. Random 5 will pick. Then we have something called as stratified sampling. What is stratified sampling? Stratified sampling means converting the main population into small population of similar items, and from there we pick. For example, in the class of 100, now we will segregate those who scored 90 plus 1 population, 80 to 91 population, 70 to 81 population. That is called stratification. So from each of the samples, now they have similar characteristics. From there I can pick up the sample. Okay. So the subpopulation is called as stratum, and every item is called as strata in that. Okay. Remember, from the population, subpopulation is called stratum. Every item in the subpopulation is what we call as strata. Then we have systematic or interval sampling. Systematic or interval sampling is very simple. 100 units are there. How many you want? 20. 100 by 20. How much it is? 100 by 20 if you do. Sir, that means every fifth item is my sample. Every fifth item is my sample. That's called systematic or interval sampling. Monetary unit sampling, this uses a monetary value of the transaction rather than items as a basis for sample size. It is also known as value based or value weighted. Meaning what? Now rather than taking 100, now what is the total value of 100 invoices? Let's say for example 10 lakh or 1 lakh. Now 1 lakh divided by 20 items I want. 1 lakh divided by 20, how much it is? Let's calculate. Simple calculation, but still make habit of using calculators in the exam. 1 lakh divided by 20 if you do 5,000. That means every 5,000th amount is my sample. Clear? So every invoice or any invoice which has 5,000 ka value, or not 5,000 ka multiple but 5,000th, like how we say fifth, here 5,000th value will be my sample. Clear? Okay. Multi-stage sampling, this is nothing but suitable when data are stored in more than one level. For example, they may have stock stored at number of shops. Here the first step would be randomly select a few shops, then select a few stock items from the shop already selected. If applied cautiously, this can be proved very effective. Now 10 branches are there. Out of that, first select a sample of branches, 3 branches. In that branches, I will be selecting few items of specific stocks. That's called multi-stage sampling, because branches also is sampled. In the branches, invoices or whatever transaction, that also is sampled. What is the risk associated with sampling, sir? Risk associated with sampling is nothing but, sir, number 1, sampling risk and non-sampling risk. Non-sampling risk is very easy. Due to improper processing of data, lack of expertise to analyze, these are called non-sampling, which is totally in your control. You should have proper expertise. You should read the information properly. You should read the results properly. Sampling risk, on the other hand, is that sample is only a selected part of the population. It can never reflect all the characteristics of the population. It can resemble but not exactly give you the mirror image. Therefore, there will always be some amount of risk unavoidable in this process. This sampling risk can again be of two types. One is called, it is associated with compliance procedure, that is test of controls. One is with substantive procedures called test of details. Now here, the auditor, based on sampling procedure, may come to the conclusion that controls are more effective while they are not. Meaning, imagine you select a wrong sample, and when you select the wrong sample, you end up telling ICS is very good. Actually, it is not good at all. Which means you selected a wrong sample. You should have selected a bigger sample. Yes. So when you select a wrong sample, you will end up giving wrong opinion. And that type of risk is what we call a sampling risk, where your opinion on the sample is not matching with the opinion of the population. Because obviously, it is not a representative anymore. You pick the wrong sample. Imagine out of 100 students, there are 95 who are bright, 5 who are dull. Now I want 5 students. How should I pick this 5? Randomly. But you picked only those 5 who are dull. Now your opinion on the class is, this class is a dumb class. But technically it is not a dumb class. The way you selected those 5 went wrong. Clear? So that is what we call a sampling risk. So to avoid this, we have to go through the statistical method, which is much better than non-statistical method. Understood? Then, with respect to substantive procedures, you end up telling that there is no misstatement, but actually there is misstatement. Clear? So you come to a conclusion that financial statements are free from material misstatement while they are not, which means you have not selected the right type of transactions, or you have not selected a bigger transaction. Clear? So you have to choose the sample size properly to reduce the sampling risk. Non-sampling risk is avoidable. This can be done by experienced auditors, and they remain alert while analyzing the records. It can be reduced to minimum or even zero. On the other hand, sampling risk is unavoidable. We cannot do anything about it. Therefore, we can only reduce it by selecting the proper method of sampling and increasing the sample size reasonably. Stages. First we design the sample. Clear? Then once we design the sample, then we select what should be the sample size, how big should be the sample size, and then once we select the sample, we try to put procedures on that, and then we come to a conclusion. Yes, sorry, the device is acting a little weird. sample design, sample size, sample selection, and performance of procedures. Clear? So selection should be based on the object, design should be based on the objective, size depending upon to minimize the sampling risk. Clear? So generally apply statistical techniques rather than non-statistical. Selection, how do you select the units, and then performing the procedure. That is your audit sampling topic. Clear? So in this we have sampling, we have techniques, we have analytical procedure, and then we have grouping. So first one, sampling, is done. Next concept, let's start with audit techniques. Now in audit techniques, what are the things are there? Number one is routine checking we'll be talking about. Then test checking we'll be talking about. Then 100% in depth, and then cut-off examination, and finally we'll be doing with surprise checking. With that, this topic will be done. Now the first one was what? Routine checking. Now what is routine checking? Routine checking is nothing but a procedure to check whether the transactions are properly entered in the books of accounts and whether the posting and carry forward are done accurately. See, whenever we are talking about accounts, right? So entry, posting, carry forward, opening balance, closing balance. So these are called as routine checking, right? In other words, routine checking is done to ensure that mathematical accuracy is maintained while recording the transactions in the books of account. That is, every entry's balances, calculation, everything has been done properly or not. This is very helpful in finding the simple errors. Clear? Routine checking is normally performed by the clerk. CAs will not do, the staff or the articles can do it. They examine the correctness of casting and balancing of the books of the primary entry, correctness of the posting to the ledgers, casting, balancing, carry forward, etc. It ensures that arithmetical accuracy provides a base for the subsequent audit work to find out serious or organized frauds. So basically, arithmetical accuracy checking is what we call as routine checking, the objective. Next is test checking. This is nothing but applying sampling technique to draw a representative sample from the population what we just studied. Okay, so this is exactly like sampling. Test checking based on appropriate sampling techniques helps to form your opinion based on the examination of limited transactions. So from the representative, from the population, we pick certain samples and then we test on that particular sample. Okay, here we have understood that sampling risk is unavoidable, non-sampling risk is avoidable. Same logic has been repeated here. Okay, test checking is never recommended for seasonal industries, for transactions of non-recurring nature, for transactions of legal importance, estimates, rectification, etc. This is important from MCQ perspective. Why? See, non-routine generally doesn't occur every now and then. So there you have to give your full attention. Then next is seasonal industries, because throughout the year it will not be the same sales. So only during the season they'll have a bigger sales or a higher sales. It is better you verify entire thing there. So sampling may not be useful for you there. Next is auditing in depth. Here it is not 100% checking, it is 100% checking of few transactions. So you take up, let's say for example, out of 100 you take 10 particular transactions or 10 entries, but those 10 entries, whichever selected entries are there, you are checking in depth from beginning to their conclusion. In other words, it's a system which reviews each and every single aspect of transaction during its execution as well as recording, right from the recording till the end of, till it reaches balance sheet, everything properly we have to check. We can also call it as a walkthrough test. It's helpful in large organization where detailed examination should be done, which is obviously not impossible. 10 lakh crore revenue is there. Can you check every item there? Not possible. Therefore, take few transactions and check everything in that. Okay, be very thorough. So select a few representative and then from a category and then conducts a detailed stage by stage examination. If no irregularity is found, you may conclude that entire category is free from irregularity. There is a three-step process. First, review the effectiveness of ICS. If ICS is good, only then it is useful. Select a few transactions of material importance and then conduct examination of each and every stage. Then comes a cutoff testing. Now, what do I mean by cutoff testing? Cutoff testing is nothing but where you select the period first. Let's say quarter 1 means April, May, June. Now, in this particular cutoff, after June you will not select anything, before April you will not select anything. Why? There are certain transactions which can affect your next quarter also. There are certain transactions which can affect your this quarter but belonging to the previous quarter. So what will happen if you don't select a cutoff? you won't be able to give a proper picture to the users, and user may not be able to identify the financial statements ka, what exactly is the picture. You won't be able to make out from that. So what you are supposed to do, select the cutoff, and as on that date, these are the balances. As on that date, this is the profit. But for that, you need to first select cutoff. So for some entities, there may be large number of items, especially at the end of accounting period, that may have impact carried to the next accounting period. So it could be quarter, it could be the next half, it could be the financial year. Now in such cases, what we are supposed to do? Work in progress, goods in transit, goods sent on approval basis, etc. Outstanding and prepaid items are only few examples, right? Now GST. This month GST will be paid in the next month. Now March month GST will be paid in the April. But as on 31st March, what is the scenario? Right, so we need to select as on 31st March as a cutoff, and as on that date, whatever is the amount, proper presentation we have to give. Even purchase and sale transaction during the end may have their impact on the next year. Improper treatment relating to 1 year in the next or previous year may seriously disturb the financial result and mislead the decision maker. Therefore, you should apply definite procedure to separate transaction at the end of one accounting period from those at the commencement of the next. Such procedure is called as cutoff examination or cutoff procedure. So basically, selecting the period to apply the procedure. To apply the procedure for different period, we need to first select the period. That selection of the period is what we call as cutoff procedure. Here, he will first decide a cutoff date. Annual, in case of annual audit, generally balance sheet date to be considered as cutoff, and then examines the transaction that occurred within the definite time period prior and post such cutoff date to discriminate the transactions of current year and next year. This is essential to eliminate any scope of manipulation. So first decide the period, this period to this period, then select only that transaction, and anything above that transaction you'll be calling it as a next period transaction. Right, so that a clear clarity is given to the decision makers. They know what decisions will be taken based on this quarter and previous quarter. Then we have something called as surprise checking. Now what is surprise checking? Without telling. Generally we tell to the client and go to the audit place, and then because they have to keep things ready, keep the information ready. But without telling them, if we go, it is more effective in certain areas, like for example cash. If you tell that you are coming and checking cash, probably the cash transactions, the cash balances may not match. Clear? So in that case, it is better if you go without telling in certain areas, go and check. Clear? Traditional practices, we inform the client about the routine checking and then we go. This is considered as essential that they can keep the books of accounts and all ready for verification, but it also gives you the scope to do fraud, clear, or wrongdoings. So it is generally recommended that you conduct a surprise test of some material items without any communication. Some, example cash. These surprise check as a part of normal procedure will increase the efficiency of the work. Therefore, where important things are there, like for example non-routine and surprise basis, if you are doing for cash, it is much better. Walkthrough test may be defined. What do you mean by walkthrough test? So just like how we have surprise test, we have something called as walkthrough test. What is walkthrough test? Selecting a particular transaction from beginning till the end, we check that. It may be defined as tracing one or more transaction through the accounting system and observing how it is actually passed through ICS. So everything right from the origin of the transaction till the recording in the balance sheet, everything has to be checked. For example, now purchase from its initiation to its completion and recording. Now in this case, you have to see how the request is generated, how purchase order is placed with the suppliers, how the goods are received, how is it taken to the stores, how the bills are processed, and how the accounting treatment is done. So that is called everything, every stage of that particular transaction. If you are satisfied about the appropriateness, then you may conclude that ICS is functioning really well. Clear? Next. Accordingly, the auditor may decide to put reliance on the system to a certain extent and plan his audit work to verify the transaction. Meaning what? You may decide to put reliance on the system, meaning what? ICS. You may decide to rely on the ICS to a certain extent and plan your work to verify some selective transaction only. Meaning, if you once you start doing walkthrough test and you say this is good, then at least for some transactions you can rely on ICS so that your time is saved. If it reveals serious weaknesses, then you may opt for verifying detail completely. Clear? Otherwise, you can trust the ICS. Otherwise, you can go for better checking. Understood? Clear? Right. That is the next concept which we were talking about, called audit techniques to test certain transaction. Now we'll move on to the next concept. That is SA 520, analytical procedure is our next concept. What is analytical procedure? See, when client has given us so much of data, we need to analyze that, we need to review that, we need to see, compare current year, previous year, increase, decrease. Based on that, we can see whether it is an usual variance or an unusual difference. Okay, so according to SA 520, analytical procedure means evaluation of financial information through analysis of a plausible relationship. Plausible means a reasonable or an acceptable relationship. Acceptable relationship among both financial and non-financial data. It also encompasses such investigation as is necessary of identified fluctuations or relationships that are inconsistent with the information. That's what I'm telling you. When you start comparing the data, you get to know what is the difference. And once you start getting to know what is the difference, then you can say whether that difference is acceptable difference or non-acceptable difference. So fluctuations will and the inconsistencies we can check. See, it is not that every year every amount will be same. There will be difference. Now salary last year and current year, there will be increase or decrease. Repairs and maintenance, increase or decrease will be there. Sales, increase and decrease will be there. Profit, increase and decrease will be there. So I am not saying it should be the same, but we are just here to check whether that increase or decrease is reasonable or not. Clear? Next, nature of analytical procedures. What is the nature of analytical procedure? It includes the following. Analytical procedure consider comparison of financial information with prior period, previous year amount we can check. Any anticipated results like budget or forecast. In costing you have standard costing, right? So budget and actual variance will get to know. Similar information of any other comparability belonging to the same industry. This is called peer comparison or competitors comparison. So here basically your own intra-firm, last year how much it was there, this year how much it is there. This is called inter-firm, between two firms or between two competitors, and this is nothing but comparing the budgets and actuals. You may also include consideration of relationships between two types of data. Like for example, among different items of financial data that is expected to follow a pattern like operating profit margin. See, sales, your debtor turnover ratio, there is a relationship. Clear? Debtor turnover ratio means debtor divided by total turnover. So how many, what is the proportion of your turnover is debtors? We'll get to know the proportion. So we'll get to know whether it is more or less. Clear? Between financial and non-financial information like number of employees and total compensation cost. Number of employees and salary, still relationship is there. Number of units manufactured into electricity bill, still obviously there is a relationship. So that also we can consider. You can consider application of diverse analytical tools. Now what do you mean by diverse analytical tools? Diverse means different analytical tools. I'm so sorry, this is behaving very weirdly. Yeah, so varieties of analytical tools you can use, ranging from a simple comparison to complex analysis like statistical techniques, structural modeling, etc. It may be applied either on standalone financial statements or consolidated financial statements. They can apply on any component or individual information. Anywhere you can analyze. Analytical procedure can be used anywhere. Application. How should we apply? First you have to put up a plan. Clear? Step number 1. During planning stage only, if you want, you can apply analytical procedure to see which area has more variance. There we can focus more. Substantive testing to reduce the risk by relying on substantive procedure. You may either alone or in combination with test of details. So vouching and verification is nothing but where every detail we check, invoice we check, period we check, amount we check, parties we check, accounts we check, everything. With that also you can use analytical procedure. Unusual items you can use analytical procedure to check. Overall conclusion also you can put analytical procedure. So basically where all I can use AP, I can use in planning stage I can use in testing stage, and I can use in conclusion stage. Clear? Okay. Now, tools and techniques. What are the different tools? Trend analysis is there. Increasing trend or decreasing trend. Reasonableness test. Now, reasonableness test cannot go with the data. It has to go with situations. For example, an idli which you can pay 10 rupees on the roadside, if you go to a 5-star hotel, you have to pay 500 rupees. Now, there it is reasonable because of the circumstances. Clear? So, this is done by comparing certain items or balances with other accounts or balances. Example, raw material consumption to production quantity. Percentage of wastage and scrap against production raw material consumption, WIP based on material issued. You can also use this for example, traveling expenses, rickshaw expenses. Early morning if you go and ask any rickshaw guy, he'll charge 100 rupees, 400 rupees, etc. But the same during the daytime, if you put up a meter, it will be lesser cost. Now both are reasonable according to the situation. Then we have something called as ratio analysis. This technique calculates different ratios between various items in order to study their relationship, like GP ratio, receivable turnover ratio, this data turnover, inventory turnover, etc. Sources, from where I can get the data: interim financial information, quarterly financial statements, budgets, management accounts, non-financial information. These are the sources from where I can get information and then I can analyze. Clear? So these are the three tools. Okay, this is nothing but source. This is not a tools or technique. This is nothing but source. Okay, this is your essay 520, which talks about analytical procedure. Next we'll talk about is scrutiny of trial balance and grouping schedule. Now what do you mean by trial balance? What do you mean by grouping schedule? See, trial balance is nothing but all ledger balances put into one statement form. Some will be debit, some will be credit. Right? So throughout the year, whatever transaction has happened, at the end of that particular period, the financial year, at the end of 31st March, we need to create trial balance. So trial balance is a previous step of financial statements. So after trial balance only financial statements are prepared. So if you have to prepare financial statements, we have to prepare trial balance. And who should prepare trial balance? Management. We are supposed to check the trial balance whether it is prepared properly or not. So what we should see in trial balance, we should only see certain things, like for example, amount whatever has been entered in trial balance should be as per books, not as per anything else. Should be strictly as per books. Clear? That is number one. Number two, the amounts should be without any adjustments, just bringing and putting it into the statement. Number three, the terms and all whatever they have used should be as per the law or regulation or GAPs, generally accepted principles. These are the few examples which I gave you as to where we play an important role as chartered accountants or as cost accountants, what we are supposed to check. So what is trial balance? It's a statement of debit and credit balances prepared primarily to test first and arithmetical accuracy before financial statements. It is generally prepared at the end of accounting period. It could be month, quarter or year. Clear? What we should check? Prepared after the cutoff date only. Clear? Prepared after the cutoff. That means as on the cutoff date, 31st March means as on 31st March only trial balance should be prepared. Clear? Next, the codification is prepared properly, adhered, meaning what? The codes, the wordings, the type of terminologies you have used should be as appropriate. Clear? It is prepared strictly based on as the books written, meaning without any adjustment. What is there in the books only that should be reflected. Before the grouping schedule is prepared, the accounts are corrected based on any adverse observation. So after trial balance, grouping, after grouping, financial statements. Okay. So this is your trial balance, because furniture, fixtures, car, building, everything will be individual balances. So from there what we do? We group. Now furniture, plant and machinery, land, car, everything will put under PPE. So that bringing individual and putting it in the respective group is what we call as grouping schedule. So first trial balance will be prepared, then grouping schedule will be prepared, then financial statements will be prepared. So first we talk about trial balance, all the balances. Now this is the previous stage of grouping schedule. Now we'll come to the grouping schedule. So what is grouping schedule? Clusters of ledger account. Clusters means a group of ledger account under specified account groups. One normal heading will be given and all related items will be put in that. For example, like I said, furniture, land, PP, your car, plant and machinery, all will come under property, plant and equipments. Clear? Debtors and bills receivable will come under trade receivables. So we have to create a group, okay, because in financial statements, how can you give individual items? Trial balance can be for like 40-50 pages. So balance sheet will go for 40-50 pages. No, it should not go like that. Understood? That's called grouping schedule. Okay. This is an essential step before proceeding forward to draft the financial statement. What is the objective? Compilation should be according to the line items prescribed under the relevant regulation, because if you see accounting standard, certain banking regulation, they will tell you where to put what amount. For example, last year in Caro, you will see unrecorded income will be there. That unrecorded income, where we should put? We should put in prior period items. Now, where is it prior period items? It is there in the financial statements. Clear? Preparation of notes to accounts and clustering ledger should comply with disclosure requirement by respective law and regulation. So, why we are doing all these things? It should match with the law or regulation. Randomly, we cannot put it in FS. Clear? Now, generally, previously, if you see one T format, you will put under fixed assets, everything you will put. Now, it is not like that. Now, it is non-current assets, current assets. Under non-current, you have tangible, you have intangible, PP, etc. Then, exercising budgetary controls both at granular level, means individual small level, and group of accounts level should be as per forecasting, budgeting should be as per the process. So even when you are putting up the budgets, the group should be created properly. Automating presentation of financial analysis required for different purposes and by different stakeholders. Because of that, see, when we give groups, analysis can be made better. Clear? If you individually give everything, then the stakeholder has to sit and do everything. Okay? What is my role in this, sir? I should see whether the composition has been adhered. Adhered means followed. Composition has been followed. Then, composition for various line items has been decided only by the person authorized for this purpose. Randomly, people should not be able to do it. Only proper authorized people. Okay? Next. Customization of accounting software has been done to meet organizations' accounting and reporting requirements. Because even in software, you have to tell them, see, these all should come under debtors, and the debtor should come under current assets. Imagine debtor goes to fixed assets. Total of the assets will be remaining same, but the group is wrong. Okay. The composition has not been altered without appropriate authorization triggered by legal or regulatory authority. So, the group you can't change unless and until law asks you to change. If law only has changed, then only we can change. Otherwise, we should not change. This is important. Try to remember this. Next, it helps to confirm that composition of individual line item are in compliance with organization's policies and laws and regulations. It helps you to administer suitable procedures including relational analysis, variables, stage-wise operating results, etc. So basically, because of group, my analysis can be better, and I need to ensure that the group is created as per the law and regulation, whatever law has told. See here, general account code is non-current assets, primary group is PP, under PP you will have these. Right now, under non-current asset we have intangible, under intangible we will have these, under non-current asset we will have investment, under investment we will have all these. So this is what we call as grouping. Right? Primary code will be there, then we will have primary group, and then we will have secondary group. So this is what we call as grouping schedule. Right? This is a revision of your next unit, that is sampling, analytical procedure, scrutiny of trial balance. Therefore, this unit also is done. Clear. Now we will be moving on to the next unit, that is your audit risk, assessment of audit risk, internal check, internal control. Here more of internal control points are there. So we will be talking about that particular concept right now. So next concept is unit number 4, audit risk, assessment of audit risk, internal check, internal control, internal audit, etc. We'll be doing that. Where you have internal control on a bigger rate and audit risk at a smaller rate. Right. So what is audit risk? It refers to the risk that you give an inappropriate opinion when the financial statements are materially misstated. So when the financial statements are absolutely wrong, you go and tell that financial statements are good. That type of risk is what we call as audit risk. Now, why does this happen? It's because you did not see the right transactions there, you did not check properly, and that's why you are going out and telling that financial statements are very good, but actually financial statements are bad. This risk is what we call as audit risk. You giving inappropriate opinion when the financial statements are materially misstated. When the financial statements are materially misstated, you generally have to give modified opinion. Okay, but inappropriate opinion you'll give as unmodified opinion. You'll give the best opinion when the things are not good. In other words, it's the risk that you fail to express an appropriate opinion on the financial statements of the entity. Now see here, A spent 50 lakhs to repair a machinery. The repair was likely to improve the capacity by 30%. Accordingly, the cost should be capitalized and not to be treated as revenue expenditure. Unfortunately, the accountant debited the amount to repairs and maintenance and changed the same as revenue expenditure in the statement of P&L. Now, what you should do, you should have checked this and taken it out of the P&L and put it in the balance sheet. But what did you do? While auditing, you overlooked the same and you did not report anything regarding the error. In this situation, the opinion is inappropriate, resulting into audit risk. Clear? What is not audit risk? You giving wrong opinion when the financial statement does not have any misstatement. That cannot happen. Clear? It does not include the risk that you may express an opinion that financial statements are materially misstated when actually they are not so. Why and how? See, when the things are not good, you may not have checked it. So you go out and tell that everything is fine, and management will also not have any problem. Imagine when the financial statements are very good, no misstatements at all. Even if you check, you will not find any misstatement. Even if you don't check, you will not find any misstatement. How can you go out and tell that financial statements are wrong when actually it is correct? Not possible? Yes. That is exactly why we are telling it does not include the risk that you may express an opinion that FS is wrong when actually FS is not wrong. Second thing is business risk is not included. Competition went wrong. Your marketing went wrong. All these things, litigation, somebody put a case on you, all these things are not called as audit risk. So audit risk is nothing but you going out and telling that things are good when things are bad. That is risk. You going out and telling that things are good when things are bad. That is risk. But if you go out and tell that things are bad when the things are good, is not possible. Clear? So types of audit risk, basically two components. Audit risk is equal to two things, ROMM multiplied by detection risk. Remember, risk always multiplies and doesn't add up. So types of audit risk, we'll have two components here, ROMM, and then we have something called as detection risk. Now what is ROMM? Full form is risk of material misstatement, but that is not it. Clear? What is ROMM? It may be defined as a risk that financial statements are materially misstated prior to the audit exercise, either due to any unintentional error or organized fraud. So basically, financial statement, even before I start the audit, whatever errors and frauds are there, so that level is what we call as risk of material misstatement. So ROMM can be due to fraud, ROMM can be due to error, right? So here we have to see what is ROMM. It is nothing but risk that financial statements are wrong because of errors and fraud before I start the audit. If the risk is higher, I should audit more. If the risk is lower, I will audit less. Okay. Yes. Right. Now this may exist at two levels. One is called overall financial statement level and one is called at assertion level. Overall financial statement level means what? Now management having fraudulent mindset, that also will contribute to ROMM. Management is doing business in cash, that will also be contributing to the fraud, right? So it refers to the possibility that misstatement relates pervasively to the financial statements as a whole and may potentially affect multiple assertions. Pervasive, I already told in the regular class also, right? Now even in this, pervasively means what? Affecting many areas, doesn't affect one area. That's called pervasive. More about it in reporting, you go and see. Okay. Now pervasive means what? Not affecting one place but affecting multiple areas. So any such error or any such risk where it doesn't affect one particular place but it affects multiple places, that type of risk is what we call as risk at overall financial statement level. Like nature of the company, transactions that you're doing, clear, bad accountant you're having, management attitude, all these will affect the financial statements as a whole. It doesn't affect one transaction but it affects multiple transactions. Then we have at assertion level. Assertion level is nothing but every transaction. At every transaction, every balance and every information that we are disclosing, the misstatement may exist while classifying the transaction. Now revenue classified into capital, assertion level, clear? Then 1 lakh entered as 110,000, assertion level, that is calculating the balance and disclosing the information. Disclose half the information. Everything is correct, but disclose half the information, assertion level, right? Now ROMM has two components, one is called IR and one is called CR, inherent risk and control risk. Now we need to understand in this particular aspect saying what? Number one, inherent risk. Inherent risk means what? This refers to the possibility of material misstatement due to complex transaction or even due to fraud. Transactions are so complex that we can't do anything about it, right? Accordingly, this risk may be higher for some class of transaction. For example, transactions such as fire damage or acquiring another company are non-recurring, and hence the risk of focusing too much or too little on the unique event may be there. So it refers to the possibility, not it will happen, possibility that misstatement can happen due to complex transaction or even due to fraud. Inherent, can't do anything about it. Some people are in such a way that they get angry for small things. Now you can't do anything about it. That's inherent feature of them. By birth they have got that particular feature. You can't do anything with respect to that. You have to either accept them or you have to reject them, right? Similarly, clients also will have inherent risk depending upon the business, right? Now we need to see whether that when we put more procedures, we'll be able to at least detect them and correct them, right? So that is why we are talking that ROMM has inherent risk. It is, now remember this, ROMM is never our responsibility. It is always management's responsibility. They should bring it down. If they don't bring it down, what we should do? We should at least check and go and tell them these are your problems. You have to bring it down. Clear? So inherent risk is nothing but possibility of material misstatement due to complex transactions or even due to fraud. Okay. In some cases it is high, in some cases it is low. So wherever it is high, we need to check better. Wherever it is low, we need not check more. Then comes control risk. It is possibility of misstatement due to ineffective design, implementation and maintenance of ICS. Meaning you put controls, but the control is not working at all. It is weak. In such cases, control risk will automatically increase. For example, imagine there is a business. Now there is a business which is running through cash. Now there is an inherent risk that cash can be stolen, can't do anything with respect to that. But can I put internal control system for that? Yes. Put a trustworthy person to handle cash, or remove the cash and put UPI. Even then you can't avoid, because some will say I don't have UPI, I'll pay only cash. So that is called inherent risk. You can't do anything. But can I put systems there? Can I control it? Yes. Now imagine you put CC camera, you put a trustworthy person to handle cash. That will only stole. What is the point of putting ICS? Your ICS also is not working fine. You have to change your ICS. Clear? Therefore, sound internal control system significantly reduces this risk. Therefore, put a better ICS. In ICS, you have multiple types. You have to put a better ICS. Clear? ICS can reduce but not eliminate the risk completely, because obviously even ICS will have inherent limitations. Right? Then comes the detection risk, where auditor's risk will be taken care here. Now this is totally in our hands. If we perform our procedures properly and effectively, and strong procedures we put, detection risk can come down, because we are detecting more and more risks. We are detecting more and more errors. We are detecting more and more frauds. This refers to the possibility that procedures applied by the auditor to reduce the risk to an acceptably low level will not be able to detect a misstatement. Meaning, the way you put up the procedure, if it is not detecting the misstatement, then gone. Risk will be increasing. Right? Therefore, you have to apply. Now, for example, if you apply a testing method that checks the accuracy of the invoice rather than occurrence of the particular sale, you may run into a detection risk, because invoice can be accurately prepared, but the transaction happening, you can't create that. So you have to check first whether transaction has occurred or not, rather than focusing on the calculations. Clear? So to reduce the detection risk, what you should do? You should put up a better procedure. You should put up a stronger procedure. You should bring a different tool, so that many errors and frauds you can identify, as many as possible. So you have to bring up effective methods. Okay. Therefore, what is audit risk? It is ROMM into DR. And what is ROMM? IR into CR. Therefore, what is audit risk? IR into CR into DR, or I into C into D, ICD. Understood? Don't change the order. It is IR into CR into DR. It is I into C into D. Okay, that is called audit risk. Totally, that is what we call as audit risk, right? What is audit risk? You giving wrong opinion when the financial statements are bad. That means you're telling good when the financial statements are bad. Two things are excluded. You telling bad when FS are good, not happening. Business risk, not happening. I mean, not your responsibility. Now, basically, audit risk will have two legs. One is called ROMM, one is called DR. What is ROMM? Where the financial statements are materially misstated even before we start the audit because of multiple reasons. Two main components, IR and CR. IR, even before, because of certain complex transaction, misstatement can happen. Because of certain fraud, misstatement can happen. What is control risk? Your ICS is weak, because of that transaction won't be recorded properly. What is detection risk? You not putting the right procedure will give rise to detection risk. Therefore, you should put better procedure for detection risk. Totally all put together will be called as, will be contributing to audit risk. So one of them we have to reduce. Either IR we have to reduce, which we can't do. CR we have to reduce, which again we can't do, because ROMM is management's responsibility. The only thing we can reduce is what? Detection risk, DR. So you have to bring that at a lower level. When we bring that at a lower level, even if ROMM is high, we will be able to detect more and more errors. Therefore, automatically risk will come down. Got it? Yes, this is your concept of audit risk. Next, we'll talk about assessment of audit risk. Assessment is nothing but what? Evaluation. Okay, assessment is nothing but what? Evaluation. So, how do we evaluate the audit risk? So, evaluation of audit risk. For that, there is a relevant standard called SA 315, which talks about identifying and evaluating the ROMM. How? Through understanding three things: the entity, its environment, and its internal control. So, for that, I should perform something called as risk assessment procedure, so that this risk assessment procedure provides a basis for me to identify also, evaluate the risk also. So, if they ask, how do you identify and evaluate the risk? You have to perform risk assessment procedure. So risk assessment procedure is what gives you the basis to identify also, to evaluate the risk as well. Okay. However, it do not provide sufficient appropriate evidence to base the opinion. RAP cannot be used as a basis for opinion. RAP is one of the procedures which you have to perform. RAP alone cannot be forming as a base to give an opinion, but RAP also is one of the basis. It's not just the basis. It doesn't provide SAI, but it helps you in giving you an opinion. Okay, right. The RAP shall include four things: inquiries of management, analytical procedure, observation, and inspection. So this can be asked in MCQ. RAP involves what, or RAP includes what? Number one, inquiry. Number two, analytical procedure. Number three, observation and inspection. Inquiries of whom? Inquiries of management and of others within the entity, who in your judgment may have information. For example, with respect to information technology, go and ask with IT. If with respect to litigation, go and talk to lawyers. If it with respect to a certain technical part of it, go to engineers or go to scientists, etc. in the entity. So probably you can ask from management and those responsible for financial reporting. Also through inquiries of others within the entity with different level of authorities. Likewise, I said lawyers, production manager, sales manager, purchase department manager, you can ask them. Then analytical procedure, we have done a standard called SA 520. After audit sampling, analytical procedure is there. You can go and refer that. Observation and inspection. Observation is nothing but looking at a process, and learning. Inspection is checking the documents, including physical verification of an asset. Okay. So examples of such procedures. What are the examples? Entities operations you can check, documents you can check, reports prepared by management and their premises and plant facilities also you can check. What are the other relevant factors, sir, in case of assessment of RAP or assessment of risk? Information obtained in previous periods. Sir, last year audit when I did, or previous year audit when I did, whatever, I've received certain information. Right, I would have received certain information. Can I use that information in bringing out my conclusion or in evaluating the risk? The answer is yes. So your previous experience with the entity and the procedures performed in the previous audit may provide you the information about such matters as past misstatements, whether they were corrected on timely basis or not, what type of entity it is, what type of environment it is, how is their internal control, what are the changes that have happened. So all these will help you in understanding whether the risk is still the same or risk has increased. Okay. This information may assist the auditor in gaining sufficient understanding of the entity to identify and evaluate the risk. So it's not that every year information will change 100%, but for example, last year you would be using a software. This year also you might be using the same software. So obviously the risk can be the same. So it's not that everywhere you use the same things, but yes, there could be some changes. So wherever changes are not there, we can use it there. Wherever changes are there, probably we'll have to do the examination separately. Okay. Then discussion among the engagement team. The discussion among the team about the weak areas, where in the financial statement there are weak areas where fraud can happen, where error can happen. Those areas we can focus first. Now how will I get to know? Only when my team is experienced. If I am having a new team, then obviously they will not have enough experience to give me inputs. But if I have an experienced team, then yes, they can share their insights based on their knowledge. Team members can exchange information. Yes, they can gain a better understanding, and it provides a basis upon which the team members should communicate and share new information. So basically, when I discuss with my engagement team, I still can get a better clarity. Next, the required understanding of entity environment including internal control. Number one, understanding of the entity environment helps the auditor a lot in evaluating the risk factors such as industry factors, regulations, industry in which the entity operates, specific risk arising from the nature of the business. Meaning what? Sir, see, when this is general they have given, when an organization is operating in a particular industry will have certain factors. Okay, competition will have certain factors, policies will be having certain factors. So these all are a factor for me to understand the entity, and based on that what procedures to put. See, when you go to a doctor will directly not give tablets. He'll first understand you, right? What is your eating habits? Are you vegetarian, non-vegetarian? Are you an alcoholic, smoker, etc.? So he'll understand you first. Then he will understand your environment. Where are you working? Which location? How is your work life? Do you take more stress, etc.? Then he will understand your internal control. Internal control means what are your eating habits? Do you get up early? What is your timetable looking like? Do you exercise? Now these all he'll consider, and then he will tell this is what you're supposed to do. Same logic we are doing, but here for us it is not the patient, here it is a client's organization. So for us the patient is client's organization, client's organization's environment is patient's environment, client's internal control system is patient's internal control system. Okay. Next we have the topic of internal control. Now, internal control. Now what is internal control? Internal control is a process. It's a process which is designed, implemented and maintained by TCWG, BOD management or anyone who is responsible for that particular department. So ICS is a process which is affected by entities, board, management and other personnel. Why? To provide reasonable assurance regarding achievement of the objective. See, basically very simple. You have an objective to achieve. If you have an objective to achieve, you need to put up a process so that you will achieve that objective. For example, your objective is to clear CMA Inter. The objective is to clear CMA Inter, you need to put up a process to study properly. It could be timetable, could be discipline, diet, health, sleep. Everything is considered as internal control system. So it's a process which is affected by the board, management or any other people. Why? To achieve some objectives. What are these objectives? Generally, these are the objectives. Our financial reporting should be reliable. Our operation should be efficient, and we should not do any non-compliance. We should have compliance. Okay. SA 265 defines the system of ICS as policies and procedures adopted by the management to assist in achieving management's objective of ensuring the objectives again same. What is that? Adherence to management policies, safeguarding of assets, prevention and detection of fraud, accuracy and completeness of records, timely preparation of financial information. So basically there are two definitions of ICS. One is general and one is as per SA 265. Generally, it's nothing but a process designed, implemented and maintained by TCWG, that is management, a board or anyone else to achieve their general objectives like financial reporting, correct, operations and compliance. But as per SA 265, same logic only but in a different way. Policies and procedures by management to assist in achieving the management, getting their objectives. What objectives? Management policy should be followed. That's the reason why we put systems, because whatever policies is been put up by the management, the people below the management should follow. Number 2, asset must be safeguarded. Number 3, the fraud and error must be prevented, also must be detected also. Fourth one, the accounting records must be accurate and complete. And last one, financial information should be prepared timely. See, otherwise you'll be doing non-compliance. On the due date you are supposed to file. If you're not filing on due date, then what is the point of having systems? Clear? So systems also should be having that particular feature. Okay, next. Scope of internal control. Now, what all will be covered? Number 1, administrative control. It ensures adherence to management's plans. Therefore, admin control relates to production process, quality control, pricing strategies, etc. See, when we study about internal control, we are talking from organization's point of view, not from our point of view. Organization's point of view. Understood? So, what is the scope? It will ensure that management's policies are being followed. Admin control for every department, admin control will be there. Okay. Now, production. Whether according to how many units has to be produced per day, is there a monitoring process, right? Raw materials supplied to the department, is it done properly or not? Proper quality of raw material has been served or not, right? Then quality control. Every product will be going through a lot of quality control stages. So have you achieved that or not? Pricing strategies, not too costly, not too cheap, but at a reasonable pricing, or whatever is your objective with respect to the pricing, have you achieved or not? Then internal control system can be used for accounting as well. It will ensure recording of transaction in the books as per the established accounting principles, meaning you will not account whatever you want, you will account for what is required. Okay. With respect to maintaining proper books, recording the transactions on a timely basis, checking the arithmetical accuracy and rotation of duties, etc. For all these are all internal control. These all are internal control. It is again divided into 2 subsections. One is called internal check and one is called internal audit. Clear? So accounting control, we have 2 parts, internal check and internal audit. Now let's come to internal check here. See, this is called internal check, and then we have internal audit after this. Okay. Now what is internal check? Internal check is an integral part of the internal control system. It's a process in which the duties of various staff is automatically checked by the next staff while performing the duties. It's a part of accounting control. It's a part of accounting control. Okay. So work of one staff is checked by work of another staff. So according to ICAEW, England and Wales, what they have told, internal check is a system of instituting checks on the day-to-day transaction which operate continuously as part of routine system whereby work of one person is proved independently or is complementary to another, the object being prevention or early detection. So why do we do this? See, they always say prevention is better than cure. Yes, that's why here internal check is a preventive measure. Internal check is what? Preventive measure. Internal check or internal check system may be defined as a system of allocation of duties among the staff in such a manner that chances of any duplicity of the work are eliminated. At the same time, work done by previous employee is checked. So basically again it's a preventive measure. Only duplications, if it is there, we can remove it from day one, and whatever work has been done, we will review it and then only it will go further for the next stage. What are the objectives? Important. What are the objectives? Number 1. Lower the possibility of fraud and errors, meaning reduce the chances of fraud and errors. Identification at an early stage, improving the efficiency of the workforce because time consumed should be less. Allocate the duties and responsibilities in each way that they can easily identified and held responsible. So basically accountability can be improved. Okay, then receive confirmation of facts and entries, both physical as well as financial, by way of presentation and necessary maintenance. So confirmation and maintenance will be good for us. Moral pressure will be there for implementation of continuous. Sir, exercise moral pressure on the workforce, meaning what? Employees will definitely know that my work will be checked. So obviously he will correct his work right from the beginning itself. With the implementation of continuous receive process, or rather we can say review process. Next, reduce the workload of independent auditors by adopting internal check. Obviously, if prevention only is happening, obviously detection will not happen and curing will definitely not be there at all. See, if we all take care, isn't it good for the doctor? If we take care of our health on our own, it's good for the doctor only. Clear? Characteristics, sir. Number one, division of the work. Work will be divided. One person's work will be checked by another person. So there's a division of work. Provision of check. Clear instructions will be there that work performed by any staff must be checked by the next staff. Responsibility will be there. Technology can be used if you want to convert your manual work into automation. You can use technology. Rotation of employees. One person will not do the same job in a month or in a year, because obviously he'll be comfortable in it. So rotation of employees will be there. Control over employees. Generally chances of fraud are higher where there is a direct contact between staff and customers. So manager can keep eyes in those areas. So the reviewer will keep an eye that you are not supposed to talk to the customer directly. Supervision and periodical review. So review can happen once in a month, once in 15 days, whichever is the period that they decide. Advantages to the auditor. What advantages? Saves time and saves cost. You may apply test checking approach. Devotes more time to appraise critical areas. This improves quality of work. To the client, what advantages you have? Reduces chances of errors. Work is distributed. Moral pressure and final accounts are prepared promptly. So these are converted into advantages, some of the points. So read properly. Okay. Now, my liability for relying on internal check system. What is my liability? See, reliance, if you rely, no problem, you can rely. But if you rely, what can happen, sir? If you rely more on internal check and perform test checking rather than detailed checking, he cannot escape his responsibility of any such error or fraud remaining undetected. See, even after you relying on internal check, if there is any error or fraud, you will only be liable. You can't say because I relied on that I'll be exempted. No. You could have done detailed checking, it's your choice. Reliance on an effective internal check system and thereby streamlining the process enables to devote more time in examining the critical area. See, if internal check is not good, it is better you don't rely. But if internal check is good, then if you rely, what will happen? Your time can be saved in that area, and that time you can put it in an important critical area where you can examine more there, right? So definitely reliance on internal check is a very good point. Should we or should we not? It is your question. You can, but if you are relying on it tomorrow, any consequences, you will only be liable. Okay, that is your internal check. Now let's talk about internal audit. Okay, next topic is internal audit. Now, what does internal audit means? Internal check is different, internal audit is different. Internal check is from the management side. Internal audit is also from management side only, but it can be done through an auditor. It is done through an auditor. Internal audit is a part of internal control system. Independent appraisal of various operating activities of the entity. Appraisal means what? Checking here. Verifying or checking. Okay. Now, what is internal audit as per the committee? Internal management function which involves continuous and critical appraisal. Critical means what? Properly. Everything will be checked properly. Continuous means what? Without a break. Every day. 365 days in your working hours, internal audit will happen. Why? With a view to suggest improvements and add value and strengthen the governance mechanism. Basically, why internal audit is conducted is to ensure that I will check whatever is happening in the organization and I can suggest you the improvement so that wherever weak areas are there, it can be improved. Okay, as per SA 610, it says what? It's a function that an entity that performs assurance and consulting activities designed to evaluate and improve the effectiveness of governance, risk management and ICS. So there are two meanings. One is as per the committee of internal audit, one is as per SA 610. As per the committee or as per SA 610, both targets one area. Why do we do internal audit? So that we can improve your operating activities, improve your governance, improve your risk management and improve your internal control system. See, if audit is happening on a daily basis, obviously this is also preventive action only. Right from day one, everything can be taken care. Okay. Scope and objective. So where can we go about with internal audit? It may be assigned specific responsibility for reviewing controls, monitoring their operation and recommending improvements. In an internal control system, you can put this particular concept. In examining financial and operating information, checking whether whatever, because if information only is wrong and the calculation based on that information also will be wrong. So information, if it is correct, rest everything will be taken care. So IAF may be assigned to review the means used to identify, measure, classify and report, and to make specific inquiry including the detailed testing of transaction balances and procedures. So basically what here, sir, what is this, sir? Tell me, sir. See, means to review what? Used to identify, measure, classify and report. So whatever information is coming into the entity, identifying that information, what type of information it is, then measuring, should we put it here, should we put it there, then classification as well as reporting. How are we supposed to report? Because if you report wrongly, then obviously it can lead to a non-compliance. Therefore, any information that comes, it should be, if you put up the internal audit there, that internal audit department will check what type of information it is, identifying the information. Is it ours only, financial, non-financial? Then measure the information, classify the information and reporting the information. Not just that, make specific inquiry into individual items. What type of transaction it is it personal, is it business, clear? And what is the value, when was it done, everything will be checked so that it will be easier for the external auditor or statutory auditor. Next, review of operating activities. Operating activities means what? Business, clear? Whether business has been conducted economically, effectively and efficiently. Efficiently means what? Reduction in the time. Okay, economically means what? Obtain the resources at reasonable level or reasonable price. Not too high also you should pay, not too less also you should pay, because quality will be affected, at a reasonable price. For example, if it is a human resource, at what salary we have to acquire a particular employee, not too high salary, not too less salary also. Okay, so both operating activities we have to do and non-financial activities also internal audit will be checking. Understood? Clear? Okay. Next, review of compliance with laws and regulation, whether the organization is complying with the law or not, because non-compliance will lead to heavy penalties, huge penalties, and it could lead to a lot of legal complications. So internal audit will ensure that compliance is done properly. Risk management. Internal audit will help you in making you understand what is your risk appetite, how much risk can you take. Beyond that you should not go, because obviously the individual employees may not be able to identify where they have to stop taking the risk. So internal auditor will act as a checkpoint whether the risk that you are taking is within the hunger, within the appetite of the organization or not. Governance. What do you mean by governance? What type of policies you are putting in the organization? What type of ethics? What type of culture you are putting in the organization? What type of value you are inculcating in the organization? All these things will be taken care by internal audit. It's not that it is his responsibility, but he can suggest you and give you the improvement there. Clear? These are the 6 areas where internal audit can be used. Correct? What are the advantages of having this internal audit? It will help the management in executing various plans and policies effectively and efficiently. They'll have policies. It's not that without internal audit they'll not put. But with internal audit department suggestions and checking, they can improve their policy implementation. Okay. Then fraud and error can be detected easily. Okay. Prevention. See, once you are detecting, then the next step is what you are going to prevent them. So it's like I said, it's a preventive action. Wastages can be reduced, assets can be safeguarded better because unauthorized access and all, you will not be allowing them. Efficiency can be increased so that time taken for a task will be reduced because we are getting expert advice. Okay. Now in India, what about internal audit, sir? Section 138 of the Companies Act says every listed company must have compulsory internal audit. Unlisted public companies whose PUC is 50 CR or more, turnover 200 CR, loans and borrowings from banks and PFI 100 CR or more, deposits 25 CR or more. Anyone if you satisfy. Remember this way. TLPD, turnover more than or equal to 200 CR, loans more than or equal to 100 CR, paid up capital more than or equal to 50 CR, deposits more than or equal to 25 CR. So just remember 200, keep dividing it by 2. 200 by 2, 100 by 2, 50 by 2, 25. Okay. Then every private company having turnover of 200 CR, loans and borrowings from banks or FI 100 CR or more. Important. Can be asked in the exam. Who can do the internal audit in companies in India? A CA can do, cost accountant can be done. I mean, he can also do internal audit, or such other profession as may be decided by the board. So anyone, CA can be do, what am I talking? CA can do the internal audit, CMA also can do the internal audit, or any other professional decided by the board. Anyone else, it could be even a BCom graduate. Clear? So definitely it doesn't mean that only CA or CMA should do internal audit. Anyone can be, perform this particular activity provided the board agrees for it. What is the relation between internal audit and stat audit, sir? Of course, we have SA 610 which says we can use the work of internal auditor, but if you are using the work of internal auditor, the external auditor shall consider the following factors before you use. What are the following factors important? Number A, whether internal audit is undertaken by an outside agency or by a separate audit department within the entity. So is it a third party or your own employee? Because if it is your own employee, then I may not be able to trust him that easily, but if it is an outside person, then yes, maybe I can trust him properly. Next, the scope of internal audit, management action and internal audit report. See, if his work and my work is not related, then I can't use his work. Experience and qualification of internal auditor. If he is less experienced, then my work will be more. If he is more experienced, my work will be less. Technical compliance by him. If he is technically sound, if he is very good with the technical part of it, then my work will be easy. Otherwise, my work will be difficult. Authority vested on IA and level of management to whom he is accountable. Where is reportable? Obviously, he will be reportable to management only, no? So, how can I believe his report? But if he is a little bit independent and management says do whatever you want, no problem, I'll give you full independence, then I can trust. Whether professional care, is he professional while doing his work? If he is professional, then I can trust his work. Otherwise, I won't be able to trust his work. Okay. So once you evaluate this, if you are satisfied with all the above criteria, then we can decide to use. But if you are deciding to use, discuss your plan or how you can use him as your assistant. You can also discuss saying, see boss, forget about your work. You come to my team, I will tell you how to work for me. Not permanently, only for that audit. Okay. Carefully read his report and obtain understanding of what type of procedures he has put. Because in the report everything will be there. So talk to him, get to know what report he has performed or what procedures he has performed. One documentation will be there. When you read that, you will get to know how he has performed. Perform sufficient procedure on the body of the function as to determine its adequacy for the purpose of your audit. See, like I said, if the department's work is not good enough for you, then there is no point in using that particular work. Imagine if you have prepared a notes. Now I want a note. Okay, I also want to prepare notes. But your notes is not enough for me. Obviously, my work will be more. But if your note is good enough for me, my work will be less. So I have to evaluate first whatever work you have done, is it adequate for my purpose or not? If it is adequate, my work will be reduced. If it is not adequate, I'll have to work more. Inform the management about his decision to rely on the IAF. You have to tell the management, see, I am relying on IAF, so I am taking their report only and preparing my work. Obtain WR from the representation of the management and obtain WR from the IA that they will keep matters confidential. When I am taking him in my team, don't you think I should tell him whatever I tell you, you should not tell anyone. It should be between us. And from management, I will take it in writing, say I am using him as my assistant. You should not interrupt in between. You should not keep coming, give him threats. Clear? So written agreement from the representative. Why? That internal auditors will be allowed to follow the external auditors instructions without their intervention. Moreover, EA also needs to document the basis of his decision. So even I, as external auditor, I should also document saying on what basis I am using the work of internal auditor. Otherwise, it will be easier for people to get away with it. So you should also maintain a document as to on what basis you are depending upon his work. Write down that basis. Tomorrow it will be useful for checking. Clear? Now internal control, internal check and internal audit, will come back to it later. Some audio issue. So why am I doing basic elements of internal control is because I told you that we will be doing internal check and internal audit as a part of internal control. Clear? Now in this case, before heading to risk-based internal audit, we should finish internal control and then go there. I did internal check and internal audit because as an accounting control option, there we had two things: internal audit and internal check. That's why those both we finished. Let's come back to internal control, basic elements. What is basic elements? Financial and other organizational plan. Now here you can use flowcharts to give all the details about the organization, specify the various duties and responsibilities of both management and staff, power of authorization that reside within the various members, meaning who is responsible for what. Now purchase manager is responsible for what, in the accounting department who is responsible for what. So I can use internal control there. Then competent personnel. In any ICS, personnel, people are the most important element. When the people are competent and efficient, the ICS can be operated effectively. So I need to see whether proper people are there in ICS. See, these are basic elements of ICS, meaning parts of ICS. First should be what? Your plan. You should have a proper plan as to where I should put ICS, number one. Number two, in ICS, people are very important. So having competent people is very, very important. Then division of work. In ICS, you have to divide the work and give. In any internal control system, each and every work should be divided into different stages and then it should be allocated. Then separate operational responsibility from record keeping, meaning the one who collects cash should not be given access to the books of accounts because he can manipulate whatever he wants. So operation activity should be different and record keeping should be different. The one who maintains books of accounts should not be given any other responsibility there. Clear? Then separation of custody of assets from accounting, like for example gold and books of account, you should not give it to the same person. Cash and books of account should not be given to the same person. Authorization, meaning whatever transaction must be done, it has to be authorized. Clear? Managerial supervision and review. A monitoring factor is what we call this as monitoring activity. So whatever has been done, it should be checked. Clear? It should be monitored properly. These are the 7 basic elements. Number 1, plans. Number 2, people. Number 3, division. Okay. Number 4, separation. Number 5, again separation. 6 and 7, authorization. And last one is supervision and review. Clear? So plan, people, division, separation, authorization and managerial supervision and review. Okay. What are the objectives? Why do we have to put internal control system? To ensure that transactions are as per authorization of the management only. Random transactions should not be executed and entered. There is a sequence and systematic recording of every transaction with the accurate amount in their respective account, meaning recording should be proper, amount should be proper, account should be proper, period should be proper. Random amount should not be for random person. Debtor should be only for the debtor for that particular period. Ensure all the recorded transactions fairly represent economic events that actually occurred and lawful in nature, meaning fake transactions should not be entered into. Ensure all valid transactions are accurately recorded as per accounting policies. Then safety of assets, reviewing the working of the business, optimum utilization. Clear? Now, as per SA 315, what they have told, transaction should be as per authorization, same logic. Clear? Unauthorized use should not be there. Assets should be verified at frequent intervals, and transactions are recorded in a proper way. You just remember these 7 points, keywords you remember wherever I have highlighted, that should be good enough for your exams. Advantages. Why do we need to have internal control, sir? A good internal control system ensures that resources are utilized only for their intended purposes and unauthorized use should not be done. Now, systems or Wi-Fi, for example. Wi-Fi should be used only for the office purposes. If you are using it for personal purposes, obviously, then it will not be good culture. Therefore, we need to understand that if ICS is there, passwords will be there for Wi-Fi. Passwords, if it is there, only for authorized people, passwords can be given. Next, prevention of errors and irregularities. Safeguard from irregularities and misappropriation, employee satisfaction and productivity. So basically, ICS will help you in 3 E's: effectiveness, efficiency and economy. Number 2, errors and irregularities can be prevented. Then safeguard from irregularities or misappropriation, meaning what? Protection of the resources, and employee satisfaction and productivity. Of course, when we put monitoring feature, it will be an employee will be reviewed. If he's taking more time, we can suggest some measures to reduce that time, so his productivity will be improved. And obviously, if you're giving the right person the right job, even he'll be satisfied. These are the 4 advantages. Okay. Next, types of internal control. We have preventive control, we have detective control. Generally, we also have corrective control, but here only 2 things they have given. One is called preventive control, one is called detective control. What is preventive control? These are designed to discourage errors from occurring, meaning we will not let it happen. That's called preventive. Now, vaccination is a preventive control. You are preventing the virus disrupting your system. It's not that after the virus attacks you take injection. That is corrective control. Clear? We are correcting that. Clear? So preventive control is we do it even before the event happens, like segregation of duty, approval, authorization and security of the asset. Security can be preventive also, can be detective also. This you can ask in MCQ. Okay. Next comes detective control. Here whatever error has happened, it is designed to find that. Clear? Like review of performance. Whatever work you have done, if you review that, that's called detective control. Reconciliation, finding why there is a difference. Physical verification of inventories, whether inventory is there or not. If it is there, how much it is there and how much it is not there. These all are detective control. Again, this can be asked in MCQ for 2 marks. Okay. Yes, that is with respect to your types of internal control. Now we'll be talking about techniques for evaluation of internal controls. What are the techniques we have to evaluate, available for us to evaluate internal control system? First is narrative record. What is narrative record? Remember, these are the keywords in MCQ. Exhaustive description. Exhaustive means what? Complete, 100%, in detail. Everything will be told about internal control system in this report. It is appropriate for where formal control system is lacking and in case of small businesses. In large businesses and all, exhaustive doesn't work out. Gaps in the control systems are difficult to identify. Therefore, narrative record is suitable for small businesses. Checklist. Second one is checklist. This, what is checklist, sir? It is here. It is not meant to be absolute but informative when reviewing controls. In fact, it is a series of instructions and questions. Remember this. Rather than this, you remember the third point. Series of instructions and questions which the auditor or the audit staff must follow and answer. Generally here the answer will be yes, no or not applicable, and you have to initial the space against the instruction. So imagine you write yes here and then you initial it here like this. Clear? Okay. Next, flowchart. In flowchart, what happens? It's a pictorial representation, graphical representation depicting various elements. It helps in giving concise and comprehensive view. It gives short but everything is covered. Clear? The proper flowchart will depict the process of raising documents, people involved, everything, but in a graphical manner. It is more attentive, it is more attractive. Clear? It becomes the process, evaluation process becomes easier as a broad picture of all the controls can be gauged in a glimpse. So we'll get a nice bird's eye view. Clear? Understood. Next we have is internal control questionnaire. See, questionnaire in checklist you have instructions also, you may have questions also, whereas in case of questionnaire generally it is only the questions and not instructions. In checklist you may have instructions and questions. Here in questionnaire only and only questions. Most widely used method for collecting information. It has a pre-designed format. Answer will be yes or no, but if it is yes then it means satisfactory, no means it indicates a weakness. However, not always the questionnaire is designed in yes or no format. It may not provide adequate information. Therefore, questionnaire may receive descriptive responses also. So yes, no, and with details also can be prepared. Now, which is best? It is auditor's choice. Now, there is one particular topic that they have given. Technically, they should have given with all combinations, but they have told what is the difference between checklist and internal control questionnaire. Checklist is issued at the commencement of the audit and reported back after completion of the audit, whereas questionnaire can be issued at any point of time. It is checklist is issued to whom? Audit staff, whereas questionnaire is issued to whom? Various people in the organization. So we prepare the question and give it to the management. Management should fill that and give it to me. Here instructions, here questions. Objective works as a guideline for audit staff, so no major issues remain unchecked. Here used to collect information to know about internal control system and evaluate the weakness. Now, what are the inherent limitations? Important. Inherent limitations. Number one, breakdowns, meaning what? Sir, employees may misunderstand the instructions or commit mistakes. What can we do? Errors may result from application of new technology. Technology is good, but you don't know how to use it. Limitations. Clear? Judgment. At the end of the day, decisions are made with human judgment under pressure. Can't do anything. System may be good. ChatGPT system is good, but you are taking wrong decision. Human beings are there. What can we do? Management override. The one who put the systems only can break the systems, can breach the systems. What can we do? Right? So high level personnel may be able to override prescribed policies and procedures for personal gain or advantage. Internal control system may become ineffective if collusion means joining together to do fraud. Two employees joining together to do a fraud, it's called collusion. Control over common business activity. It is suitable for common businesses, meaning what? If it is a complex business, it is very difficult to put internal control system there. For common general businesses, we can put internal control system, absolutely no problem, but it is a limitation. We can't put everywhere. Then system is very expensive, therefore not everyone will be able to afford it. Okay, this is important in the exam. Please be careful with respect to inherent limitations. Okay, now let's talk about risk-based internal audit. See, the name goes risk-based internal audit. That means internal audit specifically targeting the risk management part. Okay. Now, here if you see, traditional internal audit only provides control assurance based on routine audit, but RBIA, risk-based internal audit, provides assurance on effectiveness of risk management in addition to control assurance. So basically, the target is to give you ideas about how much risk are you taking, is it beyond your appetite or not. Here RBIA allows internal audit to provide assurance to the board that risk management processes are managing risks effectively or not. So basically, risk management, governance and internal control system, three activities internal audit will do. Specifically here we are talking about risk management systems, whether the organization is handling the risk management properly or not, whether the risk management systems are effectively there or not. So it gives a larger role in your risk reduction program. Beyond simply diagnosing the problems, they are also part of creation of effective controls and maintaining the efforts, management efforts over time, keeping it in the check. See, for example, sugar, blood sugar, it should not go beyond a certain level, right? So obviously there should be some diet. Now this is like that risk-based diet, internal audit for that particular risk. We will keep it within the appetite. By following RBIA, audit should be able to conclude that management has identified, evaluated and responded to the risk, and above the risk level as well as below the risk appetite. Risk should be responded. The responses are effective but not excessive in managing the inherent risk. Residual risk are not in line with risk appetite. Action is being taken to remedy the same. Meaning what type of risk, how management is responding to all risk above the level and below the level. Risk management system, the response is effective. Third, the residual risks are not in line with the risk appetite. If it is like that, action should be taken to remedy. In case of any risk which is not yours, you have to take action to eliminate that. Risk management processes, including the effectiveness of responses and completion of actions, are being monitored by management, and to ensure they continue to operate effectively, risks, responses and action are being properly classified and reported. So what do you mean by all these five, sir? One by one, see here. By following RBIA, you should be able to conclude, we will be able to conclude that management has identified any risk. Number one. So here it is identification. Number two, the responses are effective but not excessive in managing the inherent risk within the risk appetite. Response, evaluation. Where residual risks are not in line with risk appetite, action being taken to remedy unknown risk, or rather, if I write unknown, inappropriate risk. Then risk management process, including the effectiveness of responses and completion of actions, are being monitored. So responses and actions. Okay. And fifth, risk, responses and actions are being properly classified and reported. So classification and reporting. So because of all these things, we will be able to conclude, because of risk base, we will be able to conclude whether risk is identified, whether response is given properly or not. Any residual risk if it is not appropriate, we should remove them, and whatever actions have been taken, is it monitored properly or not, otherwise it can affect our business. This will help the audit to provide the board with assurance that it needs on three areas. So because of this, the RBIA concept, the internal auditors can tell the board where they have to improve. Which areas? Risk management process, both design and how they are working, design and effectiveness. Okay. Then management of those risks classified as key, including the effectiveness of control and responses to them. So key risks, how the management system is monitoring and how it is managing them. Complete and accurate appropriate reporting and classification of risk, which is high, which is moderate, which is low, which are the key risks. Those giving the classification to the management, it will be much helpful. What are the advantages? Question. Consistency. What does the consistency means? Developing a consistent and comprehensive approach makes it easier for organization to adapt to changing conditions, because continuous evaluation when it is happening, whatever changes are there, according to that in the organization, the process keeps on changing, the responses can be dynamic. Okay. Then transparency. A risk-based approach to audit enables the internal auditors to identify risks correctly and allows management to put the right internal controls for the best performance. This provides better understanding of the risks and enables organization to manage. See, when internal auditors are identifying the risk, it is more useful for the management to put better controls. They'll identify and report, they can put better controls. Specificity means what? Ranking and mapping risks with RBI will allocate activity and funds to the areas that requires more attention. Key areas or important risks, key risks and important risks are there. No, there we can put our resources rather than without knowing which risk is a key risk and putting money everywhere. Okay, this is a plan. Clear? Now just pause it and read it. It starts from here. Okay, it starts from here. First, you define objective criteria and risk appetite. Then understand the environment, prepare audit universe, identify the risk, filter the risk under acceptable and under tolerance, categorize and link to areas, risk prioritizing and rating, summarize risks for each area, evaluate the environment. How this is a risk, but if the environment is weak, this risk will enter the environment and disrupt it. Then derive residual risk rating. How big is a residual risk rating? If it is more important, actions has to be taken. Derive frequency of audit, consistency of audit or occurrence. Develop a plan, update the RBIA plan, then reassess the environment, allocate resources, approval from committee. So this is how the plan works. Okay, it starts from here, it goes like this. Okay, yes. So after assessing control environment, residual risk, frequency, developing the plan, get the plan approved, get the plan approved, allocate the resources, re-evaluate the risk and update your RBIAP every now and then. Again, it will come back here. Clear for the new client. Right? Again, for your revision purpose, again, let's revise. What is the first one? Defining the objective. Once the objective is defined, understand the environment, then prepare audit universe. Once you prepare the population of audit, identify what risk can affect that particular your universe. Then filter that risk. Once you filter that risk, categorize which can be high, which can be low, which can be moderate. Clear? Then prioritize and rate. High risk should be prioritized first. Clear? Then summarize the risk for each audit area, for purchase, for sales, for marketing, for advertising. Prioritize. And once that is done, the environment you check there. If the environment is weaker, these risks will disrupt. Right? Once that is done, you identified all the risk. Now everything comes under residual, the rest of it. Check whether residual risk is important or not. Then develop a plan, get that plan approved from the committee. Then allocate resources to the who should audit what, and then keep evaluating the risk and keep updating your plan. Next comes IFC and ICOFR, internal financial control and internal control over financial reporting. Next is IFC and ICOFR. IFC talks about internal financial control and ICOFR is internal control over financial reporting. Now, what do you mean by IFC and ICOFR? IFC, as per section 134, subsection 5, clause E, says its policies and procedures adopted by the company for ensuring orderly and efficient conduct of business. So basically, to improve their business, to improve their operations, asset safeguarding, compliance, reliability, all these things, they put internal financial control. See, remember, internal control is a big concept. Okay, internal control is a big concept. Then, internal financial control is the smaller concept. Then we have internal control over financial reporting. So this is ICS, this is IFC, and this is IFCFR or ICOFR. Okay. So what they are trying to tell, this particular part which we call as ICS. This is a bigger concept. So here we cover everything for the organization. All organization department ka safeguarding, business, everything will be covered under ICS. IFC specifically talks about what? Asset safeguarding, frauds and error prevention and detection, accounting records, financial information. So basically with respect to accounts, finance and all, it will come under IFC. Okay, so IFC talks about financial control alone. Right? ICOFR on the other hand is specifically with respect to preparation and presentation of financial statements alone. Therefore, this is more specific. This is only with respect to how do we prepare and how do we present the financial statements. Okay. So we are talking here is not about ICS. We are talking about IFC and ICOFR. So IFC policies and procedures targeting these: adherence to company's policies. People should follow company's policy. Safeguarding of assets. Here you will never see operations. Operations comes under here. ICS for operations, for business performance is here. IFC specifically, if you see everywhere, safeguarding of assets, prevention and detection of frauds and error, accuracy and completeness of accounting records, timely preparation of reliable financial information. Again, here financial statements is not there. Here at a bigger level, financial information, everything, all finances. Whereas ICOFR specifically talks about financial reporting. Okay, if you see here, process designed to provide reasonable assurance regarding reliability of financial reporting and preparation of financial statements. For which purposes? External purposes. So ICOFR or IFCFR is specifically for financial reporting and financial statements. Okay, right, sir. Now what about the requirement? For listed entities only, your board of directors, when they prepare a DRS, Director's Responsibility Statement, in that you have to clearly say whether have you laid down IFC to be followed by the company and such controls are adequate and operating effectively. This is in case of Director's Responsibility Statement they have to declare. For all entities, whether it is listed or unlisted, auditors, they should also report, in their report they should state whether the company has IFC and whether it is operating effectively or not. And the BOD report also should contain the details of IFC. So basically, for unlisted company or listed company, every company has to put IFC, and as an auditor I'm supposed to mention it. But for listed entities only, Director's Responsibility Statement specifically has to be given with IFC point. Okay. For all companies having independent directors, whichever company has independent directors, as per section 149 subsection 7, the directors should satisfy themselves on the integrity of information. Which director? Independent director should satisfy themselves on integrity of financial information and ensure that financial controls and systems of risk management are robust and defensible. So independent director should go and check whether the integrity of financial information, what integrity means, the authenticity, the trueness of the data, and ensure that the control systems are properly put. Robust means strong, defensible means it can defend anything. Then for all entities having audit committee, if you have audit committee, then the audit committee may call for comments of auditors about internal control system before submission to the board. Now audit committee should submit the report to the board. Right? Now before submitting the report to the board, audit committee can call auditors' comments on internal control system, asking how is the internal control system, please give us more inputs. They can take those inputs and then they can submit the report to the board of directors. So if you have audit committee also, if you have independent directors also, if you are a company, basically IFC is applicable. But if you are a listed company, one extra compliance is there where under your director's responsibility statement you have to specify with respect to your systems. Now what is the benefit here? Important. Senior management accountability, can hold them responsible, number one. Number two, improved controls over financial reporting process. Non-compliance won't be there, left, right, center, you give your own reporting, that will not happen. Investors' confidence will improve. Openness and transparency will be there. Accountability to operational management, we can hold those people responsible exactly as to who is supposed to be held responsible if things go wrong. Then improvements in board, committee and senior management. Obviously when they get inputs automatically, that also improvement will happen. Accuracy and reliable statements, financial statements, because we are supposed to put controls on financial reporting as well as financial statements, so errors can be reduced. Making audits more comprehensive. Comprehensive means what? Detailed. Clear? Understood? Right, sir. Let me highlight keywords for you. Accountability, controlled improvement, investors' confidence, openness and transparency, accountability, improvements, accurate and reliable FS, more comprehensive. Clear? Now IFC also becomes important as they help derive values in the form of, how will it help? How will IFC help in deriving values? In the form of fresh independent look at key business processes. So every processes can be looked at a different perspective from now onwards. Potential operating process opportunities, where all opportunities are there, we can identify them. Updated formal centralized and managed IFC documentation for the company. So we get updated documentation. Which documentation? Control documentation. Then improvements in board, committee and senior management. Again, IFC also becomes important as they help derive values in the form of, how will it help? How will IFC help in deriving values? In the form of fresh independent look at key business processes. So every processes can be looked at a different perspective from now onwards. Potential operating process opportunities, where all opportunities are there, we can identify them. Updated formal centralized and managed IFC documentation for the company. So we get It will support CEO and CFO certifications. Control environment can be improved, thereby mitigating the risk. What is mitigating means? Managing. Or reducing. Then better understanding of inherent and residual risk. Rationalizing the number of controls across organization, moving to smart and automated controls. Rationalization means logic. Applying logic. Now, because of IFC, we'll be able to understand where we can put automated and where we can put manual. Clear? Wherever there is high risk, we can put automated and reduce manual. Of course, manual will be there. We can't eliminate totally. Okay. In standardizing policies and procedures for multi-location, multi-businesses, it can help. Fostering a control-conscious work culture for people behind controls. Control-conscious work culture means they'll know that whatever they are doing, it will be controlled by the top management, it will be reviewed by the top management, therefore work ethics can be better. Providing assurance to CEO, CFO as well as improved business performance. Clear? So IFC is helping in deriving values in multiple forms. These are the forms. In what form I can derive value because of IFC? If I install IFC, these are the areas where it will give me benefits. Now, what is IFC over financial reporting, or IFCFR or ICOFR? Internal control over financial reporting. Now, you directly come to point number 3. What is IFCFR? Is maintenance of financial record, controls over maintenance of financial record, plus authorization of transaction as per the gaps. Transaction, now for example, capital expenses should be authorized, right? Anything more than 20,000 should be authorized. So authorization of the transaction plus safeguarding of assets. Here nowhere we'll be talking about prevention and detection of your non-financial fraud. We will not be talking about your operations. Here we'll not be talking even with respect to your non-compliance. Here we are talking only with respect to 3 things. FR, financial reporting, maintaining the records with respect to the transactions and with respect to the asset. Remember, IFCFR is always focusing on FAT. Focusing on what? FAT. What is FAT? F for financial records, A for assets, and T for transaction. That is what is your point number 2. Okay. See, those policies and procedures with respect to maintenance of records, then transactions are recorded properly as per authorization, prevention and timely detection of unauthorized acquisition, acquiring, using or deleting the assets. Authorized, yes. Unauthorized, not allowed. For that only we put controls. Now, this is important. What is the difference between IFC versus IFCFR or ICOFR? IFC is a concept which is wider in scope. Like I said, remember those 3 circles. IFC is equal to IFCFR plus operational controls and anti-fraud controls. So it is a much wider in scope. IFCOFR covers only those controls which are elements of financial reporting, that is balance sheet, P&L, etc. Clear? It processes like order to cash, procurement to pay, HR, inventory, all these things with respect to financial statements alone is what we call as IFCFR. So very limited scope, whereas IFC is a bigger scope. FR also is there, fraud, anti-fraud controls also is there, business controls also is there. So IFC, in addition to IFCFR, covers functions of the business and controls which safeguards the assets and ensures compliance of policies. So IFC is a bigger, wider scope. IFCFR is a smaller scope. Therefore, it can be said that IFCFR is a concept which is more intended towards users or readers, whereas IFC is more intended towards functions and management. So FR is for outsiders, IFC is for management. Clear? Understood. Now, there is one small quickie topic here. Internal control versus check versus internal audit. Now, if you see, mode of checking in case of internal audit, it is in an internal audit system, each component of work is checked. Every element of the work is checked. Whereas in internal controls, work of one person is automatically checked by others. Internal check operates in routine to doubly check every part of transaction at the time of occurrence and recording of the same. So internal control could be a little different than internal check. What is the objective? Objective is to evaluate the internal control system and to detect frauds and errors, which is one internal audit. Whereas internal control, its objective is to ensure adherence to management policies, asset, prevention of fraud, accuracy, etc. Internal check, on the other hand, is to ensure that no one employee has exclusive control over any transaction. So, totally one exclusive right or control should not be given. The point of time, internal audit system, work is checked after it is done. And internal control simultaneously. Internal check continuously by correlating, meaning when the work is done only. Okay. Here also, if you see, simultaneously means what? With the work, with the conduct of the work, every transaction is checked as soon as it is entered. That means after the entry, it is checked. Whereas here, continuously and correlating it with the work of others. So while someone else is working, that work is checked randomly by others. Right. Next, thrust of the system. It is to detect errors and frauds, which one? Internal audit. Whereas internal control, to prevent the errors. Whereas internal check, to avoid duplication of the work. Clear? Responsibility, division, and avoiding the duplication. Cost involvement. Cost involved in addition to accounting, internal audit, you have to pay internal audit fees. Whereas internal control, it is costly. For small businesses, it is not suitable. Whereas internal check, it does not add to the cost because you just increase the responsibility. Report. Internal auditor submits his reports to the management. Internal control provide for built-in MIS report. It is not specific, specific and separate report should be given. Whereas in case of internal auditor, he has to give a separate report to the management. Internal control, no separate report will be generated, but it will be inbuilt in the MIS. Whereas in case of internal check, summary of day-to-day transactions will be given to the senior. So where separate report will be given? Only in internal audit. Okay. Right. This can be asked for 7 marks, worth it. Okay. Now this is your unit number 4. Unit number 4 under chapter number 6, basic concepts of auditing. Clear? Yes. Now in this, only unit 4, vouching and verification, is not covered in this revision because it's nothing but just reading. Clear? There is no specific concept as such there. Now I know some people will tell that there is concept in that also. There is concept. I am not saying there is no concept, but the revision of that vouching and verification will be like, quickly reading those points, and I think you can definitely handle that on your own, right? But having said that, all the other topics I have I've put my best efforts to give you the best revision that is possible this time. Clear? Don't worry, we will definitely, if you have any queries, you put in the comments, and I'll ensure that those will be replied. Clear? Yes. Right. Okay, so the next topic will be chapter number 8, which talks about auditing of different types of undertakings, where we'll be talking about, there are 6 units in this. Okay, first unit is local self-government. We'll be talking about the local self-government like corporations, municipalities, cantonment committees, right? So these type of things we'll be talking about. Then we have something called as education institutions. Then we have healthcare sectors. Then we have hospitality sectors. It's not hospital sectors, it is hospitality, like movies, theaters, amusement parks, etc. And then we have banks, then we have cooperative societies, and with this our unit number or chapter number 8 will be done. You can expect one question from this for sure. Alright, chapter is a little lengthy, but it is more or less, it is very easy to understand. Okay, and then we will take one by one. Okay, we will not budge everything into one go. One by one we'll be doing it, and we'll be focusing on these key areas or keywords. All right, so first let's talk about local self-government. Local self-government basically is nothing but your municipalities. I hope you know what is municipalities. You know there is something called as like for example, if it is Mangalore, city corporation will be there, Mangalore city corporation will be there. So we are talking about those type of local self governments, where we are not talking about state government exactly, nor we are talking about the central government exactly, but we are talking about the local self-government. So what is the, first you have to understand what is the objective of self-government, then only we can understand what is the audit or how we are supposed to do the audit of it. So let's try and understand what is the objective of it. First objective is See, what is the logic of having local self-government? The city should be clean, right? The rules and regulations of the city will be handled by them. Proper taxes paid to them, right? Then there could be some, let's say, for example, some local government will be handling some local playgrounds or some particular public places where if you have to conduct the functions and all, they will be charging some of the amount as meager amount as rent or something. So that will be their income, right? Now to develop that city, to maintain that city, it could be during Diwali, it could be during any of the festivals or any functions, any events, anything if it is there, or regular maintenance of the city also, it requires some funds. So the question is, when people pay funds to them, what they should do and what is the objective of local self-government? First objective is fairness and correctness. So what do you mean by fairness and correctness? To ensure on the fairness and correctness of contents in the financial statement. So basically, financial statement should give fair view, true and fair view. Clear? So whatever financial statements they are preparing, it should give true and fair view, number one. Number two, internal control should be adequate. Now when I say internal control, what is internal control? Internal control is nothing but a process which is designed and implemented and maintained by the people who are responsible for maintenance of organization. Yes, and obviously to achieve their objective. Like for example, if your objective is to clear CMA Inter, you will also have something called as internal control system, like putting up the timetable, right? Studying on time. At this lot, this subject only I will be studying. This lot, this subject I will be studying. For these subjects, this is a way I'll do first institute material or reference material. Then I'll do questions. Now these all are processes which you put for yourself because you have some objectives to achieve. To achieve that objective, certain processes has to be put up. That is called internal control system. So in local bodies, what internal control system will be there, sir? For payment beyond 10,000, there should be some authorization. Clear? To purchase any asset, there should be some authorization. So in similar lines, whatever internal control systems are there, it should be adequate. Why? Basically to prevent, detect and correct fraud and errors. Clear? To prevent, detect and correct frauds or errors. Okay. Then as usual, if you see that when we put that system, automatically point number 4 will come to detect the frauds and errors, to ensure value of money is fully received on amount spent. See, spending is different, value is different. Price is different, value is different. Value is what we achieve from a particular spending. For example, if I spend let's say 10 rupees on a pencil, what is the value that pencil is going to give me? I can sketch, I can write, yes, I can draw. So what is the value that particular pencil is giving me? That is what we call as value. So whatever amount is spent by local government, the value should be appropriately received. So basically spending should be thoughtful and spending should not be wasteful. Okay. Now what should I see in this? Now this is what you have to focus on. Clear? What should I see? First of all, see whether appointment is in line with the respective regulation of the local body and approved by the appropriate authority. Now, who will appoint the auditors of a local body? Generally, it is state government only, but state government will prepare a list. Clear? List. This list is generally approved by CAG, Comptroller and Auditor General of India. So state government will prepare a list and it will be approved by CG. Although appointment from that list only will be done by state government. Now if your name is there in this list, automatically the state government will appoint you. Okay, automatically in the sense, obviously not automatically, but from that list only appointment will be done. Obtain a detailed understanding of the rules and regulations that governs the operations, especially the financial control and accounting of the organization, because we are here to audit the accounting part of it and not any other part of it. Clear? Although we have something called as execution, performance audit and all, here we'll be sticking to only financial and accounting part of it. Then consult the relevant documents, minutes and resolutions of various meetings of different committees. So if they have multiple committees, check whether they have been minuting all the content, whatever has been discussed in the meeting. So check their minutes, check the resolutions passed. Resolutions is nothing but the decisions taken. This will give us the evidence for the decisions taken. Okay, now with respect to various government schemes, like for example free laptop, free cycle, this, that, so many schemes will be there. So with respect to these various government schemes which are implemented through local bodies, not brought by local bodies. See, local bodies generally will not bring any scheme. Clear? Scheme will be brought by state government or central government. Clear? So whenever they are bringing up the scheme, it will be implemented through local bodies. Obviously, now for example, if chief minister or prime minister brings any scheme, he will not implement on his own. No, they will have people who will implement it. So through local bodies also state government can implement certain projects and schemes. So in those cases, check whether whatever money has been given by the respective government to the local bodies, the utilization of the grant. Grant is nothing but financial assistance. Financial assistance. Appropriate authorization being maintained throughout and adequacy of accounting. So authorization means what? Whenever grant is given to spend, that also we require authorization. That authorization, have they followed or not? Number one, throughout. Number two, whether accounting has been done adequately or not. Clear? Then in case of areas where there could be potential fraud, such as revenue collection, see, whenever revenue is collected, it may not reach the state government on time. Clear? Understood? So obviously in those cases what can happen? Those areas is what we call as gray areas or weak areas. Those areas you have to be little more professionally professional skepticism quality you should have. You should understand what can happen, what type of questions I need to ask. Such things you have to be careful in these areas. Revenue collected may not be equal to revenue deposited. Revenue collected, some leakage can happen, and then only deposit can happen. So we need to understand whether was there any leakage. If yes, is there any person in the local authority who has taken the benefit of it. Clear? Various waiver schemes. Now waiver schemes means what? See, waiver is nothing but forgiving the due. Now imagine now you owe me 10,000 rupees. I waive it off. Waive it off means it's okay, you don't pay me, nothing will happen. That is called waiver. Now the question is, waiver has to be authorized. Clear? Waiver has to be authorized. Randomly, local body person cannot directly say, okay, I'll waive you off, you don't have to pay property tax. Who gave you the authorization to waive off has to be checked. Clear? Use of casual labor, etc. Whenever there is a provision of the funds, the expenditure should be incurred from the provision itself, and it should be authorized by the competent authority. Whenever you are making any provision, could be for expense, could be for payments, any provision what you are making, you have to spend out of the provision. See, for example, now you create an emergency fund or you create something called as medical fund. That means the medical fund should be used only for the medical purposes. You cannot use it anywhere else. Similarly here, any provision, there will be some purpose attached to it. Go and check the purpose, whether they have utilized for the purpose only or not. Then ensure that huge financial expenditure, if it is involved, the schemes are running economically and expected to generate targeted outcome. Now government, this is with respect to your schemes only. Okay, so you can attach with point number D. So in case of schemes, economically means what? Obtaining the resources at a reasonable price. Clear? It could be human resource, it could be any type of resource. We need to obtain it, meaning we should not spend over. When we have any other option, no, then we have to go for a reasonable option, not too cheaper option also, not too expensive option also, but at a reasonable price where our quality can be delivered. Clear? Now this is how you do audit of local self-government. Clear? Right? Okay. Next, let's talk about now audit of organizations in hospitality sector. Clear? Hospitality sector. Now in this, what are the things we are going to see? Number one, restaurants. Number two, travel and tourism. Number three, hotel and guest houses. Number four will be your cinema halls, and number five will be your amusement park like Black Thunder, right? Those things, those five things come under hospitality sectors. First one, let's talk about restaurants. Now, is there a difference between a restaurant and a hotel? Yes. Hotel is a place where you stay. A restaurant is a place where you eat. Okay, so we are talking about restaurant here. So first we'll have to check the total revenue recognized based on daily and monthly sales report. They will generate a daily sale report and monthly sale report. I don't know if you observed, in some of the hotels, the moment you purchase something, they'll put a tick mark after a bill. They'll have a list with numbers, 3 digits, 4 digits, etc. So they'll put a tick mark there. Clear? So and then they'll prepare a daily report as to how many sales has been done. Daily report will be there. Then monthly report also they'll generate. April month, what is the sales? May month, what is the sales, etc. Clear? Yes. Then check that revenue has been realized in cash based on bank statements. Meaning whatever revenue has been realized, generally what they do is, see how it works, today I receive all the cash. Now, whatever cash I receive today, it is risky if I keep in the cash counter. So, what I generally do, next day morning, by 10 o'clock, the previous cash, by 10:30, the previous day's cash will be gone and deposited in the bank. But considering the UPI and other things now, UPI, card payment and all, so cash sales can be there. I'm not saying will not be there, but considerably compared to the previous decade, it has drastically reduced because of UPI payments. But anyway, cash payments are still existing. So in case of cash payments are there, whether they have appropriately deposited, check the bank statements. Bank statement will give you a better clarity on how many how much sales has been done and what is the deposit that they have done. And retention also we should check. Check whether arrears written off, if any, has been duly approved by the person responsible. This is like example, bad debts written off. Bad debts written off. So they can write off bad debts. It's not that they should not write off bad debts, but those writing of the bad debts should be only after authorization. Vouch all payments made to suppliers based on documentary evidences such as order placed, invoices and bank records. That means without no payments made without documents. Meaning anyone's simply coming and asking, sir, actually you're supposed to pay me 2,000. You should not pay that way. There should be some documentary evidence for which that payment has to be made. Clear? Then carefully examine the petty cash book. Petty cash book means, see, for every day, for your could be for your employees, some tea, refreshments, whatever expenses that you're spending on. Clear? For that you have to maintain a separate balance. Check that. Any irregularity should be examined further. Then in case of rent, electricity and other overhead expenses, this is what we can also call as admin expense. Clear? In such cases, vouch the payments. Vouching the payments means checking the payments against certain documentations. Clear? Vouch the payment of salary based on payroll, attendance register and bank records. This also will come under admin expense only. Okay. Then valuation of stock should be checked according to accounting standard 2. Valuation of closing stock should be checked. In hotels generally, in these restaurants, there will be two types of stock. One is what they manufacture. Like for example, dosa, vada, then raw materials will be there, wheat, rice, jaggery, sugar. These are also stock. And then you have these lace packets, chocolate packets. These are also their inventory. So we need to segregate their inventory and then check what is the valuation of such inventory. Large writing of any perishable items should be carefully examined. Now, what is this perishable item? Milk, curds, right, paneer, etc. Now such things has to, these are perishable items. So if these are waived off or written off, you should see whether it is written off intentionally so that there could be misappropriation of assets, or have they done it unintentionally, or actually it is a genuine write-off. Clear? Then conduct physical verification of fixed assets and investment based on the fixed asset register and investment register respectively. Here, what is physical verification means? Going and checking the existence. Existence checking has to be done. Okay. Then check the adequacy of depreciated and its accounting. So basically depreciation has to be checked for fixed assets. Depreciation and its accounting. Okay. Then list of all liabilities and verify based on contracts and arrear bills. So basically J is for liabilities, I is for asset, H is for asset, G is for asset. Now all E, F E and F is for expenses. Then A is for sales. B, C, D is about payments and cash. Here, think it that way. All right. Yes, this is your restaurant one. Right. Let's move on to the next one, travel and tourism. We are talking about, let's say for example, Make My Trip, it could be, or it could be Nirmala Travels, or it could be, let's say, Blue Travels, or it could be Dreamline Travels. All these travels and tourism, how we should audit them. Even they have revenue, therefore collections from customers. What are the basis, sir? Booking details will be there. Counterfoil of receipts if you have issued the receipts, right? Errors if it is there, check at the end of the year. Do they have any arrears? Arrears means what? Receivables which is pending, not yet received. Understood? Clear? Then vouch revenue out of commissions from various companies and tour partners. Now let's say hotel, for example, hotel we are talking about, or any activity companies there. Now for that matter, now what we'll do is, let's say for example, Karthik sir has one tourism concept where I will take all these people to sightseeing and other things and all. So what I'll do, now they can book in for the activity which I am giving, they can book it on, let's say, Make My Trip or some other random app I can list myself. So they can go there and then they select that from this date to this date I want this activity and they can book it. In Thailand, this particular facility is still there. Now in such places, what we need to see? We need to see whether the booking has been done properly or not, number one. What is the payment type, whether it is cash or whether it is after you reach the location you have to pay in cash, or whether online booking only is allowed. So what type of booking is allowed? Then with respect to Make My Trip, Go Ibibo, Ixigo, such places have I listed and are they my partners, tour partners? Clear, check with them. What's the payment made on account of tour bookings divided into air travel, rail, road, hotel accommodation, etc. Now if you see, there is now let's say for example you want to go to Kashmir. Clear? Now if you want to go to Kashmir, there will be one ABC company. Now this company will book everything on behalf of you, you just have to pay. Now Make My Trip also has packages. Clear? Package student will be there. No, you just have to book, you just have to pay one amount. Everything they will handle, right from your air travel, your bus travel, boat travel, two-wheeler, everything they will handle. You just have to pay some amount, like group trips and all you would have seen. Clear? Now if you go here, let me try and give you an idea on that. If you go to makemytrip.com, now if you see, here. Now let's say you want to go to Dubai. Now see, these are just activities. For activities you can book separately. Now more than this, there is one more. Let me give you an idea on that also. Holiday packages. Now if you go to holiday packages, see, Goa, Kerala, Kashmir, Rajasthan, everything they will book. Literally everything they will book. See, starting 67,500 per person for Dubai, Maldives 1,65,000 per person. So if I, let's say for example, I click on the Maldives part, holiday packages I'll get. Okay, see. So photo shoots, snorkeling, kayaking, all these they will only handle. Speedboat transfer, see, round trip, wait, see, airport transfers, round trip flights, everything they will handle. You just have to pay some amount to them. We are talking about those type of travel and tourism. Okay, so we have to check how they made payments to them. Clear? Then vouch transactions with respect to cancellation of bookings. If sometimes it is refundable, sometimes non-refundable. Check that. Refundable or not. Then whatever discounts you have offered to individual customers should be approved by the competent authority. Randomly approval should not be given. Clear? Then all overhead expenses including electricity bills, telephone and broadband bills should be vouched based on the respective bills. So basically again admin expenses. Admin expenses should be checked. Just a minute, device issue. Admin expenses should be checked. Okay. Then verify salary paid to permanent staff based on their payroll. Again, admin expense. Conduct physical verification of asset and liabilities. Now these points are same. GHI. GHIF, it is same. So basically these 5 points is what you need to focus more on. Clear? Now hotels and guest house, so basically this is for your stay and not food thing. Okay, what we should check, same collection from boarders based on their check-in and check-out information, check the register, counterfoils and cash book. Room rent receipt and daily occupancy report. Again, like how theaters also will prepare daily report, normal sales, hotel also, restaurant also will prepare daily report. Even these people will prepare daily report. Check. Ask for proper clarification for differential rent charged from any boarder. Now tariff, depending upon the room type, the rate will be different. Check that. Check whether adjustment of unrealized room rent, meaning what? Sir, accrued but not yet realized. Clear? That means customer is staying but we have not yet received any particular amount from them. Clear? Then cancellation charges at the time of closing of accounts you have to check. Then any special events such as conferences, wedding ceremony and all, it should be checked based on counterfoils of receipts issued. Income from bar, casino, health center, spa, etc. should be obviously they'll give a receipt, so check that receipt. Vouch the rent from the shop situated in the premise of the hotel. For example, let's say currency exchange or something like that. If there is any in the hotel premise, there is any shop, they'll have to pay the rent. Okay. Then with respect to purchase of food material, drink, other materials, basically raw materials, check payments made properly or not. It should be based on orders of contract, invoices, etc. Then salary paid. Contractual employee should be checked. Overhead expenses, valuation of stock, physically present at the time of stock taking, fixed assets and liabilities. Again, if you see here, J, I, H, G, E and F, same points. Same points with respect to salary, with respect to stock, with respect to asset, with respect to liabilities. Then, cinema halls. In case of cinema halls, what you should check? Control over tickets for different denominations. Different type of tickets will be there. Platinum, recliner, gold, diamond. So tickets issuing should be checked properly. Verify unsold tickets are kept under separate custody. See, these things are not applicable for multiplexes because multiplex tickets are issued printed. Right? It is not pre-printed. It is printed from the system then and there when you book, or e-tickets are there. These points are talking about the old theaters where you have first class, second class, Gandhi class, balcony, etc. Yeah. And the custody should be given to a responsible official. Daily sales report they will prepare. Check any advance booking if it is there. Has it been adjusted or not? Any rental income if they receive for special events based on respective contract and counterfoil. Now, for example, what do you mean by this rental income, sir? See, in theaters you would be seeing cafe coffee day or some ice cream shops and all. They are on rent, so they should pay the rent properly. Now, how are they paying rent? It could be percentage wise or it could be monthly fixed revenue. So you have to check what is the rent paid. Clear? In case of sale of drinks, refreshment, etc., again daily sales report should be checked. Entertainment tax collected, which is nothing but now GST. Clear? So it should be properly accounted also, deposited within the due dates. Now, entertainment tax collected but not deposited is a liability. That is, as on 31st March month tax which is collected but not yet paid to the government will be called as a liability. Vouch payments with respect to hiring of films based on relevant contract with the distributor. See, without having a contract with the distributor, you can't play any movie in your theaters. So you have to check the contract with the distributor. Then, with respect to advertisements, there are two types of advertisements. One is called slides, just the slideshow. One is called video. Those are called shorts. Clear? So we need to check. Generally, for the shorts, it will be more. For slideshow, it will be less. So check the pricing and check the agreement with the advertisers. Then, In case of refreshment suppliers, it should be based on again invoices and entries in the cash book. Now for example, you think Coke they manufacture, no, somebody will be supplying them, therefore that supplier, the vendor, with him we need to have some invoice, right? Therefore he will give us invoice, we will pay, make the payment. So that invoice copy is what we are supposed to check. Salary paid is same, physical verification of fixed assets is same. That means again point number K and J is nothing but the same points. Okay. Now let's talk about amusement parks. What is this amusement park, sir? Wonderla you would have heard, right? Black Thunder you would have heard, right? Etc. These type of amusement parks, if it is there, then we need to check. What we need to check, sir? Very simple. Number one, same logic. Just like theaters, control over the tickets of different denominations, different activities will have different tickets. Clear? Now here it could be a printed one. So here custody is very important. So should be kept under proper custody and responsibility of any official. Daily sales report you check. If any advance booking are there, adjustments, sale of drinks, refreshment, etc. should be checked. Advertising with agencies should be checked. Refreshment suppliers, salary paid, physical verification of assets. Basically there is nothing here, everything is very similar. Clear? Now this is your hospitality sector. This is your hospitality sector. Like I said, we have 6 units, out of that 2 is done. Clear? Then we have a healthcare organization, right? After that we have education, and then we have cooperative societies, and then banks. Clear? Yes. Right. So let's move on to the healthcare organization. Next is healthcare organization. So healthcare organization, when we talk about, we are talking about the hospitals. Okay. We are talking about hospitals, clinics, etc. But majorly we are focusing on the hospitals part of it. Okay. So here what do we need to do? Number one, understand the constitution, not constitution of India. The framework. First of all, is it a company? Is it a firm? Is it a trust? Is it a society? So generally hospitals will be floated under trust and societies. Okay. So see, determine its nature and ownership structure. Based on the relevant documents, you can check if it is a company, MOA, AOA, we can check. Study the trust deed. This is in case of trust. In case of trust, there will be board of trustees and they'll have a trust deed. Check that. Partnership agreement if it is a partnership firm, and AOA, MOA if it is a company. For example, Apollo Hospital is a company. Accordingly, identify the rules and regulations relating to management and process of preparation of accounts. So basically we need to focus on this. This is what we want. How are they preparing their accounts? Okay. Then assess the internal control system. Every organization will have an ICS. Like I already mentioned, what is ICS? It's a process to achieve their entity's objectives. So we need to understand what is the process they have put, what type of internal control system they have put. Do they have segregation of duty, or do they have software to manage, billing software, payment software, appointment software? So check their internal control system. Specifically for acquisition and maintenance of the asset, authorization of transaction, and determine the scope of work. Scope means what? Boundary. Scope is nothing but boundary. So check where you can work around these particular organization, because like I said, ICS can be many processes, but we are not focusing on all processes. We want only those processes which are with respect to financial statements related. Okay. Then in case of any meetings that have been occurred, consult the minutes book. Clear? Consult what? Minutes book. Carefully examine the notices and minutes of the meeting of board of directors, managing committee, and other committees such as purchase committee, etc. Any committee, if there is a committee meeting, this meeting will automatically conduct your minutes book. So check whatever discussions have been done in the minutes book and identify the decisions which may affect the accounting. So basically again we are focusing only on accounting part of it. Confirm that decisions have been duly complied with. Whatever decisions you have taken with respect to bank account operation, expenditure should be complied with, meaning there should not be any ultra vires decision, meaning beyond the powers decision. Then now with respect to receipts related, what type of things we have to verify? Number one, If it is a hospital run by the government or local authority, vouch the grants. Grants is nothing but again financial assistance given by the government. So check whether government has given any grant or not. Clear? Based on GO's government order, sanction letter of counterfoil of receipts. Clear? Then vouch collection from patients admitted in the hospital to the paying beds based on patient registrar and counterfoils of receipts or copies of the bill. So obviously patient in hospital generally the cost unit is patient bed days, right? So per ward different types of wards will be there: executive ward, non-executive ward, general ward, AC, luxury. So different types of wards will be there. So according to the wards, check the payments. Various pathological tests based on counterfoils of receipts or copies of bill. Example, blood tests will be there, or urine tests will be there. Clear? Then sir, scanning, all these will be different types of tests. So with respect to every test, they will generate one invoice copy. Check whether that invoice copy has been generated and payment are received according to those invoice copy. Then vouch donations based on counterfoils of receipts. So in case of donations given to the hospitals, they should issue receipts also to the donors. That receipt and the payment should be checked. If the hospitals are having guest houses, assess the collections based on the register, counterfoils of the receipts and accounting entries. In case, very rare, in case if they have guest house, let's say for example for some expert surgeons and all, they'll have a guest house. Or if they only have a guest house where it is let on rent, check whether the rent received from such guest houses have been collected properly. Interest and dividend income should be vouched with respect to the registrars and warrants issued. Legacies and donations which are received for specific purposes should be ensured that income is not utilized for any other purpose. Legacies and donation means, now for example, imagine now legacy. Let's say for example, I have like 1 crore and I will tell 1 crore should be given to the hospital. Specifically when 1 crore is given to the hospital, now when I give that 1 crore, I will give a specific purpose for it. So that purpose, that 1 crore what I am giving you should be utilized for the specific purpose. And that 1 crore when you are investing in an FD or something, let's say now from FD you will receive interest. That interest you should not use anywhere else apart from the specified purposes. Clear? So for my father's name or from my grandfather's name, and I will be giving that 1 crore rupees or 10 crore rupees. Now let him spend that, but only where I have told them to spend. I have asked them to spend. So specific purpose, grants, legacies, donations and all, when it is given, it should be used only for that purposes and not for any other purposes. Now with respect to payments related, what should we check? Number 1, capital expenditure should always be approved and supported by documentary evidence. And see, a thumb rule, remember, in any entity, CapEx, capital expenditure means what? A bigger level of expenditure, right? AC, building, equipment. So these should be approved first. Without approval and authorization and sanction, you cannot spend such huge amount of money. So check whether approval has been given and documentary evidence should be there. Then comes your admin expense, like what? Salary paid, right? Doctor's remuneration should be verified based on list of visits and operations performed. Verify purchase of pathological test kits like that, syringes, x-ray sheets, x-ray plates, all these things, whatever you have purchased on any consumables like cotton, spirit, ointment, should be based on tenders, order placed or invoices received. Any other overhead expense also should be having documentary evidences. Then with respect to assets and liabilities, stock register of medicine, food items check, physical verification of fixed asset, depreciation, liabilities, this is same as others. And then with respect to financial statement, it should be prepared in the manner and format appropriate to the nature, profit taking or NPO and ownership structure of the organization. Example, if it is a company, then schedule 3 should be checked. If it is a trust, then normal format is also good enough. Clear? So check with respect to what organization you are, and according to that organization, whatever is your framework applicable for you, according to that only financial statements should be prepared. Clear? This is with respect to your healthcare organization. Okay. Next, let's talk about educational institutions. So this is like your school, colleges and type of educational institutions. What are we supposed to check? As usual, same. Understand the constitution first, whether it is a company, if yes, what type of company, what is the MOA, what is the AOA says, clear? So check the trust deed, regulation or act under which the institution has been established, and take note of the provisions with respect to maintenance of accounts. Again, the focus is where? Maintenance of accounts. In case of central or state university established, study the regulations framed under the act. University regulations you have to study, because all the schools and colleges has to abide by the university regulations. Then check ICS. Normally these have well organized ICS. So check with respect to what? Acquisition and maintenance of asset, transaction authorization before finalizing the program. So you have to put audit program only after understanding the ICS. Consult the minute book as usual. Committee meetings, board meetings, any meetings if they have conducted, they'll obviously have minutes book. Check the minutes book. Minutes book is the one which gives you the evidence or which gives you the background of the decisions taken. Clear? Then consult the budget allocation to different heads and confirm that all the amount sanctioned beyond budget has been duly approved. Meaning what? Excess spending should be duly approved. Clear? Then verify receipts related transaction. With respect to receipts, what is the receipts? Number one, tuition fees. So basically, although you say tuition fees, it's actually in college, school also it's called tuition fees only. So check the tuition fees with respect to, how do we check? Fee receipt with the fee register to check whether they have been recorded or not. Check the register to identify whether students have paid their fees in due time. If they have given any deposit beyond the due date, which means if the fee is paid beyond the due date, the late fine has been charged or not, and whether the same has been properly recorded. All collections should be deposited in the bank account at the end of the day or the next day generally. Total the column and check whether is there any arrears that are irrecoverable have been written off under the sanction. So basically these are like bad debts. In case of any fees which is yet to be received but not received, and the student has finished the course or left the college, left the school, so in such cases we will call it as a bad debt. So bad debts should be written off, but the writing off should be under proper authority. Okay, then admissions fees. Do they have any admission fee? Of course there will be any admission fee, but how do we check it, sir? Admission slips will be given. Confirm that the amount has been credited to capital fund unless the committee has taken a decision to the contrary. Contrary means against the capital fund, meaning maybe some revolving fund, some other working capital fund could be there. So check with respect to that, where have they used their money. Any other fees with respect to library fees, session fees, development fees, hostel fees, etc. should be checked with respect to the counterfoils given to them, and the fee registered, and ensure that the fees have been accounted in an appropriate heads. Meaning hostel fee should be recorded as hostel fees only. Yes, refreshment fees should be recorded as refreshment fees. Library fees should be recorded as library fees. So respective heading it should be credited to. Any arrears on account of fees, fines have been taken into consideration at the end of the accounting period. All arrears should be considered. Any scholarship and concession, if it is granted by a person, it should be an authorized person. He should be authorized to do so. Unauthorized scholarship is not to be considered. Authorized scholarship only should be considered. Then any dues were recovered before the accounts were closed. Check the caution money whether it is refunded or not. Caution money means nothing but basically refundable deposit. If it is a refundable deposit, it should be shown as liability. In case of government grants, if you have received, check the sanction letter and bank statement, because the money will be credited. Money will be credited to bank account. Clear? Ensure that donation received has been acknowledged and recorded properly in the books of accounts. So whatever donation received should be acknowledged. Means what? There should be one. Check the document documentary evidence, maybe one acknowledgement letter saying we have received your donations. Clear? So one letter as a reply they can give, check that particular letter. Income from letting out institutional properties for what? Parties, annual day functions, or any of such functions. They do, generally they do. The stage, the auditorium will be given for rent, check with respect to the counterfoils. Income from endowment and legacies, again, various people will give this money for different purposes. So if they have given any money from that endowment money only, they'll give endowment prize. Imagine you scored very good marks in one of the subjects. In somebody's name, they'll give you one cash prize, 100 rupee, 500 rupee and all. That's called endowment fund. Okay, if endowment fund is given, it has to be deposited in the respective bank account, and it should be used only for some specific purposes. Okay, then with respect to payments related, what we should check, sir? Salary and wages as usual. Clear? Any arrear salary is there, check whether PF has been deducted properly or not. ESI, TDS, income tax, check whether proper deductions has been done or not. Any expenditure with respect to seminar, conferences, etc. has been accounted for by matching the expenditure against the amount obtained from any organization or sanctioned by the institution itself. Vouch all the regular expenses, admin expense apart from salary. Clear? Then purchase of fixed assets, construction of college building, check. Utilization of grants for fixed assets, library books, etc. Caution money, if there is a refund, check that should be based on receipts and accounting records. Payment for hostel facilities, repairs and maintenance, etc. Investments representing endowment funds are kept separately. I told you it should be kept separately in a bank account. And any income in excess of the price has been accumulated and invested along with the corpus. So you should not use anywhere else. Basically, that money whatever is there, you should not use anywhere else. Understood? Clear? Okay. Then with respect to assets and liabilities, what should we check? Number one, conduct physical verification of tangible as fixed assets as shown in the fixed asset register. Verify investment based on investment register. So for fixed assets, fixed asset register should be there. For investment, investor register should be there. Investment register. My bad. Whether depreciation and amortization has been provided. Depreciation will generally be for tangible asset. Amortization is for intangible assets. Okay, so respective accounting standards should be checked, right? So depreciation should be provided for tangible, amortization should be for intangible. Then verify refund of TDS with respect to interest on investment. Generally, if it is a trust, the TDS will be refunded back to the trust because they are not supposed to pay any tax. They are exempted from payment of tax. But if anybody has done TDS in their name, tax deducted at source, meaning if I have to pay you 100 rupee, imagine law says 10% TDS should be done. I will not give you 100, I will give you 90. Now that is a proof for income tax that you have earned 100 rupee and 10 rupee I am supposed to, which I have deducted from your pocket, I am supposed to go and deposit with the government. Therefore, government will get to know that you have earned money, not that 10% itself is a tax. It could be 30 rupees, but I have deducted only 10. The rest 20 you have to pay at the end of the year. This is generally what happens. But for trust and societies and educational institutions specifically, they are exempted from paying tax unless and until it is a company. Clear? Now, with respect to that, if there are any TDS that they have done, it should be refunded. Okay. Then, carefully examine all the outstanding liabilities such as electricity, telephone bills, outstanding TDS, PF, etc. That means as on March 31st, whatever expense is outstanding, that is nothing but a liability. Clear? Then verify inventories of furniture, stationery, clothing, provision, etc. These should be checked by reference to stock register and values applied to various items. Ascertain that the system ordering inspection on receipt and issue of provisions, foodstuffs, clothing, other equipment, etc. should be duly authorized and passed before payment. Then verify that financial statements have been prepared as per the regulatory authority. If it's a company, Schedule 3, right? If it's a trust, the normal T format is what you prepare, right? This is with respect to your educational institutions, right? Right. So out of 6 units, we're done with 4. Local bodies are done. Hospitality sector is done. Educational institution is done. Yes, and we are done with the healthcare organizations, right? Okay. Right. So next, let's talk about audit of cooperative societies. Now, cooperative societies and banks are left in this particular unit. With that, this unit will be done. Clear? Now, in cooperative societies, what we need to check, sir? Number one, what do you mean by cooperative society? First of all, see, cooperative society is nothing but where it is a group of people, association of persons, AOP, association of persons coming together to solve a mutual problem. Like it could be cultural problem, societal problem, commercial problem, business problem, whatever it could be. For example, imagine now you're a farmer and you grow your produce in your farm and it has to be sold in the market. Now there will be a broker or middleman who will take the produce from you. He will go sell in the market. Imagine market gives 100 rupees. Now you will get 20 rupees. 80 rupees will be his commission. Now if you only go and sell in the market, probably you will have to spend around 20 and get that 80 for yourself. But now you're getting only 20 because of the middleman commission there. So if people like you, not you in the sense, in this example, people like you, that is the farmers, imagine all come together and form one cooperative society. Cooperate. Let's help each other. Let's do business in a manner where every one of us will get benefit out of it. So in cooperative society, they address a common problem. Therefore, like-minded people will come together and form an association to solve this particular objective. Right now, that is what we call as cooperative society. Now, it could be with respect to agricultural, it could be with respect to fish, goldsmith. So many logics are there for cooperative society. So many problems are there. I'll show you the database for understanding it little better. Okay. Now there is National Cooperative Database, and the website is little slow with respect to this specific concept. So we might have to wait a little. Right, now here right, see. So since 15th February 2023, there are totally 30,808 cooperative societies. Okay. Now all India cooperatives are 8,48,734. Okay. Then out of that, what is primary cooperative, federations, cooperative banks, multi-state cooperative societies are 1,785. So like this, so many societies are there. Based on sector and segment, you can select here. Agriculture is there, agro processing, bee farming, dairy cooperative, farmer, fishery, handicraft, jute, khadi gramodyog, livestock, miscellaneous. So many things are there. Based on that, you can form a society. Okay, now this is the entire concept of cooperative society. Now what are we supposed to learn here, sir? Audit of them. Is audit required? What are the areas we need to see for auditing? Those things are what we are supposed to check statutorily. So is there a requirement under a statute, sir? Definitely yes. Section number 17 of Cooperative Societies Act 1912 talks about requirement. Here the registrar, here we call him as ROCS, Registrar of Cooperative Society. Now if he can audit or he can ask someone to audit, but that someone should be authorized by the registrar, he can give special order or general order. At least once in every year has to be audited. This can be asked in MCQ as well. Then whenever he is auditing, it shall include examination of overdue debts and valuation of assets and liabilities. Sir, what is so special among this? See, in cooperative society, majorly they want loan also. So society members can take loan from society itself. Now what if they don't pay on time? That becomes overdue, right? So society's money is going to the members, correct, but it has to come back to the society on time, otherwise it will be overdue, right? So we need to check that. The registrar, the collector, or any person authorized by general or special order in writing shall at all times have access to all the books, accounts, papers, securities of a society, and every officer shall give information whatever is asked for. You can't say no. Okay, here registrar means what? Person appointed to perform the duties of ROCS under the Act. Anyway, that is not important for us. This is important. From here onwards, things are important. Clear? Qualification. Who can be an auditor? Generally only a CA, but some of the state acts allows government diploma also, or a person who has already served in cooperative department of government may also be appointed as an auditor, provided certain state act allows. Appointment of auditor. Who will appoint? Like I already told, ROCS, Registrar of Cooperative Societies, will appoint from the empaneled list. Clear? Now, who will pay the fees? Fees is paid by the society, but it is fixed by the registrar. Payment is done by the society, but it is fixed by the registrar. Okay. Then, books of accounting, sir. Books of accounting records, should they maintain? Definitely yes. Which books, sir? Asset liability, income expense, receipt payment, those books. But apart from that, generally the following records are maintained, which is that cash book, stock register, asset and investment register, fixed deposit register, surety, guarantee. If you have given surety for someone, register for that also should be maintained. But apart from this, can I maintain? You can maintain any books of accounts. But generally these, again, follow your state act. See, this is like Central Act will give you an idea, but Central Act also gives authentication or authorization that the State Act can also give some information with respect to what books of accounts to maintain. You can maintain those books of accounts, absolutely no problem. Clear? Restriction on shareholding. So restriction on shareholding, how much share can you hold? Number one, shareholding is prescribed under section number 5. No member other than registered society can hold more than 20% of total number or value not exceeding 1000 rupees. So maximum it is 20% of total shares or rupee 1000 they say, but generally both will have to take care. Both we have to check. Imagine now there are 1000 shares in a society. Imagine you are holding 200 shares. But if the 200 share value is exceeding 1000 rupees, not allowed. You have to bring it back to 1000 only. Clear? So you have to think in that manner and then go ahead with respect to your shareholding. Clear? It's not that either of it. It is 20% of total share or even value exceeding 1000 you are not supposed to hold. You cannot prescribe any other limits which is violative of this provision. You can't provide your own law in your organization. Although you are a cooperative society, that freedom is not given to you. Okay. In addition to this, the acts passed by the state may also prescribe any other restrictions. Apart from this, the state act can put any other restriction. We should check whether these restrictions have been followed properly or not. Then restriction on loan. Loan means what here? Loan given? Yes, loan given, not loan taken. Why? Loan taken is called as borrowing. Loan given is what we call as loans. So can you give loan? Sir, you can give loan only to your member with prior approval of register. But without approval, you can give to society. Society to society without permission, you can give loan. Society to members with permission. Clear? Sorry, my bad. Society to society, prior approval is required. Society to members, prior approval is not required. It may grant loans to other societies. So society to members, free. Without any approval, you can give. But society to society, sanction of ROCS is required. But society to others, not allowed. Restriction on borrowing. Can we borrow from outsiders? Definitely yes. You may accept loans and deposits from members as well as non-members, no problem. Why? Sir, if our members were so rich, why would they require a cooperative society? We have to take loan from banks, FIs, etc. So therefore, we require that authorization that we can go to the banks and take. Clear? Yes. Investment of funds. So wherever money, extra money we have, where we can invest. There are restrictions on investment of funds belonging to a society where central or cooperative bank, yes, any securities under Indian Trust Act, basically government securities you can, no problem. Government securities you can, no problem. Share, securities, bonds, debentures of any other society with limited liability. Bank or any person carrying on banking business or a cooperative bank other than central or state cooperative bank. So basically point number 1 and point number 4 you can interchange. Clear? In any other manner as duly permitted in the requisite authority. Appropriation of profits. Should we create a separate reserve? Yes, you must create a reserve fund before distributing the dividend. Okay. Now how much? Any amount, but registrar cannot reduce it below 10%. Clear? Any amount you can create, but not less than 10%. However, appropriation of profits must be approved by the members of the society in the general meeting called for the purpose. Without authorization, you cannot transfer to reserve fund. It has to be approved by the members. Then, can I donate outside? Definitely yes. Maximum how much? 10% of the net profit after transfer. So, here we have profits minus reserve transfer. Whatever is remaining, 10% is equal to your donation. Clear? Understood? Yes, sir. Next. What should we check, sir? General points, check. Carefully go through the bylaws of the society. Check ROM of the society. Internal check and internal control system should be checked specifically for strength and weaknesses. Then income, voucher, receipt of cash, share capital if you have received, check the ROM. If cash received against sales, vouch with the cash memos and invoice issued to customers as also sales account. If it's with respect to payment of interest and receipt of loans advanced, then check the loan agreement. If it is towards construction of the houses or their maintenance, vouch with the members' demand made by the society from time to time and money received. So different payments will have different documentation. Check the documentation. Expenditure, check large capital expenditure should be always authorized. Clear? If bills received from individual parties, money receipts obtained from them, entries in the bank passbook you can check. If it is payment of loans, check the loan agreement. If it is establishment expenses, check the resolutions of the committee or agreement with the people connected. What are the other points are there? Now, overdue debts can be classified between 6 months to 5 years and more than 5 years. So, aging is what we do, 6 months to 5 years and more than 5 years overdue. So, if it is more than 5 years overdue, that means it's high risk. Okay. Make a special reference to the overdue amount of interest from members. Generally, interest on overdue should not be credited to interest account, but to the overdue interest reserve account because it's not received. It's overdue. So, transfer it to a separate account and keep it. Writing off bad debts after prior authorization. Now, this is a very important feature of cooperative society. Bad debts should be written off only after authorization. Without authorization, bad debts should never be written off. Clear? Understood? Right, sir. Now, with respect to that, see here, according to Maharashtra Cooperative Societies Act, a bad debt can be written off only when it is certified to be irrecoverable by the auditor. This casts a special obligation on the auditor to ascertain whether debt in question was created within the rules and whether now it has really become bad or it is a fake bad debt. So, in case of cooperative society, bad debt has to be certified, only then you can write it off. Without auditor certification, you cannot write off any debt as bad because that will give cooperative society a window to commit fraud. That's why only authorized debt can be classified as a bad debt or authorized bad debt can be written off. Otherwise, you cannot write off these bad debts. Clear? So, very peculiar feature in cooperative society. With this, cooperative society also is done. Generally, there are two types, single state and multi-state, but here they have not given you single state or multi-state. They have just given you a gist of cooperative society. So, this is with respect to that. Clear? Right. Now, after this, we'll be doing audit of banks. Clear? Yes. Right. So, let's talk about bank audit. So when we are talking about bank audit here, we are talking about bank as a whole and not specific branch or specific type of bank. So we are understanding briefly just the names of different types of banks, but we are not getting into the deeper level of that. As a bank, generally what audit we are supposed to do in general bank audit is what we are going to check it out. What are the different types of bank you'll be seeing? Number one, commercial bank. Then you have RRBs, regional rural bank. Then you have cooperative society or cooperative banks rather. And then you have development banks. Then you have payment banks, and then you have small finance bank. Now, commercial banks are those which we call it as retail banking as well, clear, where their basic functions are granting of loans and accepting deposits. Okay, these are their basic idea. Then RRBs specifically focus on the rural areas where basic banking facilities will be given. Cooperative banks are nothing but cooperative society, but for banking specific things they are coming together. Development banks are like NABARD, okay, or industry specific, that is IDBI, etc. Right, so these are all development banks specifically. Then Airtel Payments Bank, many Paytm payment banks are there. Small finance banks. Small finance banks are specifically for micro segments. Clear? Micro segments. Then regulatory framework of banks in India. What are the framework that is applicable for a bank? Banking Regulation Act is applicable. Companies Act is there. SBI subsidiary. These all acts are there for a bank. Okay. Form and content of the bank's financial statement. Financial statements of a bank is not as per Schedule 3, it is as per Banking Regulation Act. So, Section 29(1) and 29(2), that is subsection 1 and subsection 2 of Banking Regulation Act deals with the form and content of financial statements. These are applicable for nationalized banks, SBI as well as RRB. So generally they don't follow our Schedule 3 format. Their format is very simple, very easy to understand, clear. It's not as complicated as Schedule 3. Now this is important from now onwards. What are we supposed to do with respect to audit? The auditor of a banking company is to be appointed at AGM of the shareholders. If it's a company, then AGM of the shareholders. If it's a nationalized bank, then the concerned bank will appoint through its board of directors. If it is SBI, then CAG. Then RRB appointed by the bank after approval of CGC. These all are MCQ points. Remuneration is fixed as per section 142. In case of banking companies, while in case of nationalized bank, it is fixed by the RBI in consultation with CG. Now that means what? Very simple. If it's a banking company, AGM. If it's a nationalized bank, board of directors of the bank. If it is SBI, CAG. If it is RRB, it is the bank's board. But after approval with CG, remuneration, if it's a banking company remuneration, then section 142. If it is a nationalized bank remuneration, then it is fixed by RBI in consultation with central government. Powers are very similar to other company auditors. Content: financial statements represents a true and fair view. Transactions should be within the powers. Returns received from the branches should be found adequate. Any other matter which you consider. Also, you are supposed to submit something called as LFAR, long form audit report in case of banks. Specifically, this is bank related reports. This is not given for any other companies. In addition to report, the auditors of bank branches as well as statutory branch should give various certificates as required by RBI and other regulations. Somewhere around 40-50 reports including certifications will have to sign specifically for banks. Okay. Now generally what we have to find, hidden question, important question. Okay, generally what we are supposed to audit, general issues. Number one, understanding the bank, its environment is very, very important because every bank uses a different accounting software. Every bank's internal control system is different. So we need to understand the bank first, then the environment in which the bank operates as well as the internal control in which the bank carries on. Clear? Understood? Then understand the accounting process. Obtain an understanding of whether it is a computerized process or a manual process. Then risk management process, clear understanding of what is the risk that they are taking, including your operational risk as well as financial risk. Operational risk is business risk. Financial risk is specifically money related risk. Like it could be different types of fraud, different types of foreign exchange risk is there, foreign currency risk is there. So consider all types of risks. Then after that, develop a detailed audit plan. Then check the materiality. Consider what is important, what is not important. What is important, that has to be addressed. What is not important, that can be ignored. Obtain detailed understanding of the relevant Basel framework. Basel 3 framework is there, Basel 4 is there, Basel 5 is there. Which version is important? Then determine the extent of reliance on report of previous auditor, or it could be RBI internal audit report. So because these give us the idea as to what type of diseases the bank is suffering from time to time. So this report will give us an insight about which area is very important to focus on. Clear? Yes. Now those are generally general issues in every bank will have to see. Now these are specific issues with respect to specific areas. What are we supposed to check? What is the first area? If you see, advances. Clear? Second area will be cash in hand. Third, balances. Third and fourth will be balances. Fifth is money at call and short notice. Sixth is fixed assets. 7 borrowing. 8 deposit. 9 capital. 10 reserves and surplus. 11 bills payable. 12 contingent liabilities, and 13 bills for collection and treasury operations. So 14 specific issues are there in bank audit. Clear? Right? These are what? Specific issues. Okay, let's talk about the first specific issue, that is with respect to advances, what we should check. As you should check internal control system. Advances here means loans given. Okay, in banking language we say advances. Clear? So internal control we should check. Scrutinize the subsidiary ledger and other control accounts. Basically books of accounts you have to check. Proper documentation of accounts you should check. Then if there is an overdue account and scheme for recovery, that is in case of NPAs and recovery of NPA should be checked. Cash in hand, what we should check? Same ICS you have to check. Visit the bank branch and inspect physical cash. Go and count the cash physically and ensure it tallies with the cash book. In case of any foreign currency held, again check the translation at the market rate as on the date on which financial statements are prepared. Generally 31st March you have to check as per, you have to follow. If you're following accounting standard 11 will give you the idea about that. Then if the bank has maintained balance with RBI, what we should check? Ledger balance you check. Take the certificates from RBI and reconciliation statement. Balances with other bank, reconciliation you check for interest. Large transaction and balance with banks outside India, overseas bank if it is there, and in case of any conversion rate is there, please check that as well. Money at call and short notice. Examine the system for authorization of money at call at short notice. Ensure that call loan made by the bank are not netted off against call loan received by it. Netted off means what? Receipt and payment should not be netted. Different transactions should be shown differently. Ensure money market lending for more than 6 days are not classified under this head but as a deposit or advance based on their nature of lending. So basically it's nothing that if it is for more than 6 days, it should not be classified under money at call and short notice. Up to 6 days, maximum a week should be shown under money at call at short notice. You know what is that? See, every bank should maintain some kind of cash balance. Okay. Now imagine you have more balance, I have less balance. Now for that purpose, imagine I have to maintain 10 CR and you also should maintain 10 CR. Now you have maintained, let's say for example 16 CR and I have only 9 CR. Now I need 1 CR to maintain that minimum balance, for which I may not have that much cash. So what I will do, I will borrow from you. Now you will give me money of 1 CR. 1 CR money you will give me. Now in that case, generally this is for maximum a week. Clear? If it is for more than a week, it should not be coming under this heading. That's what they are telling. So just to maintain that balance, bank to bank, they actually give money to some of the banks. Some bank will take loan, money from some other bank. That's called money at call at and short notice. Okay. Fixed and other assets. Ensure that accounting method is appropriate and ownership is adequate. Then check the schedule of the fixed assets. Sale deed you have to check. Then revaluation if they have done, check the appropriateness of it. Meaning what? It should not be overvalued, it should not be undervalued. Check the appropriateness and compliance of section 9 of Banking Regulation Act. Borrowings meaning loan taken or loans taken with respect to borrowing. Now with respect to this, what we should check? Properly the amount should be disclosed in the books of accounts properly, that is from RBI, and borrowing from outside India. So overseas borrowing and domestic borrowings. Ensure the rate of interest is accurately with the duration of the borrowing. Verify whether borrowings of money at call and short notice are properly authorized. So like I said, once this is the asset, giving money, this is giving, and here it is receiving. Okay, then deposits. With respect to deposits, ensure that interest accrued but not due on deposit has not been taken under other liabilities. Interest accrued but not due on deposit should not be taken to other liabilities. See whether there is any instance of window dressing. Window dressing means what? Just for show off, you are adjusting on the face of it. Technically, imagine now, deposit you have not taken, but you are showing it as deposits taken. Interest you have not received, but you are showing it as received. So these things should be taken care there. Understood? Clear? Then, with respect to capital, what we should check? Examine the opening balance of capital. Any special resolution they have passed for increasing the authorized capital during the year. Obviously, we'll have to check their MOA because you can't go beyond MOA's capital clause. Examine the prospectus with respect to increase in subscribed or paid up capital. Government notification for fresh contribution from them. Reserves and surplus, opening balance you check, and with respect to foreign branch, compliance with foreign laws. Now, these all are small things, not that important. But if you see, bills payable, contingent liabilities, bills for collection, and treasury operations. Now, these are pretty important. Okay. Let's talk about one by one. Bills payable. Now, what do you mean by bills payable? It's a liability for the bank. In such cases, what we should check? Evaluate the existence, effectiveness, and continuity of internal control over bills payable. What we should check? Draft, mail transfer, traveler's check should be made out of standard printed forms. The format should be standard. Unused forms should be kept under the custody of a responsible officer. The bank should have a reliable private code known only to the officers of the branch. Coding and decoding should be done only by such officers. Otherwise, if anyone gets to know, then it will be easier for them to do fraud. So only authorized people should know the coding as well as decoding. Signature on demand draft should be checked by an officer with the specimen signature book. So whatever sign you put on the demand draft should be checked against the specimen signature. Only if it is matching, you have to authorize it. Telegraphic transfers and demand drafts issued by a branch should be immediately confirmed by advisors to the branches concerned. On payment of these instruments, the paying branch should send a debit advice to the originating branch. See, whenever demand drafts is taken, no, imagine I am, let's say for example, I am in Mangalore and you are in, let's say for example, Delhi. So from here, I generate a DD and I give it to you. So when you go and present it there, now paying branch is my branch. Clear? Receiving branch is your branch, right? So also originating branch will be my branch. Clear? So we have to check whether proper authorization has been done by both branches or not. So unless and until there is a confirmation by advices to the branches concerned, both the branches should give their respective advices. Clear? On payment of these instruments, the paying branch should send a debit advice to the originating branch. Okay? Then, because if you see in DD, they will be shown as payable at X branch, right? So that branch is where we make the payment to, right? So that is called paying branch. All right. Then, if the paying branch does not receive proper confirmation of any transfers or demand draft from the issuing branch, it should take immediate steps to ascertain the reasons. If the instrument prepared on a security paper has to be cancelled, clear? In case an instrument prepared on a security paper, that is example draft, has to be cancelled, it should be examined whether the manner of cancellation should not be misused. Okay, cases of frequent cancellation should be carefully looked into by the responsible official. So in demand drafts, generally what happens is, now like I said, I am in Mangalore, you are in Delhi, I am supposed to give you the money. Now rather than giving you the money, I will give you the DD. Now this DD, you go and give it to your respective branch, they will make the payment to you. Yes, but when they make the payment to you, there will be internal communication from that branch to branch in Mangalore. Right? These people have to communicate with respect to each other, saying that we have received your draft, can we make the payment? Clear? Because I'll be giving money to the Mangalore branch now. I'll give money and I'll take the DD. That DD I will send it to you. You will go and present that DD to your branch and you will get the money. Okay. Then comes contingent liabilities. With respect to contingent liabilities, what we should be concerned with? seeking reasonable assurance that all liabilities are identified and properly valued. Proper valuation has to be done. You should generally follow the procedures given below. Number 1, there should be a system where non-fund based facilities are extended only to their regular constituents. What is a non-fund basis? Example, guarantee given by the bank. Guarantees given by the bank. Now, when the guarantee is given by the bank, it is called a non-funded facility. Money they will not give. Money they will give later if you do not pay. Right? Now that, will you give guarantee to strangers? No. You will give guarantee only to respective people. Which respective people are these? These are those people who you know very well. Otherwise, why will you give guarantee? Am I right? That's what we say. Regular constituents means here regular customers or regular clients. Okay. Ascertain whether there is adequate internal control system to ensure that transactions giving rise to contingent liabilities are executed only by authorized person. See, the transaction which gives rise to guarantee or which gives rise to these non-funded facilities or gives rise to contingent liabilities, these transactions should be authorized properly first. Right? Now, for example, imagine export. Now, if I have to export something, I need money. Now, that fellow is not going to, or rather than export, will take import. Now, I have to import a machinery for which I have to make payment. Now, the person who is sending the machinery to me is in Australia. Now, that Australian guy is saying, until and unless I give money, he will not give. Now, I am telling him that I will give money only if you give me machinery. That time I will go to my bank and tell, can you please give guarantee to that supplier that if I don't give money, you will give. Now, bank will give. Now, this is a transaction which is giving rise to a contingent liability. So, this transaction should be authorized by the respective person, not the guarantee authorization. The transaction should be authorized first. Okay. Then you should also examine whether in case of LC is nothing but letter of credit for import of goods, the payment to the overseas supplier is made on the basis of shipping documents and after ensuring that the said documents are in terms of LC. Now, same thing that I told import of machinery, there is something called as letter of credit. Now, letter of credit means bank will give that particular letter. This letter if I give to the supplier, supplier will supply me the goods. Clear? Then, ascertain whether the accounting system of the bank provides for maintenance of records in respect of such obligation and whether internal controls ensure that liabilities are properly identified and recorded. Which liabilities? Specifically, contingent liabilities are not known. Contingency is nothing but unknown, unsure, uncertain. Okay. Perform substantive test. Substantive means what? Detailed test. To establish the completeness of the recorded obligation, such test includes confirmation procedures as well as examination of relevant records. So, external confirmation you can take and records you can check. Review the reasonableness of the year-end amount of liabilities with respect to the previous experience and knowledge of current year's activities. So, basically, compare current year, previous year. Also take your knowledge and experience into account. Okay. Review with respect to comfort letters issued by the bank has been considered for disclosure of contingent liabilities. Okay, there is a concept called as comfort letters, not required as of now. Just remember that if comfort letters are issued by the bank, it should be reviewed. Okay, bills for collection. Now, what do you mean by bills for collection? Now, imagine Mr. A is supposed to make a payment to you. So, you both have drawn bill of exchange. So, for you it is bills receivable, for Mr. A it is bills payable. Now, you are supposed to receive from Mr. A. Now, on the due date, you are busy doing business. You will, I am the bank, you will come and give that bill of exchange to me and you will tell me, bank sir, can you go to Mr. A and collect that money on behalf of me? Now, what I should do? I should collect from A and then give it to you. I should not give it to you first and then collect from A. I should first collect from A and then give it to you. So, in such cases, what procedures we should check? Examine whether bill drawn on other branches are not included in bills for collection. Bills drawn on other branch. That means what? My bill receivable should not be included here. Some other branches should not be included here. Inward bills are generally available with the bank on the closing day, and you may inspect them at that time, no problem. So whatever bill receivable is there for collection, whatever you have received, you can check at the end of the day. Nothing will happen there. Okay, next. The bank dispatches outward bills for collection soon after they are received. They are therefore not likely to be in the hand at the date of balance sheet. You may verify them with reference to the register maintained for outward bills for collection. See, bills for collection, you will come and give me the bill. I will go and collect it right away. Why will I keep it with me? But imagine as on 31st March, some bills are there with me. Those we can check. Generally, bills for collection will not be there with the bank. You can only check the register. Examine collection made subsequent to the date of the balance sheet to obtain further evidence about 31st March bills of collection. Because like I said, you will give me the bill, I will go and collect right away. It's not that I will keep with me for a week and then collect it. With respect to bills for collection, examine the procedures for creating the party. Generally, customer's account is created only after the bill has been collected by the bank. Like I said, I'll collect from me and then give it to you. I will not give you first and then collect from you. That is this point number D. Okay. Now last topic is treasury operation, foreign exchange and derivatives. Treasury operation is generally where they enter into these transactions with overseas bank or over forward contracts, future contracts, option contracts, hedging. Clear? All these transactions will be handled by treasury operation. So what we should check? Innovative products and ways of trading create new possibilities is our introduction. Clear? If you don't fill the gap there, right? It must be risk must be identified and managed. Unfamiliar risk. Failure to do so can result in huge losses. Therefore, what we should check? Obtain a complete overview of operations of the bank before commencing the audit. Ask the bank what operations you guys are doing. In which countries, where all, what type of operations you guys are doing. Then design a program in such a way that the risk is reduced. Not just the control assessment of treasury process, but there is an assurance that figures appearing in a financial statement should be fair, true, and it should reflect fair. Nothing given here. How to audit they have not told. They have just told, see, new transaction will give rise to new type of risk. Consider that risk. Put up a plan before you audit, understand the process, then the plan should address in such a way that whatever amount is there in FS should reflect true and fair view. That's it, nothing more in treasury operations. So I would recommend in bank audit specific thing, no, one is bills for collection, be very thorough with, one is contingent liability, be very thorough with, and one is bills payable, be very thorough with. Bills payable is my liability. Bills for collection is not my liability, not my asset. I am just an agent. Clear? Contingent liability may be my liability, may not be my liability, but definitely not my asset. Clear? These are the three things in bank audit you have to clearly check. Right? Now with this, your unit number 8 is done. Okay, that is your audit of different entities. Clear? Right. So this unit you can expect one question pakka for 7 marks. I feel the first few part before cooperative society, it is worth it. From there one question you can definitely expect education institutions or healthcare, hospitality. Clear? And your in such cases your schools, colleges, hotels, amusement park. Out of this one question you can definitely expect for 7 marks. Clear? Yes, this is your unit number 8. Right, now the next unit that we are going to study or revise is your provisions with respect to Companies Act 2013. Okay, now in this particular unit, what are we going to see? Let me give you a gist of it. So this unit is one of the most important unit. Okay, and here we'll be covering first unit is totally with respect to statutory audit. That is, who is an auditor here, how are we going to appoint him, his eligibility, qualification, disqualification, with respect to branch audit, joint audit committee, So those things we'll be talking about. Then unit 2 is about cost audit, a very small unit. Unit 3 is about secretarial audit, which we will be talking about audit of company secretary's job. Then unit 4 talks about vouching and verification, that is your items of financial statement, schedule 3 audit. Then we are talking about reporting, audit report versus certificate, and CARO points, which is very, very important. Then we'll be talking about ICOFR, that is internal control over financial reporting, which is another small topic. And then NFRA, another small topic. So out of these 7 units, the two biggest units is unit number 5, which is about reporting, and unit number 1, which is about statutory auditors. So in this unit number 1, we'll be covering from section number 139 to section number 147. Cost audit is covered in section number 148. Okay, and with respect to the other provisions, plus we'll be covering branch audit, plus we'll be covering joint audit. Okay, plus audit committee. So these are the provisions which we are going to cover in unit number 1. So totally 7 units are there. In that, all of them are small units except for unit number 1 and unit number 5. Even unit number 4 is a very big unit. But we'll be mostly covering, except for unit number 4, all other things will be covered in revision purposes, in revision video. Yes. So let's move on and start with section number 139. Now in this particular provisions which I told you, 139 to 147 will be covered. 148 will not be covered in unit 1 because it is covered in unit number 2. Entire cost audit is covered in unit number 2. Now section number 139 majorly talks about the appointment. Who should be appointed? Right. Now, who should be appointed? A chartered accountant should be appointed. Clear? So, under section 139, we are talking about a chartered accountant. Now, if he has to be appointed, we need to understand what are the types of company and what are the types of auditors we are talking about. There are two types of companies. One is called government company and one is called non-government company. Then there are two types of auditors in each of these company called first auditor and subsequent auditor. Right. So in government company, we'll be talking about first auditor and subsequent auditor. And in case of non-government company, we'll be talking about first and subsequent. So we'll be first discussing with respect to government audit company, and then next we'll go for non-government company. Okay. So with respect to government company, let's talk about first auditor. 139 subsection 7. Who should appoint? Since it is a government, I'll give you a thumb rule to remember. Clear? Since it is government, it is always appointed by CAG. Government, whenever it is there, you should always remember CAG is a topmost authority. CAG is what we call as SAI, Supreme Audit Institution of India. So he is the one who will be appointing within 60 days from the registration date. Clear? Within 100 days, 60 days from incorporation or registration date. If he fails, if CAG fails, very rare, but in case if he fails, then the board of directors shall appoint within the next 30 days. Now if board also fails, then the members will be appointing within the next 60 days, but members will be appointing in extraordinary general meeting. This can be asked in your MCQ. Please be careful for that. Okay. What is this tenure, sir? First auditor's tenure. Tenure will be until the conclusion of the first AGM. Until the conclusion of what? First AGM. Now, first AGM, you have to go and refer in your business law paper, section number 96, chapter number 7, which talks about management and administration, which clearly says in section number 96, your AGM should be conducted either within 30th September or the gap between two AGM should not be more than 15 days or by 31st December, whichever is earlier. Extension for subsequent AGM is given for 3 months. First AGM due date is 9 months from the end of the financial year. That is nothing but again 31st December. Their extension is not given. In subsequent AGM, extension is given. Now that is what is discussed in section number 96. Now this is with respect to the first auditor of government company. Subsequent auditor of government company, again I told you who is the authority for government company. It's always and always CAG. Therefore it is appointed by CAG of India within 180 days. Now 180 days cannot be counted as 6 months. You have to consider 180 days as 180 days only. That's the reason why here I have only calculated for you 180 days means max to max by September 27th you should be able to appoint him. Okay. Now that's with respect to subsequent auditor of a government company. Now with respect to non-government company, first auditor will be appointed by BOD, that is Board of Directors, within 30 days from the registration date. Registration date is nothing but incorporation date. Within 30 days BOD will appoint. If BOD fails, then members shall appoint within the next 90 days again at EGM. See, generally appointment of auditors is an ordinary business which will be happening only in AGM, right? So appointment of auditors is only at AGM, but in case of first auditor, it is allowed for the members to appoint him in EGM. Only in case of first auditors. Okay. The tenure will be till the conclusion of first AGM. Again, the first AGM tenure due date we will always be telling in section number 96, which we've already done with. Okay. Next, subsequent auditor. Now, this is an important provision. This can be asked in the exam. Here, wherever I've written AC, AC means here audit committee. CAG is nothing but comptroller and auditor general. Now, subsequent auditor, we have to check whether the company is equipped with audit committee or company is not equipped with audit committee. If the company is without audit committee, the appointment becomes much easier, where the board of directors will recommend an individual to the members and the members will appoint in AGM. Matter ends there. This is for what? A company without audit committee, subsequent auditor's appointment. But if company is with the audit committee, now comes a complication. What is the complication? Company with audit committee will recommend it to board of directors. Audit committee will recommend it to board of directors. Now BOD has an option to either accept that recommendation or reject that recommendation. If they are accepting the recommendation, job becomes even more easier. You forward the same recommendation to members and members will appoint in AGM. Matter solved there. But if the board of directors reject the recommendation, then the recommendation has to be sent back to the audit committee, but with valid reasons. You can't say he's bald, he's dark, he's like this, he's like that, I didn't like his looks, I didn't like his dressing sense. These all are invalid reasons. Valid reasons means professionally, if you have any valid reasons for it, then with that reason you can't reject directly. You have to reject and send it back to the audit committee. Now audit committee has two options. Either look at that reason and then change the CA, or if audit committee finds this is not a valid reason, I will still send the same person, they can still recommend the same member. Now if audit committee, if they send a different person, how do we deal with? If they send the same person, how do we deal with? If they send a different person, again board of directors will have an option to accept or reject. The same loop continues. If you accept, forward it to members and members will appoint. If you reject, again send that recommendation back to the committee. But if he sends the same person, if audit committee recommends the same person again, even after rejection, then board of directors can ignore the recommendation and forward their own recommendation to members. Therefore, members will appoint in AGM. This is how the appointment procedure goes for first auditor as well as subsequent auditor in case of non-government company and government company. All four cases we have seen. Yes or no? Clear? Right. Now this is with respect to section number 139, 1, 6, 5 and 7. Remember like this, 6 minus 1 is 5, 6 plus 1 is 7. Okay. Now, right. So next is the certificate which is given by the auditor. Now this is an important question, can be asked for 7 marks for you. Right. So certificate by auditor, what certificate he should give? He should give a certificate that he is eligible and is not disqualified, and whatever appointment is done, it is as per the terms, and appointment is within the limits of section number 141 subsection 3 clause G, that is maximum 20 companies allowed. List of proceedings against him, which proceedings? Not personal matters, only professional matters of conduct, and when he should give before the appointment is made, and this is what we call as written consent. And company should intimate the auditor about his appointment, and as well as they should tell ROC in form number ADT1 within 15 days. Alright. Now let's come to the most important topic called rotation of auditors. And rotation of auditors is nothing but for how many years you can appoint one particular CA. Number one. Second thing is, if you are appointing a firm, for how many years you can appoint them. Now, if you are appointing, first of all, we need to see whether it is applicable for you. If it is applicable only, then it is better if you have to appoint. If it is not applicable, then obviously then they will know, they'll not go for such particular preferences, right? Number one, applicability. Listed company and other companies. Okay, listed company, 99.9% of the acts are applicable. For other companies, depending upon the type, if it is unlisted public company, if the unlisted public company's paid up capital is more than or equal to 10 crore, or if you're a private company, your paid up capital is more than or equal to 50 crore, or you could be a private company also, you could be a public company also. If your paid up capital is less than this limit, if your paid up capital is less than 10 crore or 50 crore, but your borrowing from banks, financial institutions and public depositors more than or equal to 50 CR. Remember this, you could be a private company which is less than 50 CR. You could be an unlisted public company which is less than 10 CR. But either case, if your borrowings from banks, financial institutions, public deposit, if it is more than or equal to 50 CR, then rotation of auditors concept is applicable for you. Right? Now, eligibility. For how many years you are eligible? If you are an individual, 1 term up to 5 years. If you are a firm, 2 terms up to 5 years each. But it should be consecutive. Consecutive means what? Continuous. Understood? What? Continuous. Now, you need to understand one thing. Sir, why did this particular format come into the picture? It's because of the past scams that have happened in our country. For that reason only these things have been introduced. Number 2, can we appoint him for less than 5 years? The answer is yes. Now, there is a huge debate with respect to this provision, saying some are saying flat 5 years, some are saying you can appoint for less than 5 years. But if I read the provision correctly, you can appoint them for less than 5 years. For sure, you can appoint them for less than 5 years, because the law does not prescribe a minimum period. Law has prescribed the maximum period. Right? Now, the maximum period is nothing but up to 5 years, not more. Now they say no listed company can appoint a CA for more than 5 years, which means what? Less than 5 years can be appointed for. You cannot force a CA that only for 5 years will appoint you, right? But yes, up to 5 years you can appoint, but whatever term you are appointing, that will be considered as a full term. So while appointing only, it should be clarified that if I am appointing you for 2 years, that 2 years should be considered as a full term. Understood? Clear? Okay. Now, whichever term, 1 year, 2 year, 3 year, whatever it is, you have a cooling period. What is the cooling period? You are not eligible for the next 5 years from the completion of your tenure. Clear? Imagine you are appointed for 2 years. After 2 years, for your cooling period is 5 years. For 5 years, you will be ineligible. If you are appointed for 3 years, after 3 years, for the next 5 years, you will be gone. Okay, you won't be appointed. Common partner. Now, imagine there is firm number 1 where A, B and C are partners. Okay, remember this here. A, B, C and D are partners. They are appointed for 8 years. Now, after 8 years, they want to appoint firm number 2 where partners are E, F, G and A. Now, even firm number 2 cannot be appointed because as on the date of appointment, A is a common partner. The only logic here to appoint a new firm or a new CA is the old one should not be there, because he'll know everything about the company, so he knows how to do fraud very nicely. They'll develop a nice bond. You'll become too sympathetic towards the client, and that's the reason why we want new people. But if there's a common partner, then there is no point in appointing the new firm. I might as well appoint the old firm here. That's why if there's a common partner as on the date of appointment, will not be taking him into consideration. In the new firm, there is a common partner, then that other firm, that is firm number B, 2, etc., cannot be appointed as on the date of appointment. Now, let's talk about a little bit of casual vacancy. In case of casual vacancy, what is casual vacancy? Vacancy created in the office of the auditor before the expiry of his tenure. If it is a government company, CAG shall fill within the 30 days, and they should recommend. If CAG fails, then board will appoint. Clear? So CAG will appoint within 30 days. If CAG fails, board will appoint. In case of non-government company, resignation case and other cases. In other cases, BOD will appoint. In case of resignation case alone, BOD to appoint after members' approval. Members should approve the recommendation within 3 months. Clear? So BOD should recommend to members. Members have 3 months time. In 3 months, if you approve, board can appoint them. Only in case of resignation, because what if it is a coerced or unduly influenced resignation. In case of death, disqualification and removal and all, it will come under other cases. Is that clear? Now, this is your rotation and casual vacancy. Very, very important aspect of your unit number 7. Yes, there you go. So that's your 139.1, subsequent order 2, rotation is done. Now rotation between partners, in the sense, imagine now you have appointed a firm where there are 10 partners. Now those 10 partners, who will do the audit when? In the members meeting only it can be decided. Okay, that's 139.3. 5, 6, 7, 8 is done. 9, 10, 11. 11 we have already covered. After audit committee recommendation only you have to consider them. Clear? 9, reappointment of retiring auditor. You can appoint him after the cooling period. Deemed reappointment, if at any AGM no auditor is appointed, then the existing auditor only will continue. But if it is the last year of the tenure, let's say for example for fifth year no auditor is appointed, then you can't appoint him. Reason being is your rotation concept will be violated. So one individual is applicable maximum for him 5 years. 5 years is the tenure. Now fifth year AGM or sixth AGM rather, his fifth year, in that year no CA is appointed. He cannot continue, because if he continues he is breaking the rule of maximum 5 years. That rule he cannot break. So in those cases obviously this will not be applicable. Deemed reappointment will not be applicable. They have to take either CG's assistance or NCLT's assistance they can take. Okay, that is with respect to section number 139, appointment. Clear? Right, the next concept is section number 140, which talks about removal, resignation and giving of special notice. Now there are three sections here, specifically talking about 3. 141 talks about removal. Okay, 140 subsection 2 and 3 talks about resignation. Subsection 4 talks about appointing an auditor other than retiring auditor, and subsection 5 talks about removal by tribunal in case of any fraud. Okay, now with respect to section number 140, removal, let's talk about. If you are removing, you have to remove only by way of special resolution, but before special resolution you should always take approval of central government. So first you have to take you have to pass board resolution. Okay, once board resolution is done, then you take central government approval, then you have to pass special resolution. This should be the order. Okay, be careful with the order. So application shall be made to CG within 30 days of passing BR. So once you pass BR, within 30 days you have to apply for CG, and you should hold the general meeting within 60 days of receipt of approval, not date of sending, receipt of approval. When the central government has approved your application, from that day 60 days you have to consider. Understood? Clear? Okay. Now next, before taking any action for removal of auditor before the expiry of his term, a reasonable opportunity of being heard should be given. Resignation. In case of resignation, what he should do? If the auditor has resigned from the company, file within a period of 30 days from the date of resignation a statement in form of ADT 3. Indicate the reasons and other facts, okay, in the resignation statement. If you are a government company, you have to give one copy to CAG as well. And if a listed company anyway, you will be filing it one statement with SEBI anyway. Okay. Then comes your 144, appointing other than retiring auditor. If you are appointing, special notice should be given. Special notice is already discussed in your paper number 2, section number 115. Okay. Then there you have to give special notice if you want to appoint any person other than retiring auditor, or you have to clearly you don't want retiring auditor to be reappointed. In these two cases you have to give special notice. Once you give special notice to the company should send it to the other members, and then other members in the meeting you can take a call. What are the rights of the retiring auditor? He can make a representation in writing to the company. Representation means giving his side of the story he can give, but not exceeding a reasonable length. Reasonable length depends upon the case to case. Then he can, the retiring auditor can ask company, whatever representation I am giving, please forward it to the other members. If a copy of the representation is not sent because it was received too late, then you can read it orally. In the meeting you can read it orally. Someone's right is someone's duty. Auditor's right is company's duty. So whatever is my right, company's duty. They have to send it to the members. They have to give the right to read in the meeting. Clear? All those things. Now, if you act in a fraudulent manner or you have abetted means helped. Colluded means you are also a party committing the fraud. Tribunal may suo motu or application made by CG or any person concerned, if it is satisfied that the auditor of the company acted in a fraudulent manner, abetted or colluded, they can direct the company to change its auditors based on this particular fact. Okay, number one. Number two, If the application is made by CG and the tribunal is satisfied, then within 15 days, tribunal can make an order that he shall not function and CG will appoint new auditor in his place. This is only in case of if CG makes an application. In other cases, tribunal will just pass the order, you have to appoint someone else. Okay. Then, the individual or firm against whom the order is passed, that fellow will be banned for 5 years completely from the company audit perspective. He cannot take part in any company audit assignments. Okay. Then he shall be also liable for section 447, that is your imprisonment and fine. Okay. Section number 141 talks about eligibility, qualification and disqualification of auditors. Qualification simple, you should be a chartered accountant. If you are appointing a firm, majority of them should be qualified as a chartered accountant, should be practicing in India. Clear? If you are appointing an LLP, then only those partners who are CA shall be authorized to sign on behalf of the firm. Other than that, you cannot appoint engineers and all. Clear? Understood? Now, the question is, if you are appointing an individual, you should be a CA. If you are appointing a firm, majority of them should be CAs. If you are appointing an LLP, then only those CAs, because in LLP now you can have multidisciplinary CA, CS, LLB, anyone can become a partner. So here only those CAs will be allowed to sign. Disqualification is very, very important. Next is disqualification of auditors. Now here it is very important, it can be asked in the exam for 7 marks. Following person shall not be qualified for appointment as auditors of a company. Number 1, a body corporate. A company cannot give auditing services. But body corporate other than LLP. LLP is also considered as body corporate, but LLP can be appointed as an auditor. But a company can never be appointed as an auditor. Number 1. Number 2, officer or employee of that company. Now imagine we have a company here called, let's say, Arjun Limited. Now this Arjun Limited is a company where they want a CA. The question is, who can they appoint? Can they appoint a company? No. Can they appoint an officer of Arjun Limited? No. Can they appoint an employee of Arjun Limited? That also no. A person who is a partner, who is in the employment of an officer or employee. Now imagine Arjun Limited has an employee called Karthik. Now, can they appoint Karthik? No, because Karthik is an officer or employee of Arjun Limited, so he is disqualified. CA Karthik. Now, CA Karthik also has a firm outside. Now, in this firm, he has a person called as Aruna, who is employee of CA Karthik in his firm. Some other firm he has, some other business he has. Now, can Aruna be appointed? The answer is still no, because Aruna will be having an indirect influence on the company. Indirect influence will be there. Then, a person who or his relative or a partner is holding any security interest in the company, subsidiary, holding, associate or subsidiary of such holding company, not allowed. Meaning what? Even if you are having 1 rupee share, 1 rupee debenture, 1 rupee preference share, anything if you have, security is a word. 1 rupee also will be disqualified. In which company? Arjun Limited, Arjun's holding, Arjun's subsidiary, Arjun's associate, right? And Arjun's sister concern, meaning what? From the same parent, 1 more subsidiary. So if you are having any security in this circle, then you are disqualified. Okay. But your relative may hold security or interest in the company of face value not exceeding 1 lakh. Remember, in the exam you have to think about face value and not market value. They may give market value, but don't fall for the trap of market value. Market value should not be considered, only face value must be considered. That too, this exception is only for relative. It is not applicable for everyone. Clear? That means if you are holding even a single rupee share, you are disqualified. Your partner is holding single rupee share, you are disqualified. But your relative is holding up to 1 lakh, absolutely no problem. Sir, what if it crosses 1 lakh? You have 60 days time to bring back to 1 lakh. Somehow ensure the limit is below 1 lakh. Okay. So if it is exceeding, you have to take corrective actions within 60 days. Okay, sir. Next. Sir, if you, your partner or your relative is indebted to the company, subsidiary, holding or associate or sister concern in excess of 5 lakh, up to 5 lakh allowed, you can be indebted. Indebted means what? You have taken loan from that company up to 5 lakhs, no problem. Clear? You have taken loan or you owe them some kind of money. Clear? You are indebted to that particular company, to Arjun Limited, up to 5 lakh, absolutely not a problem at all. Has given guarantee or provided any security in connection with the indebtedness of any third person to the company, subsidiary, holding, associate or subsidiary of such holding company in excess of 1 lakh. So basically what they are trying to tell is this. Imagine this is you, okay, this is Arjun Limited. You should not be related here. Subsidiary of such holding company means S1. So S1 and Arjun is called as sister concerns. So this is the company which we are calling. So the company, associate, subsidiary, holding and sister concern. Okay. Generally people call it as cash companies. Okay. If you are indebted, even if you have given any guarantee in excess of 1 lakh is what disqualified. That means up to 1 lakh it is absolutely allowed, no problem. Up to indebtedness up to 5 lakh, clear. Guarantee of up to 1 lakh and for relative alone up to 1 lakh face value. Understood? Clear? Yes. Next. A person or a firm who, whether directly or indirectly, has business relationship with the company, subsidiary, holding, associate, subsidiary of such holding company or associate company. Same logic here, but one more addition they will be doing is here associate company. Here associate company. So if you are having business relationship with any of these company, business relationship is nothing but commercial transactions. If you are having with these companies, then you are disqualified. Then you are what? Disqualified. Next. Now, business relationship means what? Shall be construed as any transaction entered for a commercial purpose. That means personal purpose is allowed. You purchase coriander leaves from Reliance Fresh, no problem. You can still be the auditor of Reliance company. You purchase one MRF tire for your car, personal purpose. But if you are purchasing on a wholesale basis and then reselling it, it's a commercial purpose. Okay. Commercial transactions which are in the nature of professional services permitted to be rendered by an auditor or audit firm under the Act, under the CA Act 1949 is allowed. See here, when we are talking about practicing CAs will not do tire business and all. There I give you example for what is commercial and what is personal, not a CA doing tire business. But here what am I trying to tell is CA giving auditing services and taking fees is commercial only. Yes or no? Practicing CA giving services to Arjun Limited and Arjun Limited giving audit fees to CA Karthik is commercial transaction only. Is that allowed? That is allowed because that is permitted services. Clear? Not permitted services you cannot give. Okay, then commercial transactions which are in the ordinary course of business at arm's length price. Arm's length price means treating everyone equally. Like for example, 10 rupees goods sold at 10 rupees to others, sold at 10 rupees to you. Even though you are a related party, no problem, arm's length price. But 10 rupee goods sold at 10 rupees for outsider, 8 rupees for you. It's not at arm's length price. So in this case, you have to be a little careful. Commercial transactions which are in the ordinary course of business at arm's length price, like sale of product services to the auditor as customer, is allowed, sir. Absolutely no problem. But outside arm's length price, not allowed. Disqualified. A person whose relative is a director or in the employment as a director or KMP, not allowed, because your audit scope, your responsibility, everything is fixed by these people. Therefore, they are telling no, you cannot become the auditor of our company. You will be disqualified. If imagine CA Karthik's father is a director or father is a KMP, not allowed. I will be disqualified. A person who is in full-time employment elsewhere or a person or a partner of a firm holding appointment as a partner for more than 20 companies. Meaning what? Here two things are there. Number one, who is in full-time employment elsewhere. See, if you are already an employee elsewhere, don't put your head into practice. That's what here law is saying. If you are already in a full-time employment, you are totally disqualified. Or you are not in a full-time employment, but you are in a part-time employment. In such case, what to do? You are a person or a partner who has accepted the appointment for more than 20 companies. Then you are disqualified. But in those 20, no, you should ignore few companies. Which are those? Number 1, OPC, small company, private company having PUC less than 100 CR. You should ignore all these people or all these companies. But in case of partnership firm, it is 20 companies per partner. Remember, for 20 companies, 3 things you should exclude: OPC, small company and private companies. Up to paid up capital of 100 crore you have to ignore. Remember, POS or SOP should be ignored. Small company, OPC company and private companies. Private company, not public company. Public company having even 1 CR paid up capital you have to consider. But private company up to 100 CR paid up capital you should not consider. You can take hundreds of companies, still no problem. But if it is a partnership firm, 20 companies per partner. Therefore, if it is a 10 partner, 10 into 20 is equal to 200 audits you can take. Specifically company audits we are talking about. But in those 200, 3 things, SOP will not be counted. Small companies, OPC companies and private companies whose paid up capital is 100 crore or lesser than that. Clear? Now, they said less than. Now, here I told 100 crore or less, but the wording is used what? Less than 100 crore. That means if it touches 100 crore also, you have to count. Be careful with respect to that. It should be less than 100. Even if it is equal to 100, it will be counted. Less than 100 only will be ignored. Be careful. Okay. Then, a person who has been convicted by a court of an offence involving fraud and a period of 10 years has not lapsed from the date of such conviction. Imagine now, for example, you have court held that you are a fraud. I mean, which you are, but it is not proven yet. But now imagine if you are a fraud and court has convicted you, which means an order has been passed. You should not take from the date on which the case was filed. You have to count that 10 years from the date on which the order was passed. So imagine now in January the case is filed, in April the order is passed that you are convicted. That means you are supposed to go to jail. In the month of April is when the order was passed. So from April 10 years you have to count and not from January. Because you know our country judicial system works so fast that like this cases will be solved. So we never know, right, what time it could take. So always you have to remember the date of such conviction, not the date of filing the case. Be careful with respect to that. MCQ can be asked. Then next, a person who directly or indirectly renders any services which is prohibited under section 144. Now what is this section 144? Is a new section? No, this section is where they have told you are not to render, you are not supposed to give certain services. What services are those? Those are called aids, but not the aids that you guys are thinking. Okay, here if you see section number 144, let me take you before your mind takes you elsewhere. Section number 144 talks about not to render certain services. See, these are the 8 services which you are not supposed to give, which you can remember it as aids. A for accounting and auditing services. Clear? I for internal audit, investment advisory, investment banking services. D for design and implementation of financial system. A is for again actuarial services, and S is for outsourced financial services, management services, other services. So basically AIDS, A square, I cube, S cube. Remember that way. Clear? It is aids. You are not supposed to give aids. Understood? Yes. Accounting, actuarial, internal audit, investment banking, investment advisory. Then D, design and implementation of financial information system, and S cube. S cube stands for outsourced financial services, management services, other services. Clear? Right. Now, generally you can give this service, you can give any services apart from audit if the board approves. But these services, even if board approves, you should not give such services. Okay, that's your section number 144. See, with that, we complete section number 141, subsection 3, disqualification, as well as section number 144. Subsequent disqualification, what do you mean by that? See, for example, general example we'll take. Now, they say, in Olympics, you cannot take drugs and participate. Okay, sir, on the selection date, I don't take drugs. After I get selected, can I take drugs and participate? No. See, subsequent disqualification means on the date of appointment, you should not be disqualified. Does that mean afterwards I can be disqualified? No, that's called subsequent disqualification. Even after you are appointed, if you attract any disqualification, then it is called a subsequent disqualification. And in that case, and in subsequent disqualification case, you should leave the office, and that leave is what we call as casual vacancy, and it will be called as deemed to be vacated. We will assume that you are not there in the office. Understood? Such vacation shall be deemed to be casual vacancy in the office of auditors. Section number 139H will come into the picture. 142 is very easy. Remuneration shall be fixed in case of if the auditor is appointed in the AGM, then the members only will fix in the general meeting. In case of first auditors, board will fix. In case of CAG, obviously government auditor, CAG will fix and company will pay. Okay. Right. The remuneration in addition to the fee payable includes the expenses to conduct the audit, meaning what? Hotel, stay, travel, everything will be included. But remuneration does not include any remuneration paid for any other services rendered by him at the request of the company. Apart from audit services, if you have given any other services at the request of the company, that will not be included in this particular remuneration. That is section number 142. 139, 140, 141, 142, 144 is done. Clear? We'll keep 143 pending now. We'll come to 145, 6 and 7. 145, who's supposed to sign? The one who is appointed only should sign. Random CA should not sign. If they appointed CA Karthik only should sign. None of the other person should sign. Any negative comment if he is making in the report, that particular comment should be read out in the general meeting, and that particular report shall be open for inspection. Because obviously negative comment, randomly if you are making some negative comment, it will affect the company's reputation and financial position. Therefore, it should be allowed for inspection. Should auditors attend AGM? The answer is 100% yes, unless and otherwise you are exempted. Clear? All notices, communication, everything should be forwarded to the CA of the company as well. Unless otherwise exempted by the company, he has to attend either by himself or he can send someone else. But who is that someone else? That someone else also should be a chartered accountant. Clear? He shall have a right to be heard at the meeting only on those businesses where it is concerning him as auditors. Those businesses where auditor's role is not there, he should not talk in the meeting. That is 146. 147, punishment for contravention. Penalty only on auditors is very important. For the CA, if you are an individual, 5 lakh or 4 times the remuneration, whichever is less. If you are a firm, very easy. In case of the firm, you will be paying 25 lakhs to 8 times the remuneration, whichever is less. You will get a free massage up to 1 year. That is, imprisonment will be there, free pickup, drop, and uniform and all they'll give. Okay. Good friend circle also you can make there. Like-minded people will be there. Not just this, but this is specifically if you deceive the company. Deceive the company means what? You are defrauding the people. Clear? Not just that. The company, shareholders, creditors, tax authorities, everyone. But if you have been convicted as above, you will be liable to refund the remuneration as well. So it is not just free massage spa. Whatever remuneration you have taken, that also should be refunded. Not just that, you have to pay damages to the company, statutory bodies, authorities, members, creditors, everyone. Basically, it is better you die. Clear? Because financially they will kill you with this particular provision. Okay. Excuse me, this is just a metaphorical way of telling you can die tomorrow. Don't record this video and sue me saying ChatGPT told that advice. Like that, Karthik sir also gave advice. I am not giving any advice. Please use your brain and take your own decision. CG may specify any body to ensure that these damages are paid to the people on time. Now that means it is nothing but one CC camera will be attached to you saying you are supposed to make the payment. No, have you made the payment or no? Who will come and tell me? This person will come and tell me. Clear? So CG will appoint one spy saying that whether you will be, whether are you paying the damages to the respected people or not. In case of firm, who will be liable, sir? Imagine 10 partners are there, one is fraud, all 9 will go, sir. Not all 10 will go inside the jail. The one who committed the fraud will go, but all 10 will be liable to pay money. Compensation, everyone will be liable. But taking massage, why sir? Why everyone should take massage? Only that fellow who did the fraud will take the massage. Very good.
Wow.
Right. Now the other liabilities under other acts will be Income Tax Act is there. Okay. CA Act 1949 is there, Life Insurance is there, Banking Regulation Act is there, depending upon the entity that you are auditing. Now let's talk about branch audit. Section number 128 subsection 1 talks about that every company shall prepare and keep at its main office, that is the registered office, the books of accounts and other relevant books and papers and financial statements for every financial year. It should give true and fair view. You have to explain the transaction. It should be on accrual basis and double entry system, general books of accounts. Okay. But sir, where do we maintain the books of accounts? Generally registered office only, but you are maintaining it in some other place, no problem. 7 days notice, MCQ, 7 days notice you have to give it to the ROC, giving full address of that other place. Now 128 subsection 2 also says that you have to maintain the branch books in the branch office only, and proper summarized returns periodically should be sent by the branch to the company at its main office. Then 143.8 talks about the branch audit. It shall be done by a CA only, but if the branch is outside India, the accounts shall be audited either by our own CA or an accountant or any other person qualified as per their act. Okay, that is a small kutty concept, nothing great in this. Joint audit is an exam question, important past exam question. They have asked this. What is that? Concept of joint audit. See, for example, in case of companies like Reliance ITC, the company is very big. Now, the company very big, can one person finish off within the given time? Not possible. Therefore, multiple CAs come together and do the audit. That's the concept of joint audit. What is the benefit? Past exam question. Even limitations are important. Clear? Guidelines are also important. Very small topic. Dependence on other auditors, and then we'll move to committee. Benefits. It reduces the workload. Let me give you the key highlights. Reduces the workload. Now in this case, timely completion of work is possible even in a large organization because of segregation of work. Expertise sharing is possible. Then improves the quality of the work, healthy competition, and benefit of extensive knowledge of different auditors at the same time. Mutual consultation. Clear? Mutual consultation. Mutual consultation. What are the limitations? See, superiority complex will be there. I am best, I am best, I am best, I am best, you are not good, you are a junior, I am a senior. That superiority complex will be there. Not suitable for small entity due to obviously cost. Lack of coordination, which means load on the speed of work because of complexity only. Uncertainty about the liability, common area will be neglected, and obviously they will have to share the fees. These are the limitations, but in some cases this can be asked as disadvantages also, so be careful. This can be called as disadvantages also. Guidelines, division of the work. First of all, the work should be divided between two people. What is your area, what is our area, what is common area, where both have to work. So division work may be with reference to assets, liabilities, income, expenditure, etc. Right, certain areas of work owing to the nature cannot be divided, therefore should be covered by all JAs. These are called common areas. Common areas. Then whatever division is done should be adequately documented and preferably communicated to the entity for coordination only. Then, if the joint auditor comes across any matter which is relevant to areas of responsibility of other JAs to deserve their attention, he has to communicate to all JAs in writing. Basically, it's a teamwork. So, if anyone gets to know about my work and I am not aware about it, you should come and tell me. Clear? That's what coordination is all about. This should be done before you submit the report. Relationship and their responsibilities. See, generally, very important question. On the other hand, all JAs are jointly and severally responsible. That means, generally, they are not severally responsible. They are responsible for only those areas which is segregated and separated and given to them. But there are areas where they are jointly and severally liable. Which are those areas? Those areas are: number one, work which is not divided among all JAs. Then decisions taken by all JAs considering nature, timing and extent of procedures. What type of procedures to perform? Everyone has taken the decision. See, in life, no. In life and audit, very simple. Consequences are because of your choices. You choose, then you can't complain. Good or bad, both. Similarly here, if you have taken the decision tomorrow, the negative or positive, you are only liable. Similarly, in joint auditors here, if you take a decision with respect to any common area, tomorrow the liability also will be on your head only. So whatever you do, it's your karma. So you decide, once you decide, you can't say, I don't want the consequences. Same logic here. If the decision is taken by all JAs for the procedures to be performed, tomorrow, if anything happens, everyone will be liable. Clear? However, be clarified that all JAs are responsible only in respect of the decisions concerning their area. Clear? Proper execution is a separate and specific responsibility. Sir, only on decisions considering what type of procedure, when and how much. But the execution part is respective people's job. For execution, you cannot make me liable. For decision, why that procedure was chosen, you can make me liable. That procedure was wrongly executed. For that, you can't make me liable. You have to make that person only liable. Clear? See, decision maker and doer are two different things. So, executive responsibility should be given to the executor only. Decision making you can put on my head because I decided that particular procedure. If any matter which is brought to the notice of JA by any one of them and on which there is an agreement among the JA. So some matter you got to know in the audit. Let's say for example, asset valuation did not happen properly. You came and told me. We all decided that okay, we will solve it and we forgot to solve it. Tomorrow everyone will become liable. Then with respect to compliance also everyone will become liable. Financial statement did not comply. Audit report did not comply. In any of such cases then everyone will become liable. Clear? Now generally we don't review our JA's work because obviously everyone is professional, so we don't sit and review whether they have worked properly or not. But can I rely on them, sir? You are entitled to rely upon other JAs for bringing to his notice any departure from gaps. Clear? Or any material error noticed in the course of audit. No problem. I can rely on it. Absolutely no issues. But it is not necessary for you to review the work performed by other JAs. Important. Reporting responsibilities, normally you give only one report, but if there is any disagreement, for the disagreement, each one of them should express his own opinion through a separate report. You are not bound by the views of majority. If you want, you can give any opinion you want. You are not forced. Clear? You can give any opinion. If 10 people are there, 9 of them are giving one opinion, you feel like giving different opinion, you can give, but give a separate report. Okay, that is with respect to your joint audit. Now, role of audit committee. Very important clause this is. Now, in case of audit committee formation, who should have audit committee? Definitely all listed companies. So apart from listed companies, which other companies must have audit committee? All public companies with paid up capital 10 CR or more, turnover 100 CR or more, or borrowings, outstanding loans, borrowings or debentures or deposit exceeding 50 CR or more. Now if you see here, it's all about public companies. That means for private companies, audit committee is not mandatory. MCQ, very important. Audit committee for private company, not mandatory. Audit company for listed company, mandatory. Audit company for all unlisted public companies. Either, now remember, it is TLP. I told you, remember one more key point I'll give you. Turnover will always be the highest. So turnover more than or equal to 100 CR. Loan more than or equal to 50 CR. Paid up capital more than or equal to 10 CR. Understood? Okay. Composition. How many people must be there? Minimum 3 directors with independent directors forming the majority. So 4 directors are there, 3 must be independent director. But if independent director is not there, don't worry. For such things only you need not appoint an AD. Okay. Now these majority of the members must have ability to read and understand the financial statements. Broad functions. This is a very important question, can be asked in the exam for 7 marks. What is their function? Recommending appointment, remuneration and terms of auditors, reviewing and monitor their independence and performance, checking the financial statements and report, auditor's report, approval of any modification or transaction, approval or subsequent modification of RPT and all. Then intercorporate loan and investment, valuation of assets and liabilities, evaluation of IFC and risk management system, monitoring the end use of funds raised through public offers. Now these are the functions which you're supposed to remember at any cost. Number 1, with respect to auditors, recommendation, remuneration and terms. Then with respect to, again, auditors only, independence and performance and effectiveness of process. Then financial statements and report, RPT, loan and these are transactions now. Okay, RPT, loans and investments, valuation, IFC and RMS, end use of funds. Be careful here. What power do they have? They can ask for auditor's comment on what? Committee may call for the comments of the auditors about internal control system, scope of audit. Any comment they want, audit committee can ask the CA, no problems at all. They have the authority to investigate into any matter with respect to the board. Clear, referred to it by the board or any item specified under section 177(4). So they have investigative powers in the company. Clear. But they have to obtain professional advice from external sources and have full access to information. Board report must disclose the composition of committee, and where board has not accepted any recommendation, same shall be disclosed in the report. Remember, I told you with respect to appointment, if you reject any recommendation with valid reasons, you have to reject that reason you have to write in board report. Whistleblowing policy, every listed company and company accepting public deposits or borrowing more than 50 CR from banks FI shall have a vigil mechanism, important MCQ. Okay. Safeguard against vigil mechanism. See, vigil mechanism here is nothing but where if somebody comes and says anything, whistleblower, any complaint is there, they should be protected at any cost. So, adequate safeguards against victimization of persons who use such mechanisms. Clear? Company shall disclose establishment of such mechanism on the website and in the board report. So, these are their powers. One is for comment, one is for investigation. Clear? One is for whistleblowing policy, right? And next is for composition, victimization, safeguards. Clear? 5 points. 5 points of power. Functions around 8 points are there, which can be asked for 7 marks. Be careful, right? So, therefore, if you actually see this particular unit, we have completed eligibility is done, qualification, disqualification, appointment, resignation, rotation. We are not done with rights and duties. Except for the right and duties, every other topic is done for us. Clear? We will keep it like this only. 143 at the end also we can do absolutely no issues with respect to that. Okay. Now, if you come just to the next particular unit, apart from cost audit, we will talk about secretarial audit. Now, this also is a past exam question, so please be careful here. Which company must have company secretary? Listed company for sure, public company having PUC of 50 CR or more, or same public company having turnover of 250 CR or more, or every company having outstanding of loans, borrowings from bank or FI of 100 CR or more. Every company, it includes private company as well as public company. They must have, with the board report, they should also have secretarial audit report given by company secretary in practice in form number MR3. So these people must have secretarial audit report attached, which means they have to have a secretarial audit. Applicability must be there by a practicing CS in form number Mr. 3. Okay. Then it shall be the duty of the company to give all assistance and facilities to CS in practice to conduct the audit. If a company or any officer contravenes the provision, he shall be liable for a penalty of 2 lakhs. SEBI regulation says every listed company and its material unlisted subsidiaries incorporated in India shall undertake secretarial audit and attached audit report. In addition to the above, every listed entity shall submit a secretarial compliance report to stock exchanges within 60 days from the end of financial year MCQ. This is specifically for listed entity within 60 days from the end of each financial year, that is by on or before 30th May of any year, they are supposed to give secretarial audit compliance report. Qualification, he should be a practicing CS. Appointment, who will appoint? Obviously by passing a board resolution, that means board of directors. Clear? He should accept the letter of engagement and the company shall report any change in the secretarial auditor during the financial year in the board report. Okay. Qualifications, observation or any comments of the in the report, negative report, must be read out in the meeting. Now in the report, what should be there? It should be given in form number MR3. Board report shall explain in full any negative comment of the secretary. Every listed company, as usual, 60 days time limit is there. Clear? SEBI has notified formats of annual secretarial audit report and annual secretarial compliance report for listed entities and their material subsidiaries. So basically, for listed company, SEBI will take care. For unlisted company, obviously they have given the rules, right? So in this case, no, applicability is important. So A to E, all these 5 points you write if you want the full 7 marks. Understood? Clear? Next unit, let's talk about report on internal control or internal financial control over financial reporting. We can call it in multiple names. We can call it ICOFR, internal control over financial reporting, or we can say IFCFR, internal financial control with respect to financial reporting. Now what is this? Internal financial control, where they say why did it come? First of all, to promote risk management and governance process. So basically it's internal control only. How does it look? It looks something like this, if you have to give an graphical representation for you. Now this is called internal control system. This is ICS. Okay, then within this there will be one more circle which we call it internal financial control. Then we'll have one more circle within this. Now this is what we call as ICOFR or IFC specifically for FR. So basically ICS is a bigger concept. ICOFR or IFCFR is a smaller concept. It's a small concept in one of the concept in ICS is ICOFR or IFCFR. Okay. So this is what we call it as, whatever we are learning right now is called internal financial control over financial reporting. Concept of IFC is the second circle we are discussing to promote what? Risk management. These are policies and procedures for to ensure that orderly and efficient conduct of business. Our business should be run properly. That's why we need systems. Adherence to company's policies. Policy should be followed properly. Asset must be safeguarded. Fraud must not happen. Accounting record must be completed properly, and reliable financial information must be there. Now these are the things which is there in internal financial control. IFC is for entire finances, but specifically ICOFR or IFCFR is financial reporting, the way you present, the way you prepare and present finances or financial statements. The importance is it is not only reducing the burden of the auditor, but also provides assurance with respect to appropriateness and the results generated thereon. Nothing great. Report must be given? Yes. The answer is yes. Where? Under section 143.3i, which talks about in your auditor's report, you have to state that whether the company has adequate IFC in place and the operating effectiveness of such control. So about IFC we have to comment. Not only that, even board of directors of all companies must tell in their board report whether adequacy of IFC is there or not. Reporting on IFC, what is my responsibility? This is important. As per 143.3i, we are supposed to state whether the company has adequate IFC in place and operating effectiveness. Further, rule 10a, this is old rule, you can just study. Clear? On or after 1st April, your auditor's report must state about existence of IFC and operating effectiveness, MCQ. Existence also should be commented on, and operating effectiveness also must be commented on. You may voluntarily include the statement referred to in this rule from the financial year commencing on or after 1st April 2014, but 1st April 2015 onwards you must. So this is mandatory must. This is voluntarily you may. As per the guidelines issued by ICAI, what is my objective in audit of IFC over FR is to express an opinion on the effectiveness and procedures with respect to that. So only two things: effectiveness of the company's IFC and the procedures are carried out along with the audit of FS. So basically my only objective is to give my opinion on effectiveness. So I need to give two opinions, one opinion on FS and one is the opinion on ICOFR. Globally, reporting on internal controls is together with reporting on FS. Like I said, two opinions we'll have to give, one on FS, one on ICS. Now, what do you mean by ICOFR? It's a process designed to provide assurance with respect to reliability of FR and preparation of FS for external purpose. This includes policies that pertain to maintenance of records, assurance that transactions are recorded as per the gaps, receipts and expenditure are as per authorization of management, and prevention or timely detection of unauthorized acquisition, use of company's assets. So this is safeguarding of assets, this is compliance with FS, and this is maintenance of records. Clear? This is important. Reporting on IFC will not be applicable with respect to interim financial statements such as quarterly or half yearly unless reporting is required under law or regulation. Currently, law or regulation is asking for you to comment on the yearly financial statements. Okay. Next, reporting on adequacy and operating effectiveness would apply even if CFS for the respective components included only if it's a company under the 2013 Act. Meaning what? Even on CFS report, see the two reports will give. Report on SFS, report on CFS. In both cases, I need to comment on these things. Clear? Okay. That is your IFC unit. Next is NFRA unit, National Financial Reporting Authority. One question you can expect here. What is this, sir? It's a quasi-judicial. What is quasi-judicial MCQ? Quasi-judicial means court-like, not exactly court, but court-like. Okay, so it has some court features. It looks like court, but not a court. Constitution, NFRA was constituted when 1st October 2018 by Government of India. The body will comprise of MCQ. How many people will be there? One chairman will be there. Clear? In addition, there can be maximum of 15 members. So totally 16 people can be there. Structure, 3 committees will be there: accounting standard, auditing standards, and enforcement committee. Enforcement committee is whatever law has been done, they enforce it. They ensure that you are executing it rightly. Functions and duties: recommending the standards, policies and standards, monitoring and enforcing the compliance with of the standards, whether you're following standards or not. They monitor also, they enforce also. Oversee the quality of the profession, meaning you can't do fraud left, right, center and get away. They will catch hold of you. And any other function as may be specified. At the end of the day, we are protecting the public interest and the interest of investors, creators and others. What is the role in auditing, sir? Important. Number 1, to recommend policies and standards. It shall receive recommendations from ICA for new standards, whether it is accounting or auditing, for amendments to existing standards. Either they can create or change. So from ICA they can receive recommendation. They may seek additional information from ICA on the recommendation received under clause A. So also additional information, receive recommendations. Consider the recommendations and additional information in such manner as it may deem fit before making recommendations. Monitoring and enforcing. For the purpose of monitoring and enforcing, they can review working papers, evaluate whether quality control system in your organization, documentation have you followed properly, any other testing of audit, supervisory and quality control procedure may be considered necessary or appropriate. Meaning whatever papers you have prepared of audit, they can review that. Number 1. Number 2, whether in your firm do you have quality control system. Number 2. Number 3, any other testing they can do with respect to your work. Then report on governance practices and internal process designed to promote audit quality, including risk of failure of the auditor, and may take such actions on the report as may be necessary. So they may ask you, require an auditor to report on governance practices and internal process. So in your firm or any company, they may ask you for reporting on such departments. They can ask additional information. They can perform its monitoring and enforcing activities through officers or experts with sufficient experience. Not only, see, it's not that NFRA only should execute. They can appoint someone and ensure that it can be executed. Clear? Publish its findings relating to non-compliance on its website. I've already given the website. You can click on it and get to know. Okay, if you go here, NFRA website will be opened. Right, and you can see whatever complaints, whatever reports you want, you can check it out. Okay, so whatever findings you have, they will publish on the website. You can go and check there. You want to know, take, you go here, orders, you will see NFRA order will be there. Here you can check. Okay, then shall not publish proprietary or confidential information unless it is required for public interest. They may send a separate report containing proprietary or confidential information to CJ. Of course, reporting will be done, but publicly it will not be available. Okay. If they have a reason to believe that you have violated anything, they may decide on the further course of investigation as well. That's where power to investigate will come into the picture. Investigate any matter of professional or other misconduct. Personal matters they cannot investigate. Undertake investigation into any matter on the basis of its compliance or oversight activities, and suo motu investigation into any matter. Now ICA can refer to them, ICSI can refer to them. Clear? Anything can be referred, or even they only can start taking actions only. That is called suo motu. Now during the investigation, if they have evidence to believe that any company or body corporate has not complied with the requirements under the Act or rules, or may involve fraud amounting to 1 crore or more, it shall report its finding to the central government. On the commencement of these rules, the action in respect of cases of professional or other misconduct against the auditors shall be initiated by the authority. That means any cases against the auditors shall be taken by NFRA. No other institute or body shall initiate or continue. Meaning, if I come, everyone stops there. That's what they're telling. If I take action, anyone who is taking action, they should stop, and anyone should not take action, is what authority says. In cases of professional or other misconduct against auditors, companies or body corporate other than those referred in Rule 3 shall continue to be proceeded by the ICA only. See, if any other apart from NFRA, any other proceedings it can continue. But whatever NFRA touches, imagine now ICA put a case on you and ICA is investigating. Now NFRA also investigating the same case. Now when NFRA is investigating the same case, ICAI should stop that investigation. They should continue other one, but they cannot simultaneously. Two people cannot do the investigation. Once NFRA touches an investigating matter, then no one else can do anything about it. Clear? So here, please be careful. This can be asked. NFRA's role in auditing can be asked in the exam. Right? With that, this unit also is done. Right. The next section is section number 143, which talks about powers and duties of auditors. In this, we have 12 subsections. In that, there are some subsections where you have to be a little more careful. Now, the first subsection talks about the powers of auditors. So what power does he have? He can have the right of access at all times to the books of accounts and vouchers of the company, whether you keep it at the register office or any other place. So basically, right of access to your books of accounts at all the time, he'll be having the right. Number 2, he can ask any information and explanation from any officers which he may consider necessary for audit purposes. That means personal questions and all he will not be asking. He can't ask also. He should not ask also. So apart from that, professional related questions he can definitely ask. Absolutely no issues with that. Okay. Then third one, in case of a holding company, if there is holding company, subsidiary company, the auditor of a holding company can also have the right of access to the records of subsidiaries, but only in one case. That is in case of consolidation of financial statements. Only for consolidation purposes, he can have the access to the books of subsidiaries. Apart from the consolidation purpose, no other purpose he can quote and get the access of the books. Okay. Now, what are his duties? Now, these are the matters of inquiry. Now, inquiry means just seeking information. Okay, seeking information. So, in case of matters of inquiry, what all matters he has to inquire about? First one, whether loans and advances made by the company on the basis of security have been properly secured and whether the terms on which they have been made are prejudicial to the interest of the company or its members. Meaning, if you have made any loan, if you have given any loan or taken any loan, whatever loans and advances that you have made on the basis of security, you make, no problem. A company can take loan, company can give loans, absolutely no issues. But you make those transactions in such a way that it is not affecting negatively to whom? To the company as well as members. Prejudicial means affecting adversely or negatively. It should not affect negatively to the company as well as members, because it is members' money which is there in the company. You cannot give it at a lower interest rate, or you can't take loan at a higher interest rate, because company will be affected by that. Clear? Whether the transaction of the company which are represented merely by book entries are prejudicial. Now, we should see whether these are prejudicial. It's not that it has to be negative. Clear? It should not be negative. So here what we should do, we should ask them, have we any book entries? Now, what do you mean by book entries? Closing entries, adjustment entries, like depreciation, etc. Clear? So closing entries or adjustment entries, in such cases you pass, but it should not be prejudicial to the interest of the company. It should not affect negatively to the interest of the company. Okay. Where the company not being an investment company or a banking company, whether so much of the assets of the company as consist of shares, debentures and other securities have been sold at a price less than which they were purchased. Meaning what? The sale price is less than cost. The sale price is less than cost. So in such case where the sale price is less than cost, we need to see one thing. Why did you make it? It's not that you can't make that sale. You make that sale, you sell it, no problem. But we want to ask what is the reason behind making that particular sale. Whether loans and advances shown as deposits. This generally happens in banking companies, where long back one bank had shown the loans and advances which they have got, they show it as deposit. Clear? So deposit is different, loans and advances is different. Okay, so do not mix both. Personal expenses have been charged to revenue account. Because of this, obviously company's profit will be it will take a big hit. So personal expenses should not be charged to P&L account. Your business expenses only should be charged to the revenue account. Whether it is stated in the books and documents of the company that any shares have been allotted for cash, whether cash has actually been received in respect of such allotment, and if no cash has actually been so received, whether the position stated in the account books and the balance sheet is correct, regular and not misleading. Meaning, if you have issued shares for cash, have you received the cash? If you have issued shares for consideration other than cash, then have you disclosed it in the books of accounts properly? Example, sir. See, if we issue shares for cash, obviously we'll be getting money, right? Money comes in, shares goes out. Whereas in case of amalgamation, when you're purchasing the business, so business comes in and you're giving shares, so shares go out, right? Therefore, in the second case where amalgamation example I gave, there you have issued shares for consideration other than cash. No problem, give it, absolutely okay. But in the notes to accounts, you have to clearly mention that this was for consideration other than cash. So if you give such disclosure, then the financial statements will not be misleading. Okay. Now, subsection 2 talks about reporting over accounts and financial statements. You have to make a report to the members of the company on the following: the accounts examined by him, on every financial statements laid before the company in the general meeting. So in your report, you have to mention that we have audited these two, the accounts as well as financial statements. Accounts in the sense here, books. I have examined the books, and your duty also is to make a report on financial statements. Clear? Right? Next, he shall express his opinion of the accounts and the financial statements examined by him. So he should give his opinion on the books of accounts as well as financial statements, whether it gives true and fair view or not. The said accounts and financial statements give true and fair view or not. Then, other elements, what should be covered in the report, sir? He should mention that he has obtained all the information and explanation which to the best of his knowledge has he received or not. It's not that he has to say, but he has to talk about whether he has received or not. Whether in his opinion, proper books of accounts has been kept by the company or not. In case if there is any branch of a company, now that branch should be audited. Yes. Now two people can audit that in branch audit. Either I only can do it, who's a main auditor, or we can appoint a different auditor for that particular branch. Now if I have only done that branch audit, then point number 3 will not come into the picture. But if I have not done the branch audit, someone else has done that branch audit, then point number 3 has to be mentioned in the report. Clear? Okay, so accounts of any branch office of the company audited under 143(8) by a person other than the company's auditor, and this fellow is called as branch auditor. So if someone else has audited that, whether the branch audit report has been sent to the main auditor and how he has dealt in preparing his main report. Okay, whether the company's balance sheet and P&L agreeing with the books of accounts or not. Are they complying with accounting standards or not? Is there any observation or comments you are making which has a negative effect on the functioning of the company? That also must be disclosed. Is there any director who is disqualified? Then any qualification, reservation or adverse remark relating to maintenance of account, negative point about maintenance of accounts, books of accounts, etc. Do they have any internal financial control system and about its operating effectiveness you have to comment on? And such other matters as may be prescribed. Now, rule number 11 again is an important rule. Here we will have to talk about only specific certain topics, which is at number 1. With respect to pending litigation, litigation is nothing but any cases filed. With respect to pending litigation, have you disclosed the impact on the financial statements? In the financial statements in itself, you have to disclose. So any litigation, contingent liabilities, contingencies, any commitments, is there anything that is having an impact? If yes, have you disclosed that impact in the financial statements? Disclosure should be given in the financial statements. Clear? Number 2, For foreseeable losses, foreseeable means what you can expect. For foreseeable losses, generally we make provision and keep. Clear? Provision generally is made, okay, for what? For those losses which you are anticipating, so that we will not suffer loss once for all. Little slowly, hole installments may we will suffer that particular loss. Clear? So we are trying to tell that any foreseeable losses that you are having, have you created a provision for that? Clear? Then, is there any delay in transferring amounts to IEPF? See, there are certain amounts under IEPF, Investor Education Protection Fund, under section 125, chapter number 8 of Companies Act. There are certain amounts which has to be transferred to IEPF after some time, okay, and within some time. Now, that particular time limit, have you complied? If not, under point number 3, I will be mentioning that. Okay. Point number 4 will come back. Point number 5, have you declared the dividend or paid during the year in compliance with section number 123? In vouching and verification, this dividend is important for you. Okay. This dividend part in vouching and verification unit. Vouching and verification unit, it becomes very important. So try and study that very thoroughly. Then, with respect to financial year commencing after 1st April 2022, have you used an accounting software which has a tool, which tool? Feature of recording the audit trail, and this particular thing has been operated throughout the year for all the transactions recorded in the software, and the trail feature has not been tampered with, and the trail has been preserved by the company. So what do you mean by this? This means very simple thing. Every company has to use accounting software which has a feature which records a trail. Trail is nothing but a path, an evidence. Now imagine you pass for entry, you delete an entry. No one will know that you have passed an entry. Now this feature will create a trail. If you put the entry, it will have a trail there. It will leave a shadow. Okay, you have passed from here. You delete an entry, that also will be recorded. So if you do that, tomorrow it will be easier for the auditors to detect the fraud. Clear? So now, if you technically see, this requirement is there under section 143 for auditors. Am I right? Now, under 143 for auditors, they have to see whether the company is using such software in accounting, so that the fraud, which if they are doing, we will have an evidence because of this particular shadow, right? So this audit trail, the trail is nothing but it gives an evidence that something was done here. Now that is a statutory requirement specifically to detect the fraud. Although they won't say it as a fraud, right? They just say that, okay, see, we can't stop fraudsters, right? We can't stop fraudsters, but can we ensure that the company is following at least these things, right? So that we can detect them. Our job is to prevent, but prevention is not happening. So that at least can we detect them and then correct them. Clear? Next. Now, stating negative or qualified matters. Where any of the matters required to be included in the report under this section is answered in the negative or with a qualification, report shall state the reasons. Clear? Any matter which you have given as a negative comment, you have to give reasons for that, and that reason should be given under 143 subsection 4. Clear? Next. Audit of government companies 5, 6, 7, that is subsection 5, subsection 6 and subsection 7. With respect to government audit, we have already done in your local bodies. I told you it's a government audit there also. Now in case of government audit, it is CAG who will take care of the auditors, everything, okay, who will audit and how they should audit. Then in that audit report, with all other elements, you have to specifically mention 3 things. These 3. What is that? The directions, if any, issued by the C&AG, the actions taken by them, and the impact on the accounts and financial statements. C&AG, if they are not happy or if they want more information, then within 60 days from the date of receipt of original report, they can conduct a supplementary audit either by the same person who did the main audit, such person means same person who did the main audit, or he may authorize any person on this behalf. Clear? Next, and for the purpose of such audit, he can require information or additional information to be furnished by any person in the company, and such person must be cooperating for this supplementary audit. And C&AG can also comment upon or supplement such audit report. They can comment on this report also, no issues. Any comments given by C&AG should be sent by the company to every person like members, trustees, representatives, legal heirs, all these people who is entitled to copies of audited financial statements under section 136, and it also be placed in the AGM at the same time. Clear? Like how you present your audit report, which means when government audit happens, government company has to give their financial statements, annual report, everything in the AGM. With that, they have to give C&AG ka report as well. C&AG ka comments also they should keep in the AGM so that members can get to know what comments C&AG has passed. Not only that, the copy of C&AG's comments should be given to those members who have the right to receive financial statements copy. Clear? That particular provision is there in section number 136 of Companies Act chapter number 9. Okay, right. Now that is with respect to 5, 6 and 7. Okay. Now with respect to branch, we have already done in branch audit. Clear? 143.8, if the branch is in India, company's principal auditor can do it, or you can appoint any other person. If the branch is outside India, company's CA or an accountant or a person who is qualified as per their laws. He will also have same rights as principal auditor. Clear? He should also prepare a report and forward to principal auditor. Principal CA will consider that report and then go ahead. Remember, I told you 143 subsection 3 point number 3. If there is different auditor in the branch audit, you have to consider his report also. Clear? He should also report on fraud. Fraud reporting will be applicable for him as well. Subsection 9 and subsection 10 is very easy. You have to comply with auditing standards. And who will give auditing standards? ICAI through CG. Okay, of course, NFR also will be involved. It is further provided that until any SA are notified, whatever SA is notified by ICAI shall be deemed to be the auditing standards. Right now we are following SAs only. Okay, alright. That is your section number 143, 1 to 11, except our indirect advancement one concept. Clear? Then we have to talk about fraud. For fraud, one chart will be there. That is sufficient. So for this, there is a chart. Okay. Now, very simple chart it is. All right. Let's see how it goes. See, as per section 143 subsection 12, if the fraud amount is less than 1 CR and if the fraud amount is more than or equal to 1 CR. If it is less than 1 CR, report within 2 days to Board of Directors or Audit Committee. Okay, Board of Directors or Audit Committee. Then BOD shall disclose nature of fraud, amount involved and parties who are involved. Okay. If it is more than 1 crore, then same logic, report to BOD. Okay. Once report is done, then 45 days time is there for the Board of Directors to respond. Now, if they respond within 45 days, what to do? If they do not respond, what to do? If they respond, forward report, response, and my comments on the response. My comments on the response. This you have to forward within 15 days to CG. Okay, within 15 days of the response to the CG. If they do not respond, same you have to forward the report, and a statement that we have forwarded the report to BOD, but BOD has not responded up until 45 days. Statement of non-response. This also you have to send within 15 days, but this 15 days is after 45 days. Okay, whereas this 15 days is after response. Alright, then you have to send it in RPAD mode or speed post, or rather registered post and speed post. Okay, RPAD is very important. To the secretary of MCA, in the letterhead of the auditors, letterhead of auditor, in form number ADT4. Okay, of course sealed cover, because it is confidential information, therefore sealed cover. Alright, so this is how you will be sending your, or you will be reporting with respect to your fraud. Okay, now this, our responsibility is not to identify fraud, our responsibility is to do the audit. While doing the audit, if we come across a fraud, this is how we need to report it. Clear? That is section number 143.12. 1 crore or above, if it is there in the company by its officers or employees, you shall report the matter to CG. Alright, not later than 2 days of his knowledge, or to tell it to the board or audit committee, and wait for 45 days. On receipt, forward the report, reply and your comments within 15 days from the date of receipt. If they fail to get a response within 45 days, you shall forward the report to the CG with the note. Clear? Again, say 15 days from the 45 days, or rather right after the 45 days. Then it shall be sent to Secretary of Ministry of Corporate Affairs in a sealed cover, RPAD or speed post, followed by an email confirmation. Letterhead of the auditor, okay, where you will give your membership number, mobile number, telephone number, etc. Okay, it should be in form number 84. If it is less than 1 crore, then the report to the board immediately within 2 days, and he shall report the matter specifying the following. So you should tell the board nature, approximate amount and parties involved, and following details of each of the fraud report in the audit committee or board under the during year shall be disclosed in the board report. Nature, amount, parties involved, remedial actions taken. The companies whose auditors have reported frauds to the committee or board but not reported to central government shall disclose the details about such frauds in the board report. This is what I am talking about. Clear? Such details you have to put in the board report as well. Okay, that is your section number 143 entire clause, except for indirect advancement of funds. Indirect advancement of funds is very easy. Just try to understand one diagram. Okay, now imagine this is your company. Okay, Arjun Limited. There is a person here, or there could be an entity here. Alright. Then, similarly, there's one more company here. Let's say Karan Limited. Okay. Now, Arjun has to send money to Karan Limited. Arjun has to send money to Karan Limited. But if I directly send it, I'll have to disclose it in the financial statements, and I don't want to tell anyone, yet I need to send money to Karan Limited. So directly I will not send. Directly I don't want to send. So what I'll do, I will first transfer money to this person or entity, and we both will have an arrangement. Okay, we both will have an arrangement saying that whatever money I am giving it to you, this money you have to forward it to Current Limited. So it's an agreement between these two people. Clear? It's an agreement between these two people. This one and this one, Arjun Limited and the intermediary. This person is what we call as intermediary. So we need to ask Arjun Limited. We are here. Okay, we need to ask Arjun Limited, have you given any money to Current Limited? Have you given any money to Current Limited? How, sir? In such a way where you have given that money to intermediary with an arrangement that that intermediary should give that money to Current. Clear? Now, have you given something like this? If yes, then we need to report. Clear? So, have you given any money like that? That will come under point number A here. Rather here only. See, this is that particular point. This point is with respect to the best of his knowledge. Have you, no funds have been advanced, loaned or invested. So, have you given any money? Second one is ulta. We will not be here. Now, we will be here. Now we will be here. So we need to ask as, now imagine Arjun Limited is intermediary. So we need to ask Arjun Limited, have you received any money from someone to give it to someone? In the first case, we were Arjun Limited, who we were giving money to someone, and that someone should give it to ultimate beneficiary. In the second case, we are being intermediary. So I will be asking Arjun Limited, have you received any money from someone with an arrangement that you have to give it to someone. So in both cases, you should not be receiving money also. You should not be giving money also, Azhar. No, you give, you receive, but disclose it. Clear? The matter here is, we need to disclose. So that is your point number 1 and point number 2. This is a concept of it. Understood? Clear? Whether management as represented, have they given any money to the intermediary with an arrangement that ultimate beneficiary will get? Second, have you received any money as an intermediary, have you received, so that you will give that money to someone else on behalf of some other party. So you should not be an intermediary also. You should not be the one who is giving also. Clear? That's your point number 1 and that's your point number 2. Clear? Point number 3 is nothing but we do some procedures and then we report whether they have given or whether they have received. Right? This is your section number 143. Let's begin with the next unit, that is cost audit. Important. What is the importance of cost audit? Gives us, see, whenever an audit happens, it gives us proper data. So it gives us authentic data, thereby helps in decision making on what pricing policy, product mix, outsourcing, discontinuance, etc. So basically it helps in decision making by providing authentic data, number 1. Number 2, identifies the inefficiencies, therefore improving the productivity. Wherever weaknesses are there, it can be identified and then we can improve on that. Optimum utilization of limited resources. See, resources we don't have in abundance. Water, it could be, air also. Air, water, human resources. We don't have in abundance, right? So we have limited resources. Some are natural resources which are extremely limited. So how we have to use it in an optimum manner, cost audit will help you out. Clear? It appraises a cost control mechanism followed in the organization, may form the basis for determining the standard cost data. Then, government sometimes decides certain things on extending or abolishing tariff protection based on audited data. Again, government can use CA's data or CMA's data. Application of cost records important. Where all cost records is applicable. Who should maintain cost records first of all? Those companies which are under regulated and non-regulated list. Clear? CG will issue 2 lists. One is regulated list, one is called non-regulated. There are around 39 sectors now. Clear? Out of which 6 are regulated, 33 are non-regulated. So they'll give you a list. If you are under that list, then you have to maintain cost records. And these companies who are engaged in the production of goods or providing services having overall turnover from all the products and services of 35 crore or more during the immediately preceding financial year, they are supposed to maintain cost records. So basically, if you are there, for example, milk, sugar, yes, so there are a certain list of it. So if you are involved in such particular sectors and you are into production, then overall turnover, all turnover inclusive, if it is crossing or if it is equaling 35 CR, then you have to maintain cost records. This company shall also include foreign company defined in 2 clause 42 of the Act, which says companies incorporated outside India and having place of business in India. Clear? But excludes a company classified as micro or small in MSME. Now, medium enterprises covered, only micro and small enterprises excluded from maintaining cost records, even though you are in that sector. For you, it is not at all applicable if you are two types of company. One is called small enterprise, one is called micro enterprise. For medium enterprise, it is still applicable. Okay. Next, applicability of cost audit. Now, for this, directly you come to the chart. First of all, try to understand cost audit is not applicable for whom? Cost audit shall not apply to 3 types of companies whose revenue from exports in foreign exchange exceeds 75% of total revenue. That means if your foreign exchange is 75% of your total revenue from exports, then cost audit is not applicable. We'll give you exemption for you. Do freely, no problem. Export freely. Clear? But total revenue into 75% is clear. So imagine your total revenue is 100. 75% of 100 is 75. If your revenue from exports in foreign exchange is more than 75, then go ahead with it. You need not have any cost audit applicability at all. Okay. Records you have to maintain, but audit is not necessary. Okay. Any company which is operating from SEZ also, for you it is not applicable. Clear? Then if you are in generation of electricity for captive consumption through captive generating plant, for this purpose captive generating plant shall have the same meaning under electricity rules 2005. Basically captive consumption means, now you would have seen in some factory, inside the factory only they'll have this transformer and other things, right? Now if you are involved in generation of electricity, you are only generating electricity for your consumption, then cost audit is not necessary because you are doing good, right? You are generating electricity for your own purpose, not for others. So if you are into generation of electricity for captive consumption through CGP, captive generating plant, then no problem for you. Cost audit is not at all applicable for you. Okay, that's the chart here. Applicability of cost audit, regulated sectors and non-regulated sectors. Regulated sectors, whether you are regulated or whether you are non-regulated, if your revenue from foreign exchange is more than 75%, if you are doing business in SEZ, then cost audit shall not apply. Only rule 3 will apply. That means cost records you have to maintain, cost audit you need not have. Clear? Same thing for here also, non-regulated also. Now forget about this. If you are into regulatory sector and your overall annual turnover during immediately preceding financial year is more than or equal to 50 CR, plus aggregate turnover of individual product is more than or equal to 25 CR, then cost audit is mandatory. Meaning, imagine let me just show you the list of it. Now if you see, this is your regulated sectors. Okay, let's say telecommunications is there, generation of electricity is there, petroleum products, drugs and pharmaceutical, fertilizer, sugar. Now imagine you are into sugar manufacturing, okay, and industrial alcohol. Now when you are manufacturing sugar, you come under the regulated sectors. So imagine you are manufacturing sugar, you are manufacturing, let's say for example, fans and mic. Now when you are manufacturing, you will come under regulatory sector or regulated sectors. Now overall annual turnover, meaning what? Your sugar turnover plus fan turnover plus mic turnover, all put together, if it is more than or equal to 50 crore, one criteria, first criteria is matched. Second criteria we have to check, individual product or services, if it is more than or equal to 25 CR. Which individual we have to see? Only the sugar one. If your total turnover is more than 50 CR and the sugar one here is more than or equal to 25 CR, then only cost audit is mandatory, because the text says here, every company specified in item number A, let's say for example sugar, shall be required to get its cost records audited in accordance with these rules if the overall annual turnover of the company from all the products and services during the immediately preceding financial year is rupees 50 CR or more, and aggregate turnover of individual product for which cost records are required to be maintained under rule 3 is 25 CR or more. For which one cost record is mandatory? For those who are involved in regulated or non-regulatory sectors. Clear or not? Here. Under regulated or non-regulated sectors. So, in my example, you are manufacturing sugar, you are manufacturing mic, plus you are manufacturing fan. All put together, if it is more than or equal to 50 CR, plus only the sugar turnover is more than or equal to 25 CR, then only cost audit will be mandatory. Otherwise, cost audit will not be mandatory. Similarly, for item number B, that is if you are involved in non-regulatory sectors, for you, overall annual turnover of the company from all the products and services during the immediately preceding financial year is rupees 100 crore or more, and aggregate turnover of individual product is 35 CR or more. So if you are into item number A, that is regulatory sectors, then 50 and 25. If it is non-regulatory sectors, it is 100 and 35. Okay, be careful with respect to that. Right, 100 and 35, 50 and 25. Clear? Okay, you have to get cost audit also. Maintenance of records, every company has to maintain the cost records in form number CRA1. Okay, in case of company covered in serial number 12 and 24 to 32 of non-regulatory sectors, then this rule shall apply in respect of each of its financial year after 1st April 2015. You can ignore this. Okay, you can ignore this. Basically CRA1. Then it shall be maintained on a regular basis. Okay, in such manner as to facilitate calculation of per unit cost of production or cost of operations or sales and margin for every financial year on monthly or quarterly or half yearly or annual basis. So you have to maintain on a regular basis. It will be monthly records, half yearly records, quarterly records, yearly records. Yeah. Then disqualification, same as section 141 subsection 3 for statutory auditors, whatever is applicable, same. Remuneration, decided by the board, recommended by the committee, ratified by the shareholder subsequently. So AC will recommend to BOD, BOD will decide on it, and shareholders will ratify. Ratify means give more validation to it. Clear? Yes. Then, if the company does not have audit committee, then the board shall appoint an individual who is a cost accountant, and therefore the remuneration also shall be ratified by shareholders subsequently. There is no committee here. So board will appoint, board will recommend, board will decide, shareholders will ratify. Rights and duties, same as what is applicable for statutories. Okay. Submission of cost audit report, important. Every cost auditor who conducts audit of cost records submit the cost audit report along with the reservations in form number CRA3. These form numbers MCQ, important. Next, after this, forward his duly signed report to the board of directors within a period of 108 days from the closure of financial year. 180 days from the closure of financial year will come up somewhere around September 27th. Then what should company do? Company within 30 days furnish the central government with such report along with full information and explanation in form number CRA 4 in what mode? XBRL mode, extensible business reporting language. The cost auditor will give it to the management has to send it to the central government. If you have got extended time, within that extended time. Okay. Forms relevant: CRA 1 is for what? Cost records maintenance. CRA 2, appointment of auditors. CRA 3, report. CRA 4, report to CG. Okay. What should be there in the report? He has obtained all the information and explanation for the purpose of the audit. Whether in his opinion proper cost records have been maintained by the company, proper adequate returns from the branch has been received which is not visited by him, the books and records give true and fair view, give the information required by the act, company has adequate system of internal audit which is according to the scenarios of the company, commensurate means according to the size of the company. Clear? Then whether in his opinion information statements in the annexure give true and fair view. Information statements in the annexure to the report give true and fair view. Whether detailed unit wise, product service wise cost statements and schedules are duly audited and certified by him are kept in the company. Meaning, have they kept all these product wise, unit wise summary in the organization or not? Clear? These reporting requirements, be careful in the exam. They can ask. Clear? Yes. Alright. So this is your cost audit unit. One question you can expect from cost audit unit. Be careful. Okay. Yes. So the next important topic that we are going to discuss, revise, is audit report CARO. Normal audit report SA 700, 705, 706, and then we'll be discussing with respect to CARO as well. Now, two major things we have to understand while giving report is what is our responsibility and what is management's responsibility. Management's responsibility is to prepare financial statements as well as their responsibilities with respect to internal control systems. Okay, so management is responsible for preparation of FS as well as necessary ICS. It is their responsibility, not ours. We are here to just check whether the financial statements are prepared as per the standards, as per the law, as per the regulation. We are not here to sit and prepare FS. That's not why we did CA, CMA. We are here to audit them, to check whether whatever is required, have you disclosed that in the financial statements or not. Now, why do we need to do the audit? Obviously, to increase the confidence of the users on the financial statements. So, whoever is using that financial statements, their confidence should be more. Now, how do we achieve this purpose? By providing independent opinion. That's why if you go and check the definition of audit, what is mentioned? Audit is an independent examination of financial information. So we give independent opinion whether the financial statements give true and fair view. Therefore, report is an opinion drawn on financial statements to make sure that records are true and fair representation of the transaction they claim to represent. So meaning, our audit report is nothing but a conclusion of our examination. Whatever examination we have done, we are concluding on that saying how much we believe that the financial statement is true and fair. So for that, SA 700 deals with the responsibility to form an opinion on the financial statements. It also deals with the form and content, what should be there and how it should be there, the design. Design and content. Okay, what are the basic elements, sir? So before that you need to understand, sir, when we give under SA 700 to form an opinion, what are the different forms of opinion we can give? We have two types of major types of opinion. One is called as unmodified opinion. One is called as what? Unmodified opinion. And one more is what we call as modified opinion. One is called as unmodified opinion and one is called as modified opinion. Now, what do you mean by unmodified opinion? Unmodified means the best opinion an auditor can ever give. Saying, sir, whatever financial statements you have prepared are beautiful, wonderful, superb, amazing. It is as per requirements only, as per the standards only, as per the law only. That type of opinion is what we call as unmodified opinion, the best opinion. Now, in modified opinion, there are three different types of modifications which will be quickly going through in SA 705. We say if the financial statements are not prepared as per the standards, laws, statutes, regulations and all, we say we will be giving modified opinion. So anything less than best, it could be good, it could be bad, it could be worst. All these three will come under modified opinion. Clear? Although we don't say good, bad, worst, we say qualified, we say adverse, and then we say disclaimer. Okay, qualified means good, adverse means bad for us, disclaimer means worst for us. Okay, so these are the opinion, but in SA 700 we will not be talking about modified opinion. This entire modified opinion conversation will be happening in 705. Okay, SA 705. So what are the basic elements? What are the basic elements? Number one, first is title. The report shall have a title clearly which indicates that the report is an independent auditor's report. Now I will show you the actual report. Yeah, finally got loaded. Right, see here, this is called title. This is called title. This is called addressee. Okay, so if you see a title, it clearly indicates that it's a report of an independent auditor. Addressee, to whom you are actually giving it, right? It is based on the circumstance of the engagement. Law or regulation or the terms may specify to whom report is to be addressed. Normally, it is addressed to those for whom the report is prepared, often either to the shareholders or PCWG. Okay, so it's normally shareholders or PCWG whose financial statements are being audited. So generally, if you see it, that's why I told you its address is given to whom now? Members. See here, independent auditors report and given to the members. That is nothing but shareholders. Okay, next. In case of a company, it's shareholders. If it's a partnership firm, partners. If it's proprietor, obviously it is a proprietary concern. So we'll be giving it to the proprietor itself. Here. Next section will be obviously the opinion section. Here also if you see, opinion section is there. So the first section of the report shall include the opinion and shall have the heading called opinion. Here you have to identify the entity whose financial statements are being audited. So here see, entity has been identified, ITC Limited. Then state the financial statements have been audited. We have audited. Then identify the title of each statements here. Balance sheet, P&L, right? Cash flow statement, statement of changes in equity, notes and explanatory information. So each title has to be separately identified there. Refer to the notes including the summary of significant accounting policy which I have underlined there. Specify the date or period covered. Here they have covered the date only, March 31st, 2025. Okay. Next paragraph is nothing but basis for your opinion. So this is your opinion para, next is your basis. On what basis you have given that particular opinion. It shall include a section directly following the opinion section with a heading called basis for opinion, where you clearly state that audit was conducted in accordance with standards on auditing. Here, we conducted our audit as per standards on auditing. Yes, clearly given. Refers to the section of the report that describes the responsibility. Our responsibilities under those standards are further described in responsibilities for audit of standalone financial statement section of our report. So here we can go and check is what they are telling. Then includes a statement that auditor is independent of the entity and has fulfilled the other ethical responsibilities. So here he should tell, saying that we are independent according to the code of ethics and we have fulfilled our ethical responsibilities. Clearly given. States whether the auditor believes that the evidence provides a proper basis. Yes, we believe that evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. So this is your reporting structure. So if you see exactly the same, practically we apply. Next is going concern. Now going concern only if there is a problem, this particular paragraph will be there. Otherwise this paragraph will not be there. That's why it is mentioned as where applicable, you shall report in accordance that the financial statements are prepared on the assumption that entity is a going concern and will continue its operations for the foreseeable future. Meaning what? Meaning what? When going concern problems are there, only then this para you will see in any report, otherwise you will not see directly, you will see the next one called key audit matters, right? So going concern problem, only if there is a problem we will put that particular point in the report. If everything is going well, we will not put that point in the report. Okay. Key audit matters. Next is key audit matters, we call it as CAM. Okay. So as per SA 701, this disclosure is given generally. Clear? Now, for all listed companies, communicating key audit matters is mandatory. For unlisted companies and other companies, it's not mandatory, but if you want, you can go ahead with it. So you shall do so. If you are putting KM matter, you shall do so as per SA 701. Law or regulation may require communication other than listed entities. Clear? But for listed entities, it is mandatory. Absolutely mandatory. Next is responsibilities for the financial statements. It is nothing but management's responsibility para. Here. Okay. Responsibilities of management for standalone financial statements. So it is preparing financial statements according to AFRF is their responsibility. ICS is their responsibility. We already seen this. Clear? Going concern is their responsibility. All three things are their responsibility. Next comes the auditor's responsibility para, which is there here. Here. My responsibility. What is my responsibility? In this particular para, what you should explain. First, your objectives are what? Why are you doing the audit? My objective is to obtain reasonable assurance whether FS are prepared properly or not. Number one. Number two is my objective is to report. These are the two things. Clear? Then you should also state that reasonable assurance is a high level of assurance but is not a guarantee. Which means what? Just based on my opinion, don't put your money into the company. Your money can be lost as well. So don't just put money based on my opinion. I can only give you a reasonable assurance. I cannot give you an absolute assurance. Also mention that misstatement can arise from fraud or error, because see, when you say, you should always also say that when I do the audit, it is not a guarantee that all small mistakes or even bigger misstatements, everything I will find. No, I will find according to my procedure. Clear? So you have to clearly say, it doesn't mean that I will always detect a material misstatement when it exists. Something I may not understand. Rather than understanding, I will withdraw my word there. It's rather than understanding, I'll say my audit will never ever detect 100% material misstatement, because obviously we don't have that much time to sit and verify each and every transaction. So on a sample basis, when I give my opinion, so I should tell them it is not a guarantee. So don't go with just my opinion. Use your brain as well is a subtle way of telling that. So state that all misstatement can be due to fraud or error, and either describe that they are considered material if it is influencing the economic decision. What do you mean by economic decisions? Excuse me. Economic decision means whether I should put more money into the company or remove my money from the company. Clear? That is what we say economic decisions, or provide a definition of materiality. So in your responsibility paragraph, you have to tell that, see boss, reasonable assurance is a high level of assurance. We can't give guarantee, and then it doesn't mean that every time I will find material misstatement. And my audit does not mean that 100% guarantee you can take. Now what is materiality? I have considered only those which will influence your economic decision. So if each and every misstatements I will definitely not be able to find. In addition to the above, this section shall also tell that you have exercised your professional judgment and you have maintained your skepticism throughout the audit. Professional skepticism is nothing but a questioning mind where you keep asking more and more questions. State that responsibilities, what is your responsibilities, are to identify and assess the risk, obtain understanding of ICS, then whatever accounting practices you are following with respect to that, I should evaluate whether it is appropriate or not, whether it is suitable or not. Then comment on the management's use of going concern concept, whether whatever going concern assumption management has taken, whether it is appropriate or not. Basically, according to the standard, no, for 12 months you have to assume that you are having going concern and your business will go good. Your business will have solvency for the next 12 months. But this, for the minimum of 12 months you should do. If you do for the less than 12 months, that means the going concern assumption is not appropriate. Understood? Clear? Okay, next. Location of the description of the responsibility. Where should I put all these responsibilities? Should I put it in the report? Yes. Within the body of the report? No problem. Number 2. Can I give it as an annexure or an attachment? Yes. Within an appendix of the report, in which case your report shall include a reference to that location. Like we have attached annexure 1 where I have given the report. So annexure also you can put, attachment also you can put. Or you can put it in a website and that link you can give it in your report. By a specific reference within the report to the location of such description on a website of an appropriate authority where law, regulation or national auditing standards expressly permit the auditors to do so. Only if you are permitted, you can put in the website and then give a link here. Otherwise, you cannot do that. Okay. Next. Other reporting responsibilities. Here is where CARO 2020 will come into the picture. Clear? Okay. Now, signature. Who should sign? It should be signed by the engagement partner who will be called as an auditor, right? In his personal name. Personal name means what is it? Individual name. If the firm is appointed, then the signature should be in the name of the firm as well as in the name of the CA. He should mention his membership number, which is given by ICAI. Clear? Also, if it's the firm registration number also should be mentioned in the report. Check it out. See, for firm name is there, individual name is there, firm registration number is there, individual number is there, and then you have to have something called as UDIN, unique document identification number. Place of signature is location, where the city where the report is signed. Here, where is it signed? Kolkata. Okay. Date of report. Date is when you receive your ultimate evidence, that is sufficient appropriate audit evidence. After this, you should not receive any evidence, you should not do any procedures. Clear? So it should not be earlier than the date on which you have obtained SAI, on which you are giving the opinion. So on or before the evidence date. After this, you cannot put any procedure, you cannot put any, you cannot receive any evidence. Clear? Then, that is your SA 700. UDIN and all I have already covered. Who should have UDIN? Those who have full-time COP. Clear? Only they will get UDIN. This particular number. Clear? Yes, this is SA 700. Next is SA 705, which specifically talks about modifications. Okay. Now, unmodified opinion is that's a default opinion. We never form an unmodified opinion. For unmodified opinion is a default opinion. When we change that particular opinion is what we call as modified opinion. Now, when will modification be required? In two scenarios, modification is required. Number one, you have evidence that there is a misstatement which is at a bigger level. Clear? Therefore, you have an evidence that material misstatement is there. So, when you conclude based on the evidence obtained that the financial statements as a whole are not free from material misstatement, you give modified opinion. Second one, you are not at all able to obtain any evidence to conclude that financial statements are free from material misstatement. So in such cases, in both these cases, you can choose to give modified opinion, but it's not that both cases will happen together. Clear? It is either of it. So in these scenarios is where modifications will be required. Number one, evidence is there that material misstatement is there. Number two, that you are not able to obtain any psi. Okay. Now, this will come back for pervasiveness. So what is my objective? It is the same, concluding that based on evidence that material misstatement is there and I am unable to obtain psi. Types of opinion, directly you can come to this particular box. Now, there are two factors to give modifications. Factor number one, the misstatement is material, which in SA 705, we will touch SA 705 only if the misstatement is material. If the misstatement is immaterial, we will never be touching SA 705. Be very careful with respect to this conceptual clarity. Clear? We will touch SA 705 only and only when misstatement is material. Otherwise, we will not be bothered to come to SA 705. So, misstatement is definitely material. The second factor is what we call as pervasiveness. Now, what I mean by pervasiveness? See, when we talk about pervasive, now we'll come back to the definition of the pervasive. Very simple to understand. Pervasive means it is a word to define the effect of misstatement. In the context of misstatement, it is to describe the effect on the financial statements of misstatement. How do we describe? For example, if I say, how is the food? Very good. That very good is a definition term. Similarly here, how that misstatement can affect, we use a word called pervasive. So, if the misstatement can affect in multiple places, it is called as pervasive misstatement. If the misstatement does not affect in multiple places, it is called non-pervasive. For example, now imagine you take a drop of let's say watercolor, and you put it in a mug of water. The entire water color changes. Now the drop of that watercolor is what we call as pervasive. But if you take a drop of oil and put it in the water, the oil floats and it is non-pervasive in nature. Clear? So similarly, same logic we use here. Pervasive means that misstatement which affects in multiple places is what we call as pervasive. Otherwise it is called non-pervasive. Clear? Now, generally this is a meaning, but in case of auditing, there are three different meanings of pervasive. Pervasive effect are those that in our judgment, in auditor's judgment, we are telling it is not limited to specific elements, accounts or items, which means it will affect multiple elements. It will affect what? Multiple elements. Number one. Number two, even if it is limited, it could represent a substantial proportion of the financial statements. Imagine your entire assets is 1 lakh rupees and your inventory itself is 45,000. Now in that means 45% of your total asset is inventory, and if inventory only is wrong, the majority of the financial statements can go wrong. So even if it is one item, but it is a substantial proportion of your financial statements, that also will be called as pervasive. With respect to disclosure, what is pervasive? If it is required for the users to understand the financial statements, fundamental to users' understanding of financial statements. For example, going concern as a problem, you did not mention it to the users. Although it is not affecting multiple places, it is not even affecting the financial statements properly, but you did not disclose it to your users, which is a basic fundamental understanding they should have. Because of going concern only, now they can take a decision, and there you have gone wrong. Therefore, the non-disclosure will be called as pervasive. Yeah. See, you stealing 2 rupee was not the problem for your parent. Now, if you steal 2 rupees is not the problem. You stealing is a problem. If you tell it and take it, they don't have a problem. Now, you don't tell it. That is where you have gone wrong. Similarly, here, with respect to disclosure, yes, disclosure of important things, if you do not tell it, is called pervasive. Non-important thing, no problem. Now let's try and understand the table. Directly you come to the table rather than the text. Now, nature of matter giving rise to modification. I told you here we take an assumption that the misstatements are always material. If the financial statements are materially misstated, now check the pervasiveness of it. If it is not pervasive, then you give qualified opinion. If it is pervasive, then you give adverse opinion. Remember, you have to go like this. You start from here, okay, then you come like this. Similarly here, you go here and then you come here, okay. So here, if financial statements are materially misstated, that means we have evidence that misstatement is there. We have SAI. If misstatement is there, and that misstatement is not pervasive, then we give qualified opinion. If misstatement is there, we have evidence and it is pervasive, we give adverse opinion. If you are unable to obtain SAI altogether, not at all able to obtain SAI, you can't tell good, you can't tell bad, but you have to take a judgment. Could it be bad? Could it be good? You can't say it is best anyway. Clear? Now, if you think that, okay, the possible misstatement, I don't know, I don't have any evidence. The possible misstatement, if you consider that as non-pervasive, then you give qualified opinion. If the possible misstatement you are considering it as pervasive, then you give disclaimer of opinion. Clear? Just understand the table here, just understand the relation between each other. You have evidence that misstatement is there, you tell it is non-pervasive, qualified. Misstatement is there, pervasive, adverse. No evidence at all, possibility, it may be material but not pervasive, qualified. It may be material also, it may be pervasive also. If you take a judgment that way, then you give disclaimer. All in all, opinion is your judgment. Tomorrow you will be the responsible person for your own opinion. Okay, that is your essay 705, which talks about modified opinions. Next, let's talk about essay 706, the last standard of reporting in a syllabus, EOM and OM para. See, it's a very simple thing. EOM and OM para is nothing but an additional paragraph where I am not including anything new here. Clear? Here, it is just that out of 1000 topics in the financial statements and in the audit report, I want you to focus on very important topics. Now, for example, so many words are there. If I highlight this objective, that means your attention will go there now first. So, EOM is like that highlighting. But to highlight, there should be something already disclosed or included in the financial statements. If it is not disclosed or included in the financial statements, then EOM para will never work properly. So if I have to include any matter in EOM para, that means the matter should already be there in the financial statements. So this standard we will be taking only in two cases where we want case is only one, but there are two places where we can disclose. I will be taking the help of essay 706 only in one case where I want you to focus on certain matters. Now the question is, which matter? If the matter is from financial statements alone, that matter should be put in EOM para. If the matter is not from financial statements, it is outside the purview of financial statements, then it should be put in other matter para. Example, sir, to understand the concept. Imagine now, inventory valuation is not done, a physical verification of inventory was not done during COVID. Right? Now still, it is there in the financial statements, inventory valuation is there in the FS. Now I did not do the physical verification of it. Right? Now I want you to know that, where will I put? I will put it in EOM para saying, we have not done physical verification of inventory valuation disclosed in the financial statements. Or we draw your attention to note number 4, so and so, etc. So when I say that, it should already be there in the financial statements. If it is not there in the financial statements, it will not be coming under EOM para, it will be coming under other matter paragraph. Example for that, sir. The client is getting his books of accounts audited for the first time in the current year. That means opening balance should be checked. Now opening balance is nothing but last year's closing balance. If last year audit only was not done, how can I ensure that, or how can I tell you that last year's closing balance is pakka correct? I can't tell you that. So This year it is the first time he's getting his books of accounts audited. Now in the current financial year or in the current financial statements, I will be including two columns. One is current financial year amount, one is previous financial year amount for comparison purposes. But when I put this in other matter paragraph, I will tell that last year's amount was were unaudited. Last year's amounts were unaudited. This I have to tell. Where will I tell? In other matter paragraph. So basically EOM and OM is an additional communicative para. Clear? So it deals with additional communication to draw users' attention for their own understanding, not for my understanding. I understand. You should understand. Why am I highlighting? Because it is for me or because it is for you? It is for you. So what is the objective? Objective is nothing but to draw users' attention when in my judgment it is necessary. Again, it's an optional para, it is not a mandatory para. A matter although appropriately presented or disclosed in the FS, it is so much important for the fundamental, it is important to understand the financial statement. It is fundamental to users' understanding. Clear? That is the reason why, although it is already given in the FS, I am including it in the EOM para or any other matter that is relevant for users' understanding. Any matter means what? Anything apart from financial statements. Anything. Last year somebody else did the audit. This year I am doing the audit. It is nowhere close to financial statements, but I want people to know. Where will I tell them? Under other matter para. Clear? So other matter para and EOM para is very simple. These two para are like additional communication alone. Clear? Okay. Now EOM, which matter I will put here? Like I told you, whenever any matter you are putting in SA 706, you have to ask one question: where are you from? If you are from FS, go and sit in EOM. If you are from outside FS, go and sit in OM. It's like VVIP seats and general seats in concerts. Clear? If you are from FS, you go and sit in EOM. If you are not from FS, you go and sit in OM. It refers to a matter already presented or disclosed in the FS, but it is the auditor who is telling it is very important for users understanding. Therefore, I'll put in EOM para. Now, if you see here, OM para refers to a matter other than those presented or disclosed in the FS. In my judgment, it is relevant for users understanding. But if you are putting something in OM, you should ensure that it is not prohibited by law. Any prohibited information you can't put in OM para, and it should not be a key audit matter. Why? A key audit matter has a separate paragraph in the report. Since they have a separate paragraph in the report, I need not bother about it. Similarly here, EOM conditions. It should not be a key audit matter, number one. Number two, it should not be a modification, because whenever you are modifying the opinion, you have a separate section for modified opinion, and basis for modification, you should not disclose the modified opinion under EOM para. Okay. Separate para will be there. Then you should give a separate heading called emphasis of matter paragraph. So separate section will be there. Include the paragraph within a separate section called EOM. Give a clear reference to the matter being emphasized. We draw your attention to note number 3, note number 4, note number 6. So clearly you give an example of that, where you are in the report only you should say, we draw your attention, sir. Give us a little more example, sir. Coming your way. Let me give you an example. Now you see this. Emphasis of matters paragraph. We draw the attention to the matters described in Annexure B of our report regarding matters referred in so and so which requires users' attention. See, other matter also they have told, we draw the attention towards Annexure C for so and so. For which one? Matter other than disclosed in the financial statement. So like that, proper clarification you are supposed to give. Clear? Okay. Now, next. So if there is any modification, don't put in EOM. If it is a KM matter, don't put in EOM. Why? Logic is separate paragraph they have. Indicate that your opinion is not modified in respect of the matters emphasized, meaning what? It is just for understanding. It is just for understanding, therefore I have nothing to do with opinion modification. If it is a modified opinion, separate para, not here. Examples important. With respect to future outcome of litigation, contingency, already disclosed in the FS, but you want people to focus on that, put it in EOM para. Subsequent events occurring after balance sheet date. Clear? Any event that has occurred after balance sheet date, it will be either adjusted in the FS or disclosed. That means it is already presented or disclosed in the FS. You want people to focus more. Let's say, for example, some debtor insolvency happened, fire accident occurred. You want people to focus on that, put it in EOM para. Early application of new accounting standards. There is no mandatory rule that you have to apply accounting standards when India has got implemented. They had some phase. Now, it is not mandatory for you, but you still want to do it. Voluntarily you are doing it. No problem, you can still do it. But you have to put it in EOM para. Major catastrophe, that is disaster or calamity that has had, continues to have a significant effect on the position. You can still put it in EOM para. Absolutely no issues with respect to that. Then, should it affect auditor's opinion? No, it is not a substitute for three things. Clear? It is definitely not a substitute for three things. Number one, a modified opinion. Why? Separate para. Number two, disclosures that management is supposed to make. Very good. See, so there are certain disclosures which management is supposed to make. For example, changes in accounting policy, management should disclose. Going concern problem is there, management should disclose. Clear? Change in accounting policy, I already told you. Selection of accounting policy, management should disclose. All these things they should disclose. No. Now, if I put in EOM para, that does not mean they should not disclose. They should anyway disclose it. They should anyway disclose it. Why, sir? Why like this? Reason being is, your duty I can't do it. My duty you can't do. Because EOM and OM is an optional para for me, but your duty of disclosure is very, very important. Okay. Then going concern. Going concern, if you don't disclose properly, then obviously you will become liable. So in this case, there are three things where it is not a substitute. Number one, going concern issue. Number two, modified opinion. Number three, management's duty of disclosure of information. In these scenarios, you cannot compromise. You can't put it in EOM para and say everything is fine. Clear? Other matter, same separate section you give. Whether you are giving EOM or whether you are giving OM, you should always communicate with those charged with governance. And who is those charged with governance? The one who is there in the top level of the organization, who frames policies and procedures and ensures the strategic direction of the entity. Clear? Right? Now that is your SA 706. This we are not going to do here because we have already done in section number 143 only. Clear? Everything is covered. 143 1 is covered. Clear? Duties, then 2 is covered, 3 is covered. Same logic. Same to same ditto. Okay. Then 143 12. We have covered more than this. Alright. This is your first part of this reporting unit, which calls about SA 700, 705, 706. Clear? The next topic we'll be talking about is nothing but Companies Auditors Report Order 2020, which is called as CARO 2020. With respect to CARO 2020, what are the things we are going to see? We are going to see the applicability and non-applicability, and then we are going to talk about 21 clauses with a real-time audit report quickly. Okay. Now, applicability is very easy. It is applicable for every company, including a foreign company. So, Indian company, foreign company, we don't discriminate. Every company has to follow CARO except for certain companies. So, exception list you have to remember. That is non-applicability is very important to remember. Number 1, banking company. Number 2, insurance company. Number 3, section 8 company. Number 4, OPC. Number 5, small company. Number 6 is very important, a private company which has 4 features. Clear? So basically 6 companies are there. First one is what? Banking, insurance, then section 8 company is there, OPC is there, small company is there, and private company is there. So you can remember it as BISOS PIP. Okay, BISOS P, right? Okay, sir. Now, private company has 4 features. Which is that 4 feature? It should not be a subsidiary or a holding of a public company. It should not be a holding or subsidiary of a public company. Their POC and reserves and surplus should be less than or equal to 1 crore as on the balance sheet date. And borrowing should be less than or equal to 1 crore from bank or FI at any point of time during the financial year. At any point is very important. That means even on a single day, if it is going beyond 1 crore and then coming back to 1 crore, it is still applicable. 1 rupee extra you take, tomorrow you pay that 1 rupee. Again, it will come back to 1 crore only. That does not matter. It crossed, no. At any point of time, if it crosses, Karo will be applicable. And having revenue including discontinuing operations. Discontinuing operations means what? Now you are running many operations, many businesses, but this year you chose to stop one of the businesses, but still you have earned revenue from that. Even that revenue will be counted. So if it is less than or equal to 10 crore during the financial year, then only Karo will be not applicable for you. That means all 4 conditions. First one, you should not have subsidiary or holding. Number 2, POC and reserves and surplus should be less than or equal to 1 CR when balance sheet date. Okay. Number 3, borrowing should be less than or equal to 1 CR from where? Bank or financial institution. That means from individual and body corporate you can take more than 1 CR also, absolutely no issues. But from banks and FI it should be less than or equal to 1 CR when at any point of time. And fourth one, revenue should be less than or equal to 10 crore. Now when we say revenue, it does not include only the turnover, it includes turnover plus other income, plus all other income. Okay, that is with respect to your non-applicability. So BISOS P, 6 companies are there: banking, insurance, Section 8 company, OPC, small company, private company. Now private company has 4 features. Number 1, should not be a subsidiary of a public company, should not be a holding of a public company. Number 2, POC and reserves and surplus should be less than or equal to 1 CR. Number 3, borrowings from banks and FI should be less than or equal to 1 CR at any point of time. POC, balance sheet date. Last one, revenue including discontinuing operations should be less than or equal to 10 crore at any point of time or during the financial year. That means from April to March. Okay. Now clause number 21 is not applicable, is applicable only on CFS reporting, is not applicable on SFS. Clear? Order shall not apply to the report on consolidated financial statements except clause number 21. So when you are giving report on CFS, audit report on CFS, when you are giving only 21st clause you have to include. 20 clauses should not be, totally 21 clauses are there. Clear? 20 clauses is applicable for report on SFS. 21st clause is only applicable on report on CFS. This clarity should be there. Clear? So para 3 has 21 clauses. Out of the 20 clauses is for SFS, 21st clause is for CFS. Understood? Clear? So let's move on to the first clause, that is property, plant and equipment, PPE. With respect to property, plant and equipment, what we should check, sir? First, with respect to records, what we should check? Whether have they maintained proper records or not, which includes quantitative details as well as situation. Situation means what? It's not the location. Situation means the status of the asset. Is it idle? Is it scrap? Is it in active use, etc. Clear? So records is the first thing. Second one, for PP have you maintained, and as well as for intangibles. So basically records for PP, records for intangibles. Both should have quantitative details as well as situation. Then we should ask, see here in Karo we are just reporting. We are asking questions and we are reporting. That's it. Clear? Whether have you physically verified? We should ask management. Did you physically verify the asset at reasonable intervals? Now what is reasonable intervals? At least once in 2 years. Okay, at least once in 2 years. Did you find any discrepancy? Discrepancy means any weakness, any problems, any issues have you identified? If yes, did you deal with those discrepancies in the books of accounts properly? Imagine one asset is scrap, but in the books it is mentioned as active use. Have you changed in the books? So any material discrepancy have you found? Imagine you have purchased an asset but not entered in the register. Only on physical verification you got to know. Did you go and rectify in the books? Next is with respect to immovable property. What records for them? For them it is title deeds, whether the title deeds for immovable property, whatever you are holding, it should be in the name of the company only. If not, then I need to give details. For example, description of the property in the same format you have to give. You can't change the format. Description of the property, gross carrying value, what is the book value, clear, in whose name it is held, who is that guy, is he a promoter, is he a director, is he an employee, clear, period held indicate the range from where to where, and reason for not being held in the name of the company. Why are you not holding in the name of the company? For example, let me show you a report. I told you I'll show you an actual report. Let me show you an actual report. Here, description of the property, gross carrying value held in the name of, whether is a promoter, period held, reasons for not being held. So like this disclosure you have to give, freehold land, so and so, so and so. See, this is how you will be reporting it. Clear? Okay. Revaluation. Have you done any revaluation of your property, plant and equipment as well as for the intangibles? If yes, specify the amount of change if the change is 10% or more. So first of all, you have to mention two things. Have you done revaluation? If yes, you have to mention you have done revaluation. Now, should I mention the amount of revaluation, sir? That depends on one more criteria. You will be mentioning the amount of revaluation or amount of revalued amount. That change amount you will be mentioning only if the change is 10% or more. If it is less than 10%, no, you have to mention the fact that revaluation was been done, but you need not mention the amount. To mention the amount, to report the amount, the criteria is it should be 10% or more of net carrying value. Net amount means what? Gross minus depreciation, whatever net comes, no, that into 10% you do. If the revalued amount is more than that, example, sir, example. Let's say 1 lakh is your gross carrying value, depreciation is 10,000, net carrying value will be 90,000. Imagine now this particular asset value got revalued to, let's say, 1 lakh 5. Now what is the revaluation amount? 15,000. Is 15,000 more than or equal to 10%? What is 10% of net carrying value? 9,000. 10% net carrying value is what? 9,000. So is 15,000 more than 9,000? Yes. Then mention this 15,000 in the report. Imagine it was not 15,000, it was just 8,000. From 90 it went to 98,000 and not 105. Now the amount of change is 8,000. What is 10% of net carrying value? 9,000. Is 8,000 more than 9,000? No. Need not specify, but you have to specify the fact that revaluation was done. Amount you need not mention. Amount if you want to mention, then it should be 10% or more. Okay. Then, in case of any Benami property cases going on against the company, then we'll have to disclose the details of such case. Any proceedings have been initiated or are pending against the company for holding any Benami property, then whether the company has appropriately disclosed the details in the financial statements. Benami property means what? Someone else's property is, my property is held in someone else's name, or someone else's property I am holding. In both cases, Benami property case can be there. So in case of a case is booked on the company should disclose the details in the financial statements. Clear? This is your clause number 1. In clause number 1, 5 things are there: records, physical verification, clear, and immovable property, revaluation, and Benami property. Right? These are the 5 subclauses under clause number 1 which we are supposed to report. Understood? Clear? Yes. Okay. Next, clause number 2 talks about inventory. Okay, now in inventory what we have to check, only two things we have to check. First is physical verification. Second one is working capital limits. We have to ask the management whether they have conducted any physical verification of inventory at reasonable intervals. Now what is reasonable intervals? At least once in a year. At least once in a year. Okay, that's one. By whom? By the management. Obviously they have to conduct the physical verification, and in our opinion we should tell whether the coverage and the procedure is appropriate, whether they have covered all the inventory items there, and with the procedure whatever they have put, is it appropriate or it is inappropriate. If there is any discrepancies of 10% or more in the aggregate for each class of inventory, what do you mean by each class of inventory? We'll have raw materials, we have work in progress, we have finished goods, we have stock in trade. Clear? So for each class of inventory we have to check, is there any discrepancy of 10% or more. If there is a discrepancy of 10% or more, did you deal with it properly in the books of accounts? Next we have to talk about is working capital limits. Has the company received any working capital limit called loan, or has the company taken any working capital loan for more than 5 crores, not equal to, more than 5 crores, it should exceed 5 crores from banks, financial institutions on the basis of security of current assets. So by giving current assets as a security, if they have taken any working capital loan, and if that particular loan is more than 5 CR, then we have to see whether they have given quarterly returns or statement to the bank, and it should be an updated one. Clear? As per banking regulations, if you are a large borrower, your stock statements can be maximum 3 months old. Other than that, every month you are supposed to give new updated statement. Okay. Then loans, investment, guarantee and security. So basically 4 things are there: loans, investment, guarantee and security. So in case if you have made any investments, you have given any guarantee or security, or you have given any loans or advances in the nature of loans, it could be secured, it could be unsecured. To whom? To companies, firms, LLP or any other party. Basically, if you have given loan, if you have given guarantee, if you have made investment, if you have given security to anyone, it will come under this particular clause. First one will be, you have to report 2 things: the aggregate amount, what is the total amount during the year you have given, and what is the balance outstanding as at balance sheet date. That means as on 31st March, what is the balance, and in the entire year how much you have given. To whom? To subsidiaries, joint ventures and associates, to parties other than subsidiaries, joint ventures and associates. So this is our people, this is outsiders. So we need, whether it is for our people or whether it is for outsiders, we have to give 2 things. Number 1, aggregate in the during the year how much you have given in total. Number 2, balance as on balance sheet date, what is the outstanding. Clear? Understood? Next, whether the investments made, guarantees provided, security given, the terms and conditions should not be prejudicial to the company's interest. They never say that don't give loans or don't give any guarantee. Give, but it should be beneficial to the company. It should not be damaging to the company. It should not be negative to the company. In case if you have given loans and advances in the nature of loans, the schedule of repayment must be given, and whether the repayments or receipts are regular. So whenever whoever you are giving loan to someone, to that someone have you given repayment schedule. Clear? You have to give a repayment schedule as to yearly how much you are going to receive, and whether the repayments are regular or not, you have to ask. Okay. If the amount is overdue, state the total amount which is overdue for more than 90 days. Less than 90 days, you need not report. More than 90 days overdue, if it is there, you have to report. And ask whether more than 90 days is almost 3 months. So if it is outstanding for more than 90 days, have you taken reasonable steps for recovery of principal and interest, is what you are supposed to ask the management. Clear? Understood? Yes. Next one. Whether any loans or advances, in the nature of loan granted which has fallen due during the year, meaning imagine now we are talking about financial year 24-25. Now during the year, is there any loan which has fallen due, meaning somebody has to pay you back. Now those loan, technically you should get your loan back. Have you renewed it? Have you extended it? Or have you given any fresh loan to settle the overdues of existing loan? Imagine I owe you 1 lakh this year. Now I don't have money. Now, have you renewed my loan tenure? Have you extended my loan tenure, or have you granted a fresh 1 lakh to settle the old 1 lakh? If you have done any such activities, I'll have to report. What I have to report? Specify the aggregate amount of such renewed, extended, or fresh loans, and the percentage of the aggregate to the total loans or advances, meaning in the entire year how many what is the amount that you have given and what is the percentage of total loans, so that users will get a clear cut understanding of what is the percentage of the total loans you have extended and what is the amount of it. Okay, if you have granted any loans or advances in the nature of loans, either repayable on demand or without specifying any terms, see these things and all, you tell me, will you give loans which does not have any terms and conditions to a stranger? No, you will give it only to the known people. So have you given any such loan which is repayable on demand? Repayable on demand means what? No terms at all. Whenever I ask, you give. Clear? Or without specifying any terms, obviously to whom? Promoters or related parties. If you have given such loans, then also I am supposed to report on that. Okay. Then compliance of section 185 and 186, this is nothing but continuation of previous point only, right? 185 and 186 is nothing but 186 is investment by company and 185 is loan to directors. Previously we had discussed only with respect to promoters. This is with respect to directors and investment made by the company. So in such cases is we have to see whether have you complied with or not. Understood? Clear? In respect of loans, investments, guarantees, security, whether provision of 185 and 186 have been complied with, if not, provide the details. Alright. Yes, right. This is your clause number 4. Next clause is with respect to clause number 5, deposits. In company law, chapter number 5, which talks about deposits, there are certain rules and regulations. Before you accept deposit, there are certain rules and regulations you have to follow, certain procedure you are supposed to follow. So here we are just asking the management, before you accepted the deposits, it could be from members, it could be from public. Not all companies can accept a deposit from public, only eligible companies are allowed. Now if you are accepting deposits either from members or public, have you followed the procedures properly or not is what I am supposed to ask. So in respect of deposits accepted by the company, have you followed directives issued by RBI, section 73 to 76 provisions and any other relevant provisions of the act and the rules have been complied with? If not, the nature of such contravention should be stated. If any court, any company law board, any tribunal has passed the order, have you complied with such order also or not? That's point number B. Okay. Next is clause number 6, maintenance of cost records. Now as per section 148, like we said, regulated sectors and non-regulated sectors, you are supposed to maintain cost records if your overall turnover exceeds 35 CR. So have you maintained such records or not? Next is statutory dues. Statutory dues means what? Dues payable under the respective act. For example, Income Tax Act, GST Act, Service Tax, Old Excise Act, Customs Duty. Clear? All these will come under different statutory dues. There are two types of statutory dues here we'll have to report on. One is called the disputed ones and one is called the undisputed ones. The undisputed ones has to be, undisputed means what? Both of them agree on a particular amount. Clear? Now you are also not fighting that amount. Department also is not fighting that amount. So both of you agree on a specific amount which is valid and those are called as undisputed. Now disputed means, now imagine you are telling 1 lakh is income tax and department is telling no, 1.5 lakh is income tax. So you are saying no, only 1 lakh. Now they are saying 1.5, you are saying 1, now there is a dispute. Now the dispute is not to the entire 1.5 lakhs. The dispute is for extra 50,000 alone. That means for 1 lakh, both of you are not having any disputes with respect to that. So here I have to report that with respect to undisputed statutory dues, have you paid it regularly or not? With respect to disputed statutory dues, have you gone to an appeal? If yes, I need to report where have you gone for an appeal and what is the amount. So basically in statutory dues we have two things. One is called undisputed and one is called disputed. Undisputed should be deposited regularly. Disputed should be, obviously now reporting what I should do with respect to dispute. The forum, that is tribunal, court, where it is, or ITAT, DRT. Where is it pending? And amount. And amount. Clear. So these are the two things I'm supposed to report. Is a company regular in depositing the undisputed statutory dues? And if not, the extent of the arrears of outstanding dues as on the last day of financial year for a period of more than 6 months. Meaning any undisputed dues, if it is outstanding for more than 6 months as on 31st March, that I'm supposed to report. Now what do you mean by that, sir? Imagine August month due. You are supposed to pay on August, let's say for example 10th. You did not pay. It is overdue now. Now overdue. Now we have to check whether as on 31st March this due is paid or not. Let's say 10,000 rupees. Is this due paid or not? Now as on 31st March, if it is not paid, see, August to September, September to October, October to November, November to December, December to Jan, Jan to Feb, Feb to March. It's more than 6 months. Therefore, I'm supposed to report. So any undisputed dues, if it is outstanding for more than 6 months as on the balance sheet date, then I'm supposed to report it. Otherwise, I don't have to report the amount. I just have to say the fact that these things are not yet paid. Clear? If it is paid, I'll have to tell it is regular. If it is not paid, then I'll have to tell it is not paid. Clear? Then, where statutory dues referred in the above clause has not been deposited on account of any dispute, the amount involved in the forum where dispute is pending shall be mentioned. Forum means court or place where you are fighting the case. Okay. Mere representation to the department shall not be treated as dispute. Meaning what? See, Chumma, now somebody will give me a document, department asks, your client's invoice I want. Now client will give me the invoice, I will go to the department. Now whatever I am doing is nothing but a representation. I am not, there's no case fought here. There's no fighting of any case. So here I am just giving the document. So a mere representation is not going to be called as a dispute. Understood? Clear? Next is unrecorded income. Now unrecorded income means what? Any transaction that is not recorded in the books of accounts have been surrendered or disclosed as income during the year. See, your black money, whenever you had made. Now income tax, when they say, sir, we are going to come up with a scheme, you please surrender your income, we will not ask any question. Now imagine you go and surrender your income there. Now in the current year you are surrendering your income. In the current year when you are surrendering your income, let's say 10 years ago that income you had earned. This year you are going to surrender it. Don't you think if you are surrendering it this year, this will pay tax? Of course, yes. Now, whatever income this year you have surrendered, that should be recorded in the current year books of account as a prior period item. Clear? So, have you recorded that in the books of account or not is what I am supposed to ask the management. You have declared the income tax, I understand, but have you recorded in the current year books of accounts? Clear? So, is it been properly recorded in the books of accounts during the year is what I am supposed to check. Then comes repayment of loan. Clear? Whether the company has defaulted in repayment of loans or other borrowings in the payment of interest to any lender. If yes, the period and the amount of default should be reported to anyone, any lender, company, individual, banks, FI, anyone. Okay. In the similar format only you are supposed to give. Have you been declared as a willful defaulter? Willful defaulter means you have money, you owe 1 crore to bank and you're telling I am not going to pay, do whatever you want. Now this is very bad. Clear? So what bank will do? Bank will declare you as a willful defaulter. So I need to ask management, have you been declared as willful defaulter or not? The term loans were applied for the purpose for which they were obtained. Meaning what? If you have taken any term loan, did you take that term loan and apply where you told you will apply? Meaning what? For the purpose. Did you apply for the respective purpose only or not? Clear? Whether funds raised on short-term basis have been utilized for long-term purposes? If yes, nature and amount. Generally, short-term loans are very expensive. So, if you have taken short-term loan and applied for long-term, the funds will be blocked. Therefore, the company will pay more interest, which is not required at all. So, in such cases, I need to report. Next. Have you taken any funds from public IPO, FPO, etc. Why? No, sorry, not IPO, FPO. We're talking about repayment of loans. Have you borrowed any money from the bank or FI, not for your obligation but for your subsidiaries or joint ventures obligation? So have you taken any funds from any entity or person to meet the obligations of subsidiaries, associates and joint ventures? If yes, details thereof with the nature of such transaction and the amount in each case must be reported. Clear? Whether the company has raised loans during the year on the pledge of security, meaning have you given your investments, your subsidiaries shares, right? You are holding subsidiary shares. You are going and giving it as a security and then taking loan. It's a very bad idea. It's a negative thing in the company. But in case if you have done something like that, I need to report. Clear? Give details and also report the company has defaulted. Okay. Next, IPO, FPO or preferential allotment. If you have taken money through IPO and FPO, first of all, have you applied for the purposes or have you diverted the money? In case of preferential allotment, whatever funds you have raised for the purposes should be used for that purpose only. If not, I am supposed to give the details. Okay. Fraud reporting. If the fraud is done by the company or fraud is done on the company, noticed or reported. If yes, nature and the amount involved should be indicated. Then section 143, have you given form number ADT4? Now I am supposed to report about myself here. Have I submitted ADT4 to CG or not? And have you considered any whistleblower complaints or not? Clear? Whistleblower complaints is nothing but where some people, let's say for example, whistleblower is where something wrong is happening in the company, he will come and tell the management. Now, if he has given a complaint, management should consider it. Okay, management did not consider it. Did auditor consider those complaints or not is what I am supposed to report. Clear? So here whether the auditor has considered whistleblower complaints received during the year by the company. So somebody would have given complaint to the company. Have you at least gone and checked that complaint or not is what I am supposed to report. Understood? Clear? Okay. Next is Nidhi companies. Now Nidhi company is like in a smaller segment where people, the Nidhi companies develop the habit of savings and they will give loans to their members alone. Clear? Now it's like a very small thing which acts like a bank but not a bank. Okay, so for them they have to have certain compliances. What compliances they should have? First of all, they should have net owned funds to deposit ratio of 1:20, meaning for 1 rupee of your own funds you can take maximum of 20 rupees as deposit. That's the ratio you have to maintain. Number one. Number two, whether there has been any default in payment of interest on deposits or repayment for any period. If yes, give the details, meaning have you done any default in payment of interest? Clear? Then 10% unencumbered term deposit must be maintained. Unencumbered means what? Unencumbered means, let's say you have 100 rupee. 10 rupee you have to keep in a deposit, fixed deposit, where now that 10 rupee deposit I cannot give it as a security to anyone or even to the bank. Generally there is a concept where keep giving your deposit, you can take loan. Unencumbered means you should not be able to give this 10% of deposit as security to anything and anyone. That's called unencumbered. Okay, you cannot give this amount as security. Clear? As security. Next is related party transactions. You're supposed to comply with two sections. One is called 177 and 188. 177 is with respect to audit committee. Clear? Go and check the audit committee topic which we have taken there. Approving transactions with RP also, related party also is there. Section 180 talks about RPT only in the Companies Act. Have you disclosed the details in the financial statements or not? In notes to accounts. In notes to accounts, you're supposed to disclose that. Okay. Next is internal audit system. Have you had any internal audit system in your organization commensurate with the size of the organization. Meaning, if the company is bigger, then you require a bigger internal audit system. If the company is smaller, then may not be required to have internal audit also, because there is section number 138 which says which companies must have internal audit done. Clear? So according to that, do you have internal audit or not is what I'm supposed to check. And whether I need to report about myself whether reports of IA were considered by the statutory auditor. Did I consider internal auditor's report or not? Then comes non-cash transaction. If you have done any non-cash transaction, you have to follow section number 192. Now in non-cash transaction, there is nothing great. Non-cash transaction means transaction where consideration is not cash. Now imagine I give you shares. You need not give me cash. You can give me furniture. You can give me any other intellectual property. You can give me any asset. Clear? Generally, these non-cash transactions happens with the directors. Okay. Then registration with RBI. This is for HFC, NBFCs. Clear? Financing companies basically, they should have registration with RBI. Company is required to be registered under section 45IA. If yes, whether the registration has been obtained or not. Then, are you conducting any non-banking financial or housing financial activities without a valid certificate of registration? Is doing activities wrong? No, but you doing it without the registration certificate is very wrong. Clear? If you are a core investment company, are you continuing to fulfill the criteria of CIC? And if you are an exempted or unregistered CIC, are you continuing to fulfill such criteria? Meaning, see, there is something called as core investment company. Generally, the core investment companies, one of the features will be 90% of their net assets will be in investment forms. Now, if you are giving such things, imagine you are a company where 90% of your net assets is in investment form. Now, such companies, first of all, it's one of the conditions I told. Like there are numerous conditions will be there. I need to check if my client is a core investment company. Are you fulfilling the criteria of core investment company given by RBI or not? If RBI is exempted you on getting registration based on some features, based on some criteria, are you complying with that criteria also or not is what I'm supposed to see. Whether the group has more than one CIC. If yes, indicate the number of CICs which are a part of the group. Now, Reliance Group of Industries, Tata Group of Industries, Adani Group of Industries, if you have such group, in that group, how many CICs are there? Clear? So, totally 4 things under registration with RBI. One is with respect to section 45 IA registration. Second thing, you cannot do business without valid COR. Third and fourth thing is about CIC, Core Investment Company. Clear? Yes. Next clause is cash loss. Clause number 17 talks about cash loss. Cash loss means, see, the concept of cash loss, whenever a business suffers loss, technically it is not a loss. Because in business, there are a lot of non-cash expenses also which is debited to profit and loss account. So we have to remove all these non-cash elements and then we have to actually see whether we have lost money or not. For example, depreciation is not it's a non-cash expense. Provision, we never really keep things aside. Yes. So there are many expenses there. There are many elements in P&L which are non-cash nature. So what we should do? We should take the profit or loss, net profit or net loss of the P&L, and then we need to reverse all these non-cash effect, and then we need to see what is the ultimate effect. If the ultimate effect is loss, then yes, the business is under loss. So technically we need to see whether the company is suffering from cash loss or not this year as well as the last year. So whether the company has incurred cash losses in the current financial year and in the immediately preceding financial year. If yes, we need to state the amount of cash losses. So that means 2 years cash loss will be mentioning in this particular clause. Next is resignation of statutory auditors. Whether there has been any resignation of the statutory auditors during the year. If yes, whether the incoming auditor has taken into consideration the issues, objections or concerns raised by the outgoing auditor. So here I need to see one thing. If the old auditor has left and the new CA is coming in, the old CA, whatever issues and objections he had, did the new CA consider those or not? Because it could be some genuine reason. Clear? Next is clause number 19, which talks about financial asset and financial liabilities. Basically, this clause talks about, are you solvent enough to repay your liabilities? Do you have the capability? Are you sure about the realization from your assets? And are you sure that in the next 1 year, whatever liabilities comes up, will you be able to repay? That's what this clause is all about. On the basis of financial ratios, aging and expected dates of realization of financial asset and payment of liabilities, any other information accompanying the financial statements, the auditor's knowledge of the BOD and management plans, are you of the opinion that there is no material uncertainty exists as on the date of audit report that the company is capable of meeting its liabilities existing as the date of balance sheet? Meaning what, sir? Didn't understand. Very simple logic. See, now this is March. Let's say June you give your audit report. 31st March, 30th June. So as on 30th June, you should report whether the company is able to repay its liabilities. It's what? Liabilities. Which liabilities? Liabilities existing as on balance sheet date. When are you able to repay this? Whenever it falls due in the next 12 months or in the next 12. Now what do you mean by next 12 months here? Next 12 months means this 12 months should be counted again from balance sheet date. So up to, let's say for example here 31/3/25, 31/3 up to 31/3/2026, whatever liabilities come and or whatever liabilities is due in that particular year, whenever whoever comes and asks, I'll be able to repay. Whether the company has such capability or not is what I'm supposed to report here, and that is what is mentioned here. You see here. On what basis you're telling this? Financial ratios basis, aging basis, expected dates of realization of the asset basis, other information basis, my knowledge of the board and management plan. With respect to all these bases, I am telling the users that, or management is telling me that company will be able to pay the next 12 months ka liability whenever it falls due. Okay, see here, falls due within a period of 1 year from the balance sheet date. So within the next 1 year, whichever liability comes, I will be able to repay. That much asset I have. Okay. Next is CSR compliance. Now as per section 135 of Companies Act, minimum CSR spending should be 2% of your net profit. Now NPBT, net profit before tax. Now if you don't spend 2%, whatever is the shortfall, let's say for example 2% comes to 2 crores. You have spent only 1.5 crore. Now the rest 50 lakhs, you can't keep it with you. You have to transfer to a fund. Now which fund we have to transfer to? That's the question. Now we need to first see the spending is with respect to ongoing project or not. Imagine you are building a school, you are building a hospital. It will not take less than 1 year. It will take more than 1 year. That means let's say from 2025 you are constructing. That entire year you won't be able to spend the entire CSR amount because construction is happening. So if it is an ongoing project, then you have to maintain it in a separate account. If it is not an ongoing project, then you have to again give it to the government under schedule number 7, or maintain a fund under schedule number 7, or donate it to any fund under schedule number 7. So basically here what we have to see is whether you have spent 2% or not. If you have not spent, have you transferred the amount to the respective fund or not? Here, you just have to remember one thing. If it is an ongoing project, you have to transfer it to unspent CSR account. If it's a non-ongoing project, you have to transfer it to a fund under schedule number 7. Okay, that is your clause number 20. In respect of other than ongoing project, unspent amount should be transferred within a period of 6 months. Other than ongoing project, okay, to schedule 7, fund specified in schedule 7. With respect to ongoing project, transfer to a special account. This special account is what we call as unspent CSR account. Unspent CSR account. Clear? Next, last clause, clause number 21, negative remarks in caro of other companies. Now imagine there is one company. There is one company, Arjun Limited. Now Arjun Limited has multiple subsidiaries. Let's say subsidiary 1, subsidiary 2, subsidiary 3, 4 and subsidiary 5. Now Arjun Limited will prepare standalone financial statement as well as CFS. Therefore, audit report will be for both. Now in SFS audit report 20 clauses will be mentioned. In SFS CFS ka only 21st clause will be mentioned, not all 21, only 21st. Now what will be there in the 21st clause? Imagine in S1 clause number 3 has some negative remarks. In S2 clause number 5, here clause number 8, here clause number 15, here clause number 17. Now these are the clauses where there is negative remarks. That is negative remarks. Now in CFS, AR of CFS, in the 21st clause, you have to give a table, okay, mentioning which subsidiary and in their caro, respective subsidiaries caro, which clause has negative remark. That list you have to give in this particular clause, so that users can go to the subsidiary report, open the report and check what is the negative remarks. Otherwise, we will never know what is happening with the subsidiary. So, users of Arjun Limited wants to know in Arjun Limited subsidiary which all clauses has negative remarks. So, all of that is given in one page called clause number 21 of audit report for consolidated financial statements. Clear? This is how, this is how we will be reporting under clause number 21. For example, see, this is your clause number 21 of Adani. Now, if you see, these are the observations and comments given by the respective CAs of their subsidiary, associate, joint ventures, etc. Now, this is how they'll give. Now, this is a clause number and specific para number they have given, so that we can go to their particular clause and see what negative comment they have given. They will not tell you what negative comment they have given here, because in the respective report it will be there. You have to go there and check it out. Understood? Clear? Yes. You can check one thing. Imagine here, I'll tell you. You can go to this NDTV, okay, 47th NDTV, New Delhi Television Limited. Go there, open their report. You will find in clause number 17 cash loss ka negative comment. The company has cash loss in the last year also, in the current year also. Clear? That you can check it out. Okay. That is your clause number 21. And in para 4, if you have any answers for which it is an unfavorable or qualified answer, answer to any of the questions above is unfavorable or qualified, state the basis why have you given unfavorable or qualified answer. Where if you are not able to express any opinion, indicate the fact that why are you not able to give any opinion. So basically para 4 is a basis. Para 3 is a requirement where all yes, no, yes, no, yes, no you will be writing. In para 4, you will be explaining why are you giving that negative comment, or why are you having some observations with respect to 20 clauses. Clear? That will be given in para number 4. Okay. This is your Caro 2020, and with this your reporting unit comes to an end. Right, now let's solve two question papers. One is your June 2025 and one is the previous one, that is December 2024. Okay, first we'll solve the MCQs of both attempts and then we'll go to the descriptive part of it. Okay, So this is your June 2025 paper, corporate accounting and auditing. So both will be there. So I'll be solving only with respect to auditing. It starts from here. Use the work of another auditor is guided by which standard, right? Now SA 600 is there, SA 550, 500, 450. 550 talks about RP, related parties. 500 talks about audit evidence, and 450 talks about evaluating misstatements. So these three are not the option. So it is SA 600. Okay. Now there is an answer also which I have kept it right next to it for your reference. This is sixth one A. Okay. Now, permanent audit file does not contain what? Now, there was a table, permanent audit file and current audit file. So, permanent audit file does not contain what? See, record of study and evaluation of ICS is a part of permanent audit file. Significant observation of earlier years is a part of permanent audit file. Analysis of significant ratios and trends also is a part of permanent audit file. Copies of management letters is not a part of permanent audit file. Test checking reduces what? Power, expense, work or liability. Obviously, it doesn't reduce power, it doesn't reduce expense, it doesn't reduce my liability. Obviously, it will reduce my work. More useful for me. Okay. NFRA consists of which of the following committees? Now, there were 3 points there in NFRA committee. Accounting Standards Committee were there, Audit Standards Committee were there, Enforcement Committee also was there. Therefore, all of the above. Cost records are to be maintained as per which form? There in cost records in the material I have given you a list. CRA 1, 2, 3, 4. So it is CRA 1. Okay. Audit report contains what? Details of facts, fraud, expression of opinion, expression of suggestions. We'll never give suggestions in the report. We'll give details of the fact, but not technically this, not even fraud. It is expression of opinion. Which of the following is not an assertion with respect to revenue and expenditure? This comes from your vouching and verification topic. So cutoff will be there, completeness will be there, presentation and disclosure will be there, existence will not be there. Secretarial audit is covered under which section? This is, you have a separate unit called secretarial audit. 204 is the answer. Okay. According to the Central Cooperative Societies Act, dash of the profits of a cooperative society should be transferred to a reserve fund before distribution of dividend or payment of bonus to its members. It's 25%. Now 25% you can reduce it, but the registrar cannot reduce below 10%. Dash refers to the process of conducting the audit of a single organization by more than one auditor. It is joint audit. In that joint audit and branch audit, 2 topics were there. So joint audit is the audit where more than one CA or more than one firm comes and does the audit of one particular client. This is your MCQ of June 2025. Let's talk about December 2024. Right. Now see, repeated question. SA 600 deals in the matter connected with. Now if you see here, using the work of another auditor, very simple. As per SQC1, the working papers must be retained for how many years? Tala for a reason, 7 years. Clear. Documentation is SA 230. Okay, 300 is planning, 250 is considering the laws and regulations, 310 is not there at all. Okay. The cost auditor submits his report along with reservation and observation. Now this is here in June 25 that asks cost records. Here they are talking about cost report. Cost report is CRA 3. Okay. Which of the following is or are the benefits of IFC? Improved controls over FR process, trickling down the accountability, improved investor confidence, or all of the above? Obviously all of the above. Okay. Understood? Yes. Next. The statutory auditor apprehends a possible material misstatement due to inadequate internal check system. The risk associated with this apprehension is known as C. ICS is weak. He is saying there is a misstatement due to inadequate internal check. So if ICS is not detecting, it will be coming under control risk. Clear? This is not there at all for us. Among these three, now this is with respect to the procedures. Detection risk is procedures of auditors. Inherent risk is before we start the audit. So not this, not this, not this. So control risk it is. In relation to advances made by the bank, he needs to review which of the following. Scrutinize the ledger and accounts. Yes, he has to. He has to check overdue account and scheme for recovery. Yes, proper documentation also he has to check. Therefore, all of the above. Which of the following is not a part of temporary audit file? Previously they had asked permanent audit file. Here now they are asking temporary file. Which is not a part of temporary file. Now you tell me, program, minutes, legal organization structure, this is permanent. This is, sorry, I will not answer. Now you have to answer this. Answer. Correspondence with respect to acceptance of annual reappointment. Annual reappointment comes under temporary. Program is every year it will change, therefore temporary. Extract of minutes of board meeting, it is also temporary. Legal and organization structure of the company is the right answer because it doesn't change every year. Which of the following is not a content of report as per Caro? Inventory is there, clause number 2. Acceptance of deposit, clause number 5. Repayment of loan also is there. Repayment of dues or repayment of loan. Recruitment of employees is not a part of Caro. So therefore, here for you the answer will be point number C. Clear? Yes. This is your December 2024 ka MCQ part of it. Now let's move on to the descriptive part of it. Yes, come to June 25 paper. Question number 6, question number 7 and question number 8 is descriptive. Same thing in December 24, 6, 7, 8. Last 3 questions will be descriptive for you. Discuss the concept of tax audit with reference to section 44 AB of Income Tax Act. Now this is specifically with respect to tax audit, a general answer, okay. It can be defined as an examination of records to assess correctness of calculations of taxable profit to ensure compliance with the provisions of income tax and also ensure fulfillment of conditions. Tax audit is required in addition to the financial audit since taxable income largely differs from accounting profit because of various allowances, disallowances, etc. In India, Income Tax Act contains a number of provisions requiring tax audit of an entity. Section 44 AB, very important section you have to write, gives the provisions relating to the class of taxpayers who are required to get their accounts audited from chartered accountant. Then, it aims to ascertain the compliance of various provisions of income tax law, fulfillment of other income tax. Primary objective is to stop tax evasion. See, these type of questions sometimes can be as a bouncer. Okay, so go through the question papers, go through the suggestion answers at least for the last 2 to 3 attempts, at least. Okay. Now, next question is demonstrate the reporting requirements of cost audit as per CRA 3 guided by cost audit rules. Now, this is very easy. A cost auditor needs to report on the following. There's a list of what he is supposed to report, that he has got information and explanation, whether cost records have been maintained properly. Then from the branches which is not visited by him, he has received the returns. Then according to his opinion and information, the said books and records give the information required by the Act. They have adequate internal audit of cost records, all these things. Clear? Unit wise, product wise, etc. We have already dealt with this. Okay. Then, with respect to Caro, 3 topics are there. Acceptance of deposits, clause number 5. Statutory dues, clause number 7. Reporting of fraud, clause number 11. So, directly copy paste of whatever is there. Copy paste. Clear? Now, see, statutory dues, if it is undisputed, it should be regular. Then, if it is not, then the extent of arrears, right? For more than 6 months from the date they became payable. You should also, since they have asked statutory dues, you should also write about disputed also. Clear? If it is not deposited in case of dispute, you must disclose the forum as well as the amount. Then reporting of fraud. Clear? Fraud by the company or fraud on the company, same point. Copy paste. Briefly discuss the constitution and structure of NFRA. Examine the functions and duties of NFRA. NFRA, one separate unit is there. All these things are given there. Constitution, totally 16 people, 1 chairman or chairperson and 15 members. Functions and duties, monitoring and enforcing, overseeing, performing. Yes, see, only such a small answer. You need not explain these 4. Clear? Okay. Next. Prepare a list. Education institution. Very easy. I told you one question you can expect from there. Education institution, trust deed, reading the minutes, tuition fee, admission fee, other fees and receipts, salary and wages, expenditure, caution deposit, assets and liabilities, financial statements. Clear? 10 points. 7 marks. Inspect the rights of a company as per Companies Act 2013. Rights of a company auditor. Section number 143 talks about it. He has right to inspect the books, right to obtain information, right to inspect branch office, right to receive the report, notices, audit report, all these things you write. Good point. Good question this is. Study this. Okay. Now, December 24, 6, 7 and 8. Characteristics of internal check system. See. Division of work, provision, responsibility, same point. Copy paste. You don't have to think too much about it. Okay. Now, with respect to secretarial audit, one more separate unit is there for that. Section number 204 talks about it here. applicability you write, and what they are supposed to do. Give assistance and facilities. Moreover, if a company or any officer or the company in practice contravenes the provision, then write the penalty as well. Clear? State the difference between report and certificate. Here you go. Report, expression of opinion. Certificate, confirmation of correctness. Good question this is. Okay. Basis of audit, based on facts, assumptions and estimation, based on actual figures and facts. When you're certifying, it should be a fact. You can't assume things. Scope is large, scope is limited. Advice, there is a scope of giving constructive advice, there is no scope of giving advice. Guarantee, this is not a guarantee, whereas this is talking about accuracy. Therefore, certificate if you're giving, it is guarantee. Time of issue, only after audit is complete. As and when it is required, certificates can be given. Liability, here since it is an opinion, if it is not correct, you may not be held responsible, whereas here you definitely will be held responsible. Sir, give an example called turnover certificate. Turnover certificate, utilization certificate. So these are all our certificates which we generally give. Okay. Then here, cooperative society, list of important steps to be taken by Mr. A in conducting the audit. Sorry, seventh one, no. Role of NFRA. See, NFRA in the June also they have asked, in December also they have asked. Okay. Secretarial audit, very important. Okay. Now NFRA overseeing, investigating, right, these points. Alright, so NFRA in 2 attempts continuously they have asked. So be careful with respect to that. Alternatively, they have given this also. Recommending the standards, monitoring and enforcing the compliance. Clear? Power 2, investigate. Alright, copy paste. Then with respect to cooperative society, what are the special steps they have to take? Income audit, general points, expenditure audit. Here, carefully was the receipt of cash on account of share capital should be received. Cash received against sales should be vouched with cash memos. All these things we have already covered in cooperative society revision. Please go and check that. I am just telling you what are the questions that they have given and what answers you are supposed to write. Okay. And then other points with respect to overdue debts. Then interest from members. Writing off of bad debt should be after prior authorization. Okay. Then discuss a provision with respect to appointment of first auditor. Now, first auditor for government company and non-government company, both you are supposed to write. Government company, first auditor is done by non-government company and government company. For other than government company, BOD within 30 days. If failed, members within 90 days. Okay. And he shall hold office only till first AG. In case of government company, it's CAG. Clear? CAG within, if CAG doesn't appoint, then board of directors will appoint within the next 30 days. CAG within 60 days. If board also fails, then the members within the next 60 days. Again, he will be holding only till first AGM. Easy. Easy question. That's your 8B. Clear? Yes. I would always recommend please do at least 3 question papers, right? If not, try to, you can increase. I would say this new syllabus came in 2022. Okay. Now after that, 23 2 attempts, 24 2 attempts, 25 1 attempt. 5 question papers are there. Just go through it once. Clear? It will not take much of a time for you to go through all 5 question papers. Clear? Yes. So watch this marathon, watch this revision. As and when you're doing the unit, it will help you immensely. Clear? If any suggestions are there, please put it in the comment box. I will definitely take care of all those things in the next marathon that we are going to do. Right? So study properly. I hope you clear with very good marks and all the very best, guys. Thank you.